of the U.S. economy looks like. So you didn't see, you were talking yesterday, you didn't see a big reaction yesterday, and bonds weren't the safe haven yesterday. Well, as difficult as geopolitical turmoil in the Middle East is, it's not really going to have a major effect on U.S. economic growth. So I think that's the real focus is. So to answer your question, no, I don't see significant scars from that. I think if you look into U.S. ETFs, this month alone, you're seeing greater flows into U.S. ETFs for fixed income than you are for equities. So I think some of the healing has done, and people are remembering that bonds do have a place for portfolio, especially if the risk to the economy is a recession.
Well, one of those other risks that likes to bubble up is what's happening to the deficit. The big, beautiful bill making its way through Washington, D.C., the core of it, despite changes, is intact, is one that does expand the deficit. At some point, Secretary Scott Bessent is probably going to have to come out and talk about larger auction sizes and changes to how they're thinking about issuing that debt. Does that break through at all, or is it all already priced in?
So I think a couple of things. Number one, I think it's primarily priced in. There's an extraordinary amount of noise about the one big beautiful bill. I think the second thing to remember is that Treasury Secretary Bessent is a markets guy. He and the president are very focused on what the bond market is doing. And I think if you look at our fiscal situation, while I wouldn't say that it's pristine, we are certainly far better than an economy like Japan, which has much worse deficits. So I think that the Treasury is going to be very thoughtful about issuance. You see last week, you've got this comment about declining interest in Treasuries. Last week's auctions were actually very strong. And this trend of reduction in interest in Treasuries has been going on for the last 15 years. So I think this is a lot of good news about not a lot of fact.
In fairness, you were talking about how you just have to follow the narrative. It's been a little hard to follow the narrative. Let's be honest. I mean, we've all been trying to do it every single day.
The narrative changes every 5 minutes.
Pretty much.
Which is why I try to keep even-keeled about it and not overreact to things that are going on.
Well, we love your perspective, and let's do it again soon. Thank you so much for being here. Kay Her of J.P. Morgan, talking about how ultimately there's yield. And that's ultimately what we're seeing when it comes to certainly today. And last week, when we had the auctions, there was a bid into bonds, and it seems like some of the fear had been much ado about nothing.
Exactly, and also speaks to Kay's point about corporate credit, why there is such a bid there that the yields are still attractive. And to be fair, the only place that you're starting to see any sort of signs of a pickup in defaults is the junkiest of junk in corporate credit. Elsewhere, it is really strong, and again, that just kind of feeds into risk assets being able to float along, because it's that old thing of credit's the canary in the coal mine. There ain't no canary singing here.
Well, there is a question about how much this is all in yield versus spread. Because when you actually look at the valuations, they are looking pretty rich when it comes to just how much you're getting compensated. But if you are a yield-based investor and you like that, it does seem like that is the reason why people are going into that. We will continue this conversation. Coming up tomorrow, we have a discussion with Julian Emanuel of Evercore ISI. Don't miss that. George Saravelos of Deutsche Bank, who has been calling for the diminishing of the U.S. dollar as a haven currency. Gargi Chowdhury of BlackRock and Claudia Sam of New Century Advisors ahead of that Federal Reserve meeting and rate decision that does begin today. This was Bloomberg Surveillance. Good morning.
Day. Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
We're micro investors. So as micro investors looking to invest capital, whether it's in private equity or in direct lending, what we're looking for are opportunities to deploy capital at attractive risk return. When we wake up in the morning, we don't seek to avoid risk. We seek to price it correctly. And so in an environment like this, for sure, if you're looking at a portfolio company opportunity, when you think of the value creation plan, you're factoring in now the uncertainty, which undoubtedly will impact the extent to which you're willing to pay for that asset. Now, in our existing companies, in our existing portfolio, the vast majority are services companies. And services companies don't have basically the input issues. But I will say that when we look and we roll up all this data for all of our portfolio companies, and it's quite rich, it's just down now below 1 million employees globally around the world. We're 2,300 at Carlyle itself. But in our portfolio companies, we roll up this data every month. For example, the inventory component of PMI was up about 4 points. I know that's not really news that anybody probably would have focused on, but we could see that happening months ago. So immediately when it looked like the new administration was going to come in and there was the possibility of tariffs, you could see purchasing managers immediately mobilizing to start bringing goods in faster because of the uncertainty factor.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
All right, we have 30 minutes until the start of trading with stocks. 2% from their all-time high. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, retail sales data suggests tariffs deterred consumers from spending. We'll talk about that. Plus, President Trump unexpectedly splits from the G7 summit early to deal with the Israel-Iran conflict. And JP Morgan is raising the fee for its Sapphire Reserve credit card to nearly $800 as the credit card wars heat up. Katie, what are you watching?
I'm keeping my eye on energy stocks right now. We're closely monitoring what's going on in the Middle East, and investors are too, assessing those risks of the conflict. Iran's oil output hit a 7-year high last month in another example of the global implications of these attacks. You keep an eye on some of these names, not moving too much, but the color is green, Matt.
Yeah, we got oil back above $70 here in the U.S., crude at 74. Keep an eye also on defense stocks after President Trump said he wants a real end to the nuclear dispute with Iran, not a ceasefire. You can see Halliburton is gaining, Lockheed is up, and Baker Hughes. Like Katie said, not huge gains, but the color here is green. So directionally, we're going the opposite way right now of the benchmarks. Katie?
We also have our eyes on Canada, and here's the post that President Donald Trump sent as he left the G7 summit early. Iran should have signed the deal I told them to sign. Simply stated, Iran cannot have a nuclear weapon. I said it over and over again. Everyone should immediately evacuate Tehran. He then said this aboard Air Force One.
I've been negotiating. I told them to do the deal. They should have done the deal. The cities have been blown to pieces. We've lost a lot of people. They should have done the deal. I told them do the deal. So I don't know. I'm not too much in a mood to negotiate.
Bloomberg Politics correspondent David Gura joins us now. He is at the G7 site in Canada that President Trump has departed. What are the rest of the leaders' reactions to, the President of the United States up and leaving the G7, and also his advisory to the people of Tehran to leave now?
Yeah, so a lot of people here have memories of what happened in 2018 when the president left in a peak. He ripped up the communique and got on the plane and began tweeting about Justin Trudeau, who was then the prime minister. This was not that, and there were some comments, some questions and comments at that family photograph that took place yesterday before the president left. And it seemed like a lot of those world leaders understood or sympathized with President Trump's decision to leave. Certainly Mark Carney, the Prime Minister of Canada, did, acknowledging the fact that there is a lot happening in the world. The president would be more comfortable back in Washington, D.C. So again, the circumstances are different than 2018, but it did send a shock through the summit site. And you bring up that post about evacuating Tehran. I think that had an even larger effect because people saw that right after the president delivered comments with the Prime Minister of the United Kingdom on Iran and wondered, what is this? What's motivating this? What's he talking about? And I think we still have little explanation for what the president posted on Truth Social before he made his way to that family photo and to dinner and then ultimately back to Washington. So the question now facing the president, facing all of us, is sort of what are the next steps here, Matt? And is that more diplomatic engagement? Is he going to send a Vice President Vance to the Middle East? Is he going to send his trusted envoy, Steve Witkoff, to engage in negotiations with the Iranians? Is he trying to get this kind of permanent ceasefire or end to this conflict in place as he's talked about? Or is it a sign that perhaps he's looking at more military options and kind of ratchet that up in a way that he's been opposed to over these last few weeks?
Yes, certainly Trump left a lot of questions behind. And David, I want to talk about what happens now at the G7. You obviously still are in front of a beautiful mountain. You think about one of the main topics of this summit was trade policy. And without President Trump there, what does that conversation look like?
Yeah, he is, of course, the principal on that front, and so many world leaders came here expecting that they would have time with him on the sidelines of the summit to talk about trade policy and tariffs, and that did happen to an extent. We saw the Japanese Prime Minister securing a meeting that he had really been angling for many weeks, and the outcome of that wasn't what he wanted. It's just a continuation of talks. But as I mentioned, the president did stand side by side with Keir Starmer of the United Kingdom, held up this document until the wind blew it out of their hands onto the ground, and they had to pick it up. But effectively, they were codifying this agreement they announced a few weeks ago, this kind of broad strokes trade deal. But just looking back to the run-up to this summit, before the conflict in the Middle East erupted and intensified, it was the expectation that this was going to be the issue that was going to dominate the unofficial agenda here at the G7. This is what President Trump was going to be occupied with. He brought pretty much his entire economic team with him on Air Force One, including the Treasury Secretary and the U.S. Trade Representative. Now these leaders will talk among themselves, I suppose, about the way that the geoeconomy has changed. And there are some leaders who arrived late last night as the president was leaving. We have Narendra Modi of India, who's now here, the Prime Minister of India, and President Vladimir Zelensky of Ukraine is here as well. So there's no matter of other topics for them to discuss, but certainly not having the U.S. here is a big deficit for all these participants.
All right, David, great reporting as always. That is Bloomberg's David Gura joining us from the G7 summit. Let's pivot now to the economic front in the U.S. because retail sales in May saw the largest decline since the start of the year, falling more than expected. Let's break down this data with Bloomberg's Michael McKee. He is our international economics and policy correspondent. So the headline here, Mike, was quite ugly. We're talking about a decline of 0.9%. Where was the weakness really apparent?
And don't forget that the headline was revised down last month by 0.1%, so a total of negative 10%. But that is just the headline, Katie, as you were suggesting. And if you look under the hood, it isn't quite as bad. While we did see a decline in the headline number, we saw a rise in the control group, which takes out the categories like automobiles, gasoline, and building materials, because they're in other parts of GDP, and this is what goes into GDP as far as retail sales. That was up 0.4, the control group. April was revised to a negative 0.1%. It had been negative 2. So overall, a better report on American spending. Biggest moves were in gasoline, autos, and building materials. They dropped a lot during the month, and that was expected, especially with gasoline prices falling and automobiles being pulled forward purchases in January, February, March ahead of the tariffs. We also got some import price data today. Didn't move the needle very much. Import prices were flat. Take out petroleum. They were up just 0.2%. And we're not really going to see a lot of tariff impact in those numbers. So it leaves the economy in reasonably good shape at the moment through about a month or two of the second quarter. We're running at a much higher GDP level, 3.8%, than we were in the first quarter, which saw a contraction, at least according to the Atlanta Fed. They get a new update out today incorporating these retail sales numbers, and we'll see how good that actually turns out to be.
Mike, I just got to ask quickly about the Fed tomorrow. Does Jay Powell care that oil prices have gone up recently?
In a long-term sense, yes, because it depends on, it depends on how long they stay up, but it could mean that we get some inflation in the economy down the road in secondary places, sort of like chemicals and plastics and things like that. But it isn't going to change the Fed's view of the overall economy at this point.
All right, Mike, thanks very much. Bloomberg's Michael McKee, our international politics and economics editor. Let's stick with spending right now because JP Morgan is boosting its Sapphire reserve fee to a whopping $795 per year, but adding many more perks to try and justify that price hike. Sonali Basak is our lead financial correspondent, joins us here at the desk. And Sonali, this is a big change, both in terms of the price, right? It's now more expensive than the Amex Platinum, but you could be cashing out benefits of $1,600, $1,700, $2,000. That depends on how much you spend.
Yeah, it's really the first time we've seen this price hike since 2020. It used to be $550 a year, now $795, as you're saying. That is $100 more than Amex. Bloomberg did the math on this. You can get in perks $2,700 a year back. So if you're using all the perks, it is well worth your money. But again, it is now the most expensive card on the market, as broken this morning by our own Bloomberg's Hannah Levitt. Remember, a lot of money comes into JP Morgan through this card business. In fact, Marianne Lake, about a month ago, said half of Chase's new customers come through this card business. JP Morgan invested a lot in different things to make it exciting for customers. You might remember when they bought the Infatuation. I don't know if you've been on the website before to look for new places to eat.
The Infatuation is like a travel site or what is that?
It's a restaurant site.
Oh,
and so
okay.
why would JP Morgan be buying a restaurant site, right? And the reason is for perks like this. You get a lot of money back in different ways too. For example, you get $250 for Apple TV, Apple Music, but you get another $300 for StubHub and DoorDash. So add it all together, and yes, you get your $2,700 back.
Now you have to spend well over $75,000 a year to get to that, right? But even if you don't, you get, I think, a $300 dining credit, a $500 hotel credit at their elite hotels, right? A $300, as you mentioned, StubHub, $250 for Apple Music, Apple TV. You can get $1,650, I think, without spending anything.
There you go. So there's plenty of perks. How does this sort of reset the competitive environment?
Well, remember, just a day ago, Amex was saying that they're going to make its largest investment ever in the Platinum Card. And just from a macro perspective, guys, it's really interesting to watch this. You've seen Amex shares over the last 2 years just soar. They're actually down on the year. And so you see that top tier getting more and more competitive, even though it's kind of a signal here that bifurcation in the economy. You were just talking about retail sales overall. There's weakness. But when you come to the highest end consumer, there is a lot of desire to squeak that extra dollar out.
All right. Thank you very much. Sonali Basak there on the new JP Morgan Sapphire credit card offering. The credit card wars kick off. Remember, after yesterday, Amex said they're going to boost spending to levels like we've never seen before.
Yeah,
Just huge levels.
Huge levels. Not much reaction in the shares, but let's get to the broader market
I think
now.
it's not really about the shares, right? Because our viewers use these credit cards.
For sure.
So while they're on the Bloomberg terminal, they're reading the stories about work, but then they see something that affects their wallet and they're reading those stories too. So, it's not all about the market moves for Bloomberg clients.
Okay, well, given that we're 20 minutes away from the opening bell, let's get a check on futures right now. You can see the S&P 500 down by about 0.5% right now. Similar moves across benchmarks. The Russell 2000 down a little bit more. We have some interesting movers under the surface, though. We have to talk about solar stocks, such as First Solar plunging as the Senate version of the tax bill eliminates credits earlier than anticipated. I really want to get to JetBlue, though. This news breaking just in the last couple of minutes, reporting coming from CNBC that JetBlue is assessing the size and scope of its leadership team. The CEO saying that the path to profitability is going to take longer than expected. Plans to cut flights, pause retrofits, and park some jets. You add it up together, you can see that JetBlue down nearly 5% right now. This is a stock that's down nearly 60% over the past 5 years.
Yeah, it's been absolutely crushed, and they're seeing a slowdown in travel demand. On the one hand, I would think the problems that JetBlue has are JetBlue problems. On the other hand, this is an industry where customers just pick whatever's cheapest.
That's true.
So if demand is dropping for JetBlue, demand is likely dropping for most of the segment.
That's true, and we're going to spend plenty of time on airlines in this hour, but you can see the JetBlue shares down about 5% pre-market, adding to an already pretty ugly 5-year chart. Coming up, Meta pushes further into AI with a new tool to generate ads. We'll have more details next. This is Open Interest.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bloomberg launches our inaugural 25 African Startups to Watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Now let's get to high interest. Look at what's making headlines around the world. Senate Republicans are proposing a tax cut plan that would reduce taxes for households and businesses, but also cut Medicaid benefits. The plan would preserve President Trump's first-term tax cuts, create new breaks, and repeal some clean energy tax credits. But it faces opposition from some Republicans over those Medicaid cuts. Republicans hope to pass the bill by July 4th, but that could be pretty tough. SoftBank is raising around $4.8 billion through a sale of T-Mobile shares. The sale will help fund SoftBank's plans to invest tens or hundreds of billions of dollars into AI, and they may even sell more T-Mobile shares or other stuff that they have to do that. And Kraft Heinz will remove synthetic food dyes from all of its U.S. products by the end of 2027. This move eliminates ingredients like Red 40 and Yellow 5 from Jell-O, Kool-Aid, and some Lunchables products, which, if you're eating those, how healthy are you really? Anyway, Kraft Heinz is now the largest U.S. packaged food company to fully commit to eliminating the artificial colorants regulated by the Food and Drug Administration, Katie.
All right, well, let's move on swiftly here and talk about Meta. It's a conversation we've been having for the past couple days. Meta continuing to bolster its efforts to capitalize on the advent of generative AI. The owner of Facebook and Instagram today announced an updated image-to-video ad tool, which lets marketers use AI to turn product pictures into multi-scene video ads. For more, Bloomberg Tech co-host Caroline Hyde joins us now. So this is interesting. I mean, you know, for so long we've been focused on the picks and shovels, but now it really feels like you're starting to see some of the use cases come out, and in Meta's case, ways to monetize.
And ways to monetize to the core buyer of their ad products, which are small and medium-sized businesses. These people don't have really expensive ad campaigns going on with WPP and some of the other juggernauts. They're kind of making them themselves. This is giving you the generative AI tools to take a picture of the coffee that you're selling. But then suddenly, not only can you change the background, you can change the way in which the coffee looks. You can put it in different scenarios. Then you can suddenly create an entire video out of it. This is going to make our AI content experience probably become a bit exhausting. We're not going to know what's real and what's not from a product placement perspective, but really it gives the tools to the small and medium-sized enterprises. It's interesting, if you go into some of the marketing tools that overall Meta is using to communicate this, over in Cannes, they're all having a lovely time in the sunshine, but they're trying to tell the advertising community, we've got you. This is going to give you yet more creativity. This is going to have you even more work. Because I'd imagine if I was a creative at an ad agency right now, I'd be kind of freaking out. But they're kind of trying to make the case that this is going to be additive rather than taking away.
I mean, I already have no idea what's real or AI generated on Facebook, on Instagram.
The internet's a dangerous place for you.
I don't think anyone does. But I feel like on WhatsApp, I can trust that the messages I'm getting are from you or from Katie, right? How are they going to do advertising on WhatsApp?
If you're going into updates. So it's not going to suddenly come into our little private chats that we have on our WhatsApp at the moment, Matt. It's actually going to be going into updates if you click in there, and that's where you're already perhaps... I mean, Matt, you like certain soccer teams. I know you're a big petrol head. There are already groups, business community groups, that you can tap into and have conversations in updates that are all around the interest that you have. That's where Ferrari might pepper in the odd ad. That's where suddenly you get more personalized content coming your way. And indeed, you'll start to perhaps see businesses want to give a subscription. Maybe they'll take a cut of that in the future. So WhatsApp, I agree. What's going on in TikTok's even weirder in many ways and more dystopian, because they're giving you AI-generated avatars, people. Already they're starting to see that these video ads are being put forward by an influencer that you don't know and recognize, but a totally created one. So TikTok's taking on that generative AI video, text-to-video generation even further. So this is a whole new era of trying to work out what's real, what's not, and perhaps the odd influencer is perhaps not doing as well as they once.
You know, I just bought a pair of fake jeans on TikTok. But
By hand?
Jeans?
Yeah,
sorry.
They're actually leggings.
Those are called jeggings.
I don't want to call them jeggings.
I thought you meant fake as in they weren't going to arrive. No, there was a real purchase.
I mean, they haven't arrived yet, so watch this space. I'll keep you all updated. Our thanks to Bloomberg Tech co-host Caroline Hyde. Shall we talk about some more movers on our radar?
Yes, why don't we? As we're approaching, I mean, as you mentioned, we're approaching the bell. So
we do this every day. We count down to the opening bell, and I want to talk about Walmart. It's down a little bit, but it's nursing its longest losing streak since 2011 with 9 straight down days. So if the color is red, that means we're still there. AMD.
9 days?
Yeah.
I don't remember Walmart being down 9 days.
Okay, this is a Ferris Bueller reference. I won't be fooled again. Let's talk about AMD. Continues to climb. It spiked 9% yesterday. Now it's up another 2% pre-market. We'll see if it can continue its hot hand. And then JetBlue, actually, so it's down 2% right now. It was down closer to 5% a couple minutes ago after CNBC broke the news that it's planning cost cuts with a break even for 2025. Unlikely, according to an internal memo. Some of those losses coming back, but the direction of travel, not good.
Not great for JetBlue and maybe for global travel. Coming up, Meredith Whitney is going to share her proprietary research on the economy and consumers following today's weak retail sales print. You don't want to miss it. This is Open Interest.
Listen carefully. Can you hear the rhythm in the markets? just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome back to Open Interest. We learned at 8:30 this morning that retail sales fell for a second month in May as anxiety over tariffs and finances prompted consumers to pull back on spending. Let's discuss the state of the economy and the consumer now with Meredith Whitney. She is Whitney Advisory Group CEO. Meredith, great to have you in person.
Thanks for having me here.
So we got the retail sales, the headline figure, really ugly, a real miss there. I know that you track the flow of money in this economy at the consumer level very closely. Was this a surprise to you?
It was, because I look at the data that I look at monthly comes from Fiserv. It's called Spend Trend, and it's real credit card and debit card data. And it showed surprisingly strong growth year on year and month on month, and I was surprised by it. So I'm less surprised by the data today. I was more surprised by the data that came out last week. I can tell you what I am hearing from a corporate level, which is juxtaposed to what they said on the earnings call. Every retailer has increased prices across the board, so they can't be accused of, when tariffs are finalized, oh, you raised tariffs on this item because the equivalent tariff went up by this much. And so I think the retailers are protecting themselves. The damage is done. So I think the prices are going up, and consumers will decide where and what to spend on.
To what, I mean, I feel like we've known each other forever. We've been through a few recessions together. We went through the great financial crisis together. At what point can you count the U.S. consumer out? Because it's so, the U.S. consumer is so unstoppable, right?
Yeah, well, the high-end U.S. consumer is unstoppable. 52% of households are stoppable. And, you know, this is a small market, but, you know, the buy now, pay later is up, and people are opting more to use the buy now, pay later. Well, because everybody wants a lower payment when you buy something. So I don't know whether that's a sign of stress or not, but I think this summer is going to be critical because you're going to see higher prices, and I think you're going to see higher employment, and that is going to challenge the U.S.
Higher
consumer.
unemployment.
Higher unemployment. Yeah. Thank you. And that's going to challenge the U.S. consumer.
All right, Meredith, we are just getting started. Meredith Whitney is sticking with us through the opening bell, and here's the setup as we count down to the bells. The S&P 500, the NASDAQ 100, the Russell 2000, all lower this morning after a big day yesterday. We'll take you through all the action coming up next. This is Open Interest.
Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come, while we've invested in the convention center. The reason we focused on housing and getting rid of the vacant housing. The reason we focused on violent crime. And now Baltimore is having amongst the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. 20 seconds until the bell, and we have red arrows here across the board. S&P futures down 0.4%. NASDAQ futures off a little more. But I will say that we are only 2% away from an all-time high. So we're not at low levels, and we've been sort of bouncing up and down the past few days on the news out of Israel and Iran, as well as one big, beautiful bill. You see the New York Stock Exchange, you hear the bell in the New York Stock Exchange and see the guys from Virtu ringing it there. That stock has done pretty well. It's up 118% over the last 5 years. I think 164% over the last 10 years. So you've made money. You've more than doubled your money. This is even better, though. Casella is a stock that is up, I think, almost tripled in the last 5 years, but 2,000% in the last decade. So these guys are notably happier because they've made so much more money. That is not the case for JetBlue shareholders today, Katie, after the CEO was on CNBC and said they're really paring back.
Well, let's talk about it a little bit. JetBlue shares down about 2% at the opening bell on news that it's looking at new cost cuts. Now, that might include cutting flights and pausing retrofits. It's also restructuring some leadership roles. Shares down about 2%. Like I said, it was down about 5% when this news broke. So coming back a little bit. But Matt, as we were talking about, you take a look over the past 5 years, this stock is down over 60%.
Yeah, it's gotten absolutely crushed. And I think it's a problem with the whole industry, but specifically JetBlue has tried and tried to turn around and failed. T-Mobile stock down right now, just less than 4% because SoftBank sold its stake to invest more money in AI opportunities, and SoftBank sold its stake at about a 3% discount to yesterday's shares, so it makes sense that they're trading down 3.8%. Of course, SoftBank still owns more of T-Mobile and could continue to unload that because they want to funnel hundreds of billions of dollars into the Stargate opportunity with OpenAI and the Trump administration. We're back here with Meredith Whitney, Advisory Group CEO, Meredith Whitney herself, and you're in the sort of Washington area normally, and you're so focused on what goes on in Congress and the Senate, how that affects markets. The Senate has recently put out its draft of this one big, beautiful bill. What do you think about that? When you look at, the different incentives, we're going to talk to Scout Motors CEO Scott Keogh a little bit later. There are a lot of incentives on the table for him to make cars here, but there are a lot of, like the EV credits are going to be gone, and Section 899 could hurt Volkswagen.
Look, there's a lot of fat in the bill, either way you slice it, and that's concerning to a lot of people in the bond market. I think you've got two things going on. You've got, or three things going on. You've got real concern over the deficit. You've got real concern over the immigration policy, and you've got real concern over tariffs. And the combination doesn't look like it's going to end well. So, it's hard to imagine. So within the bill also, there's $70 billion of money to increase border security, which is fine, but also immigration raids. That's going to put upward pressure on wage inflation, and I think you're going to start to see that. And while the president has backed off on hospitality and leisure, you still got construction. That's a third of construction is employed by Latino labor. So I think there's going to be a lot of impact from that. So when I talk to my DC wonks, they're very out of fashion because they actually care about a responsible fiscal budget. And Washington, and particularly the White House, seems to have earmuffs on.
By the way, what's it like down there? Do you have dinner parties and you've got lobbyists over all the time, or do you have Congress people hanging out at your house? Or
I do. It's more of a lunch crowd, a lunch crowd, and so I was at a lunch with muckety mucks, which was terrifying in terms of the bipartisan take on where we're headed with the fiscal deficit. But again, we're not in fashion because we actually are nonpartisan and are probably nerdy and want to look at the numbers. I mean, one person that I've had the delight of spending time with recently is Paul Ryan, former Speaker of the House, and he is so rational, or he has solutions, but of course out of fashion these days.
Yeah.
Let's hope he comes back soon.
Well, Meredith, I'm curious to get your take on part of the big, beautiful bill that seemed to alarm Wall Street for a couple of weeks, and that was Section 899, the so-called revenge tax. Basically, the net effect was thought that it would make U.S. assets even less appealing, that it would target individuals and companies and add a tax to those policies that the government deems discriminatory. It looks like it was watered down a little bit in the Senate version. I wonder, does that make it into the lunch party conversation?
I think that's really scary because the idea is also, could your assets be seized? There was an op-ed yesterday about talking about not paying interest on treasuries. I mean, that's terrifying, right? So that would be to banks or foreign banks. But what message does that send to the rest of the world if we are really, anti-China? While all of a sudden we say don't pay interest on Chinese ownership of treasuries? There's obviously a flight of dollars, from dollars, a diversification from dollars. There's still a heavy dollar weighting. Obviously, I don't think that's going to change anytime soon. But this doesn't make foreign investors feel any more comfortable with the U.S. market. There's no other place to go at the moment. So look, the European banks have been incredibly resilient. If you look at dollars in Hong Kong banks, they've spiked over the last 2 years, and particularly over the last 3 or 4 months. So dollar-pegged Hong Kong dollars are a safe source of diversification. Gold, obviously.
Well, you make a good point that, the U.S. has the benefit of being, on some level, the only game in town. But you talked about European banks. I want to talk about U.S. banks because I'm reading through the notes that you sent our producer, and you really expect bank consolidation. We haven't seen it yet. Maybe we'll see it in the second half or in 2026. Talk us through the logic there of that call.
Okay, so this is all centered around the juxtaposition of Michelle Bowman and Dan Tarullo. So Dan Tarullo put together a very complex double, triple check on the large banks. At the time, over $250 billion, now over $100 billion in assets. And 2/3 of those banks, there's 29 banks, we take two out of them, which they're above the 10% deposit cap. Sorry not to get into the weeds, but that's Bank of America.
I think our viewers are in the weeds.
TV, it's okay. And JP Morgan, they shouldn't be able to make any acquisitions. But for the rest of them, 2/3 are rated unsatisfactory, which means they can't do anything. And they're not rated unsatisfactory on a capital basis. they're rated unsatisfactory on a subjective basis, either governance or management, or they're subjective, and they're only looked at once every looked at. There's technically supposed to be looked at twice a year, but they're really looked at every year or so.
But does that regulation and does that view just get loosened? Does it get just liberalized?
I think
laissez-faire.
I think it gets streamlined, and so I think you actually. She might just trash Trillo's layered rating system, and maybe just go to Camels or go to the regional banks are solely valued on the Camel rating system, the classic bank rating system, but the larger banks have multi-layered ratings, and if you do away with that or you streamline it, it's more efficient. It's probably a better regulatory environment, and you could see real consolidation. Now, the consolidation for the larger banks to acquire the medium banks, I always thought, this is going back to 2010, I always thought that you should see super regional banks created, and they're banks, let's say, between 20 and 50 billion, 15 billion and 50 billion that could consolidate, which would make a lot of sense. But I think First Horizon and TD last year really gave a chill through the banking industry. Now, the Capital One Discover, the fact that that finally got approved is a good sign, but I think bankers still have PTSD.
All right, bankers still have PTSD. That's a good place to leave it. Meredith, it's always wonderful to see you.
Fantastic to have you here. I learn something every time you come on.
So nice, thank you.
So Camels is something I haven't thought about or heard in a long time. Capital adequacy, asset quality, management, earnings, liquidity, sensitivity to market risk.
There you go. Added to the list of acronyms. That was Meredith Whitney of the Whitney Advisory Group. Let's get a check right now on this market right now. We've been watching this sell-off underway in the S&P 500, down about 0.3% at the moment. Let's talk about why. You only have 90 names in the green in this index, more than 400 in the red. You take a look at what's doing well, it's energy, as we've been discussing. Up at top, you have ExxonMobil. Then you also have NVIDIA helping this rally, Chevron and AMD, as we've been talking about. Let's take a look at the downside, though. Microsoft up at top. That is your biggest weight to the downside right now. Apple, Tesla, and Eli Lilly. Eli Lilly paying $1.3 billion for Verve today. That's weighing on shares a little bit. If you break it down by the sector level as well, you can see that we only have one sector in the green today, and that is energy. Up top, up 1.3% as we continue to monitor what's going on in the Middle East. Then you go down the list right now. At the bottom, consumer staples, healthcare, and utilities. This is Open Interest.
What is the issue between the type of information that's being collected by investors and the marking issue that you're describing?
But what mark-to-market assets do is it forces honesty into the situation. We're talking right after the DeepSeek model surprised everybody in its efficiency. It took hundreds of billions off of market caps because it legitimately raised concerns that maybe the future of AI was different. I guarantee you that if you look at other portfolios that aren't marked, they didn't move. If private assets are going to eat the world, as they say, with the equity market halving in the number of names, you come to a world that is increasingly an echo chamber. Imagine you have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Roku getting upgraded to a buy over at Loop Capital after the streaming service announced an ad partnership with Amazon yesterday. Shares up marginally. Next up, we have Novavax getting initiated over at Citi with a sell rating. The firm says that there's been a decline in respiratory vaccination rates, also cites uncertainty for vaccines and healthcare policies overall. That is a sector-wide issue. Novavax down 3%. And finally, we have drug maker Sarepta getting cut over at Morgan Stanley. This is the latest downgrade from Wall Street after news that a second patient died after getting its gene therapy for a rare muscle disorder. Shares are actually up 6% right now, but it was a total wipeout yesterday.
Is a dead cat bounce.
Okay, there you go.
Senate Republicans are proposing a number of changes to Medicaid. Proposed changes include cuts in programs that provide insurance to people over 65 and the disabled. It would also change how pharmacy benefit managers do business in the program. Stocks tied to that program mixed after the opening bell. Joining us with more is Bloomberg congressional reporter Eric Wasson. And Eric, I think the top line that people are interested in is how many people will lose their access to health care over the next decade because of this legislation?
You know, we don't have an estimate on the Senate bill. It is different from the House bill. The House bill talks about 16 million people losing access. It probably would be a similar number here. You know, it takes the Congressional Budget Office a couple of weeks to come up with the analysis. The main tweaks are, you know, there's a work requirement now for Medicaid that doesn't exist in current law. It's a little bit softened in the Senate bill. Those parents with kids 14 and under can be exempted. There's more of a phase-in for states. But on the other hand, there's something known as the Medicaid provider tax, whereby states will bill providers like hospitals and then get a higher reimbursement from the federal government. It's a bit of a gimmick, but it's one that many, many states have come to rely on. That's now capped at 3.5% eventually in the Senate bill, you know, as opposed to a 6% future cap in the House bill. It's much more stringent. This is to find more savings, more, you know, less of an impact to the deficit. And it's already raising big objections from some Senate Republicans like Josh Hawley, who said he was flabbergasted by this change and may oppose the bill over it. So this is going to be a big debate. You know, one thing that was interesting, you see Humana up there, there was talk of a Medicare Advantage changes, a sort of upcoding in that program whereby insurers bill for a more expensive procedure than patients actually got. You know, that's not in the bill. So when we report it could be in the bill, those stocks move lower, and we may see them moving higher now because those Medicare pieces are out.
Yeah, appreciate that call out there. Something to watch. I do want to talk about what's going on with solar stocks right now, because you look at the biggest losers in the S&P 500. It's the likes of Enphase Energy, First Solar as well. You can see Solar Edge and Sunrun down.
These are one-day moves?
Yeah, Sunrun down a whopping 43%, Eric. And my understanding is that basically the Senate Republicans have proposed a full phase out of tax credits for wind and solar energy by 2028. And I guess these moves speak for themselves.
Yeah, wind and solar really get whacked. Other forms of renewable energy, whether it's geothermal or hydrogen, there's a longer phase out. Nuclear was already getting more generous treatment due to lobbying by certain senators. So this is going to be continuously negotiated up until a possible Senate vote next week. But yeah, certainly wind and solar are big losers. I also want to point out pass-through businesses. They were getting a 23% qualified business deduction in the House bill. That's down to 20%. A lot of these owner-operated businesses already say they're unfairly taxed because they pay through the individual code, which can pay up to 37% as opposed to corporations with 21%. So there's big changes there. Tipped workers and overtime workers, there's new caps on that in the Senate bill to sort of save money, so you're not able to, expense huge amounts of tips there. So, there's some big changes. It's going to be negotiated. We have a story coming out later about the challenges. There's certainly some doubt that the Senate can pass this by July 4th. Ron Johnson was on our rival network talking about delaying it till August. So there's a lot of moving parts here and a lot of industries affected, as you pointed out.
All right, Eric, I'll just say, this comes with the SALT cap. There's a lot of congressmen here and congresswomen, New York, who aren't getting reelected. Eric Wasson there, a congressional reporter, coming to us from Capitol Hill. Coming up, JetBlue is planning more cost cuts as travel demand softens. The stock only down 3.4%, but as Katie's pointed out, it has already taken a huge hit. This is Open Interest.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jumana Versace in Doha, Qatar, and this is Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on.
I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on with stocks just 21 minutes into the session. We're looking at moves lower, but they're fairly subdued. S&P 500 now down 0.4%, still holding over 6,000. The NASDAQ down a little bit more, about 0.5% right now. Take a look at some of the movers, and we'll show you why we have these moves. NVIDIA down, not by much, but, you know, it's a $2.5 trillion, $3 trillion stock, as is Apple. So when these stocks move lower, they really take the market, or at least the benchmark indexes, with them. JP Morgan Chase down, even though you've got that story on Sapphire. It's different. It's a different story, really, than what's moving the shares. American Express also getting into the credit card wars. Maybe investors see that as a little bit bearish for those companies. And then American Airlines and JetBlue, both down. JetBlue CEO on CNBC this morning saying they're going to cut back on costs which have already been cut and cut and cut and cut and cut. They're going to reduce investment in personnel. They're going to reduce investment in their fleet, and they're going to leave some of their airliners parked, which is just not what you want to hear if you're an investor in this company, which has tried to turn around again and again, Katie.
Well, let's talk about it more now with Sid Phillip. He is Bloomberg's chief global aviation correspondent. So, Sid, some of these cost measures include eliminating some flights, pausing retrofits, also parking some jets, and the CEO blamed basically weaker travel demand. Sid, how much of this can we blame on industry-wide issues versus things that are specific to JetBlue and the management team?
Thanks, Katie. So yeah, JetBlue has been struggling more than the rest of the industry. And I mean, the big four in the US, the big three really, Delta, United, and to some extent American Airlines, haven't seen as much of a slowdown in travel demand as the others. But there is some pressure in the US in terms of travel demand, especially as they go into the very lucrative, very important summer months. And that's really when airlines tend to make most of their money. And so this is a really bad sign for the airline that they need to cut flights, they need to eliminate some services, park some jets, stop retrofitting planes. And that's sort of a worrying sign for the industry in general, but more so than JetBlue.
Yeah, I mean, is it correct, Sid, to think that, especially at this end of the offering, the cheaper, more affordable tickets, consumers are just going to pick whatever costs the least. So this isn't necessarily only a JetBlue problem. Maybe, their routes have something to do with it, but it's really an industry issue.
It is an industry-wide issue, and I mean, the larger carriers, what they've been doing is they've been cutting fares to fill up planes, and that's really that's basically encroaching on the turf of where these ultra low-cost and low-cost carriers have typically played. And so when the Deltas and the Uniteds come for your lunch, that's when the airlines like JetBlue and others really feel the pain of that.
And Sid, I saw in the locator that it looks like you're still in Paris. Of course, you were there for the Paris Air Show. And at the tail end of it, tell us what the takeaway was. From my reading, it looks like Airbus had a pretty good showing.
Katie, Airbus had a very good showing. I mean, they announced an order today for 100 planes from Vietjet. They announced some orders from Poland's LOT Airlines yesterday. They also announced some deals with Saudi Arabia. So they've had a really good showing at this show. Boeing, not so much. Boeing sort of taken a more low-key approach, especially after that Air India plane crash that just happened just days before the air show was to begin. And so Boeing's intentionally been taking a much lower-key approach. Their CEO and the CEO of their commercial aircraft division, who was meant to come for the show, did not come to the show. And so that's really where things are at the show.
All right, Sid, great to have you on the program. We look forward to having you back when you get home. Bloomberg's Sid Phillip covers airlines for us. Katie, we have a headline crossing the terminal that the Trump administration is considering a crackdown on pharmacy ads. Here you see the pharma stocks, which I believe were already down.
Yeah.
It's really going to be the advertisers that this hurts the most.
True. If you do, take your microscope out and look, you can see a little bit of a spike down when you look at Merck and Pfizer intraday. But you're right that this not great for the advertisers.
Interpublic and Omnicom shares falling to session lows on this. So
there you go. And that headline once again: the Trump administration said to consider a crackdown on pharma ads. We'll continue to follow that one.
Coming up in the next hour, Nassim Taleb of Universa Investments shares a spicy take about banks losing popularity, and we'll ask him as well why Wall Street is moving south. He's the star of tonight's debut of Sonali Basic's new show, Bullish. This is Open Interest.
there is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. The UN's nuclear watchdog reports Israeli missiles have hit Iran's Natanz nuclear site used to enrich uranium. Used in nuclear weapons, long lines of cars are jammed in, people trying to leave Tehran after Israeli warplanes attacked the capital, including its state-run broadcaster. The BBC's GR Gold.
The population of Tehran is, if you count the surrounding area, weighs more than the population of entire Israel. And just imagine the entire country has to leave their homes. And even if they want to leave their homes, it takes time with their cars and get out of the city.
In Israel, explosions heard in Tel Aviv and Jerusalem after air raid sirens sounded following missile launches from Iran. CBS's Robert Berger is in Jerusalem.
The streets here are pretty empty. People aren't going far from home. A lot of businesses are closed. Things like restaurants, movie theaters, places of entertainment are closed. Grocery stores are open. People are stocking up on things like water. So there's concern, but not panic.
The death toll from the 5-day conflict, over 200 in Iran, at least 24 in Israel. The FBI says Vance Belter, the Minnesota man accused of killing legislator Melissa Hortman and her husband and wounding a state senator and his wife, also targeted several other officials. CBS's Anna Schechter.
When it comes to motive, we look at those targeted. They were all Democrats. That the prosecutors are going to take into account. They're also going to be searching through his internet searches, his online activity.
Officials say Belter had notebooks detailing his plans and potential targets. The doctor who supplied Friend star Matthew Perry with the drug flagged in his overdose death will plead guilty.
Federal prosecutors say Dr. Salvador Plasencia repeatedly injected Perry with ketamine and taught Perry's assistant how to do it. Perry was prescribed legal amounts of ketamine to treat his depression, but wanted more of it. In text messages with another doctor, Plasencia allegedly called Perry a moron and wondered how much he would be willing to pay for the drugs. Perry was found dead in his hot tub in October 2023. Plasencia will plead guilty to 4 counts of distributing ketamine. He could face up to 40 years in prison. Michael Wallace, CBS News.
Death tolls up to 6 from severe flooding in West Virginia. Many homes in Fairmont were damaged or destroyed. Casey Gilbert is with United Way.
It's been great to see people wanting to help out, wanting to give so freely. We appreciate everybody wanting to help support, and I'm sure there will be more needs in the next few days with cleaning up, getting people settled.
This is CBS News. All eyes were on a baseball superstar last night.
21 months after elbow surgery, Shohei Ohtani pitched for the first time in an L.A. Dodgers uniform.
2-2 to Arise. Slapped into center field, a base hit, and back-to-back singles for the Padres to welcome Ohtani back to the mound.
He gave up 2 hits and a run on Spectrum Sportsnet. A fastball was 100 miles an hour in a 6-3 Dodgers win over San Diego. Ohtani later said he felt a bit nervous, and he anticipates pitching once a week going forward. Steve Kathan, CBS News.
His lawyers say R. Kelly suffered a near-fatal overdose in prison on anti-anxiety medication he was given by staff. They say it happened after the singer was placed in solitary following his transfer from Duke University Hospital in North Carolina against medical advice. He's serving 40 years at a prison nearby for sex trafficking. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Podcast. That's where you'll find us. We need to get the latest reporting on Europe. We will do that with Ethan Bronner, Bloomberg News Israel Bureau Chief. We're also going to check in with David Gurr. He's still in Canada. He didn't leave. He's correspondent for Bloomberg and host of the Big Take podcast. We'll get a wrap-up of the G7 conference there. Dana Dioria, co-CIO and group president of InvestNet Solutions, get her market outlook. Then Henrietta Trez, managing partner and director of economic policy at Veda Partners. She's just our go-to voice on all things in Washington, D.C., legislation, Congress, all that kind of stuff. I have no idea what's going on, but she breaks it down for us, so we'll check in with her. But right now, let's get a reset, get a look at the markets here with John Tucker and a Bloomberg Business Flash.
All right, now the major stock averages, they are lower right now. This report being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/round-the-clock. Consumers did pull back in May. Retail sales registering the biggest decline since the start of the year. You had 7 of the 13 categories seeing declines. Right now, the most actively traded stock, Sunrun, down right now. It is down, 41% at where the Senate wants to end wind, solar tax credits. Second most actively traded, Verve Therapeutics. They're soaring. Word of a $1.3 billion deal with Eli Lilly. And then you have JetBlue, this headline sending the stock lower. They're going to cut more flights and end service to some locations. Shares of JetBlue down 3.8%. Meantime, Alicia Levine at BNY Mellon Wealth says these markets are not following the expected narrative.
We're sitting here at the S&P over 6,000. The headlines are terrible, okay? The pictures are worse. and yet the market wants to go up. And so I think this is where we are. Now, it can change, but again, stepping back, geopolitical risk is not an investable thesis.
Well, the U.S. has spent nearly $1 trillion on disaster recovery and other climate-related needs over 12 months. This according to an analysis by Bloomberg Intelligence. That's 3% of GDP that people likely would have spent on goods and services. Right now, the S&P 500, 17 points lower. That's down 0.3%. 6,015 on the index. The Dow down 96 points. And right now, the NASDAQ 177 points lower. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul. Happy Tuesday.
Happy Tuesday, guys. And because we have Thursday off, it's kind of Wednesday, but
nice.
you know.
I like how you think about it.
Well, thank you. Appreciate that. Happy Thursday Eve. I don't know. Okay, this is Bloomberg Intelligence Radio. I'm Alex Steele alongside Paul Sweeney. Let's get a look at some of the stocks on the move with Bloomberg's Christina Aquino. Let's pick it up with Enphase. So this obviously moving on the Senate bill, proposed tax bill, and what they're doing with the wind and solar tax credits.
Absolutely, Alex. Enphase, ticker ENPH. That is one of the biggest decliners in that solar stock complex. Shares are down currently more than 23%, but at one point they were down about 28%. That was the biggest decline for a one-day drop since September 2016. And earlier, we also saw shares falling to the lowest since March 2020. And as you mentioned, Alex, that's absolutely right. That is because of the reaction to the Senate version of the budget bill. So basically, the proposal is that they would end incentives for wind and solar by 2028. That is earlier than expected. And then tax breaks for other sources of power, such as nuclear, hydropower, and geothermal, will be allowed to remain until they're phased out in 2036. So initially there were hopes that it was going to go the other way, but not so much.
So let me just, Alex, explain a little bit on this one. So tax credits, you can still get them for solar for a power producer agreement. So basically the utilities can still get those tax credits, but you putting a solar panel on your house cannot. And Enphase puts those solar panels on your house.
Oh.
So that's where that distinction is, which has many kind of scratching their head, like why help utilities and not individuals? But
right, because do those things work, by the way? I don't know anything about the panels. Like they don't look good, but if they cut my electric bill, maybe it's worth it for a lot of people.
You know what really helps with that? The tax credits. Because you might have to put out a lot up front to kind of build it. With the tax credits, though, you get a nice little rebate, and that's where it becomes economic, and that's where the issue really is for the likes of Enphase.
What happened to the roof shingles that could convert sunlight into energy?
Actually, funnily enough, my husband is waiting for that. He's like, we're going to wait for those roof shingles to put on our house. So I don't know.
So you have a house that doesn't have any shingles yet?
No.
You're waiting for...
We don't have any shingles. Do I need shingles?
Yeah, you need those.
Aren't they like regular? We'll talk offline. T-Mobile.
T-Mobile, ticker TMUS. Shares are down again, nearly 4% at the moment. And that is because we got SoftBank selling its stake for $4.8 billion. That's the biggest U.S. share sale since TD Bank sold a $13.1 billion stake in Charles Schwab in February. And so SoftBank, all about investing in AI, right? It has plans to put down as much as $30 billion in open AI. And so you'd expect the proceeds of this latest sale to fund those investments. So obviously not good news for T-Mobile. And just yesterday, remember, shares were initially pressured after we got news that the Trump family is unveiling a Trump-branded mobile phone business. So another blow for T-Mobile today here.
All right, JetBlue.
JetBlue, ticker JBLU, shares down also nearly 4% at the moment. That's because we did get reports that they're planning to accelerate their cost reductions by eliminating some flights, pausing retrofits, and parking some jets due to weaker than expected demand for travel. And that's according to an internal memo, which CNBC reported on earlier. You know, just a few weeks ago, JetBlue actually had some good news because they announced a partnership with United that they were going to, use their loyalty points and have people book flights across the two carriers. They got a boost then, but clearly not a good news day for JetBlue today.
All right. Thanks so much, Christine. Really appreciate it. Bloomberg's Christina Aquino joining us there. For more conversations just like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else that you listen. Again, we want to get to sort of the main geopolitical risk right now, and that's the fighting between Iran and Israel, with President Trump leaving the G7 early to deal with that. Ethan Broner is Bloomberg News Israel Bureau Chief, and he joins us now. over here in the U.S., we're trying to understand what the U.S. position is when it comes to President Trump and what's happening in the Middle East. Where are we where you are in terms of what Israel is doing and what its end goal is?
I would say that the confusion over what the United States is going to do is equal here as it is there. Israel has set up this plan to try to take down the Iranian nuclear facilities, as well as its ballistic missile capacity and its militia ability beyond its borders around Israel. So it's launched this plan. It says it can do it alone. It would love the United States to help out, in particular because there's one huge enrichment facility, Fordo, which is deep in a mountain that would be best gotten if you wanted to destroy it with 30,000-pound bunker busters that only the United States has, that only its B-2 planes can lift. They're so heavy. So right now, we're all waiting to see, might the U.S. decide to join, or might this moment be one where the Iranians decide to negotiate, agree not to enrich uranium?
Ethan, it just seems to me, at least, that Israel, as it relates to Iran, sees maybe a very rare opportunity to really deal almost a kind of a death blow to them, at the very least as a threat, maybe even to their government. Is that the feeling in Israel, that this is maybe a special moment, a special opportunity for Israel?
It's 100% the feeling in Israel, Paul. The thing is that, it's one thing to say this is a rare moment to go after, to defang this regime and take away its ability to be so destructive. It's another thing to say that, therefore, it's possible to overturn this regime. Look, it might be. It certainly would make them very happy in this country. But remember, the Iran-Iraq war went on for 8 years. And the regime in Iran put up with an enormous amount of suffering, and it is still there 40 years later. So it's a little bit of an illusion. It could be an illusion to think that, just like in theory, by taking out, by being so painful in Gaza that Hamas would yield. Hamas hasn't yielded yet, has it?
Exactly.
Is Israel listening to the United States, or will it? Like, once we get clear on what President Trump's position is?
I think Israel cares enormously about what the United States says. And I think it would not, I'm certain it would not have launched this attack without assent from Trump in a phone call last Monday, and generally over these last months. So if Trump were to suddenly change, look, at this point, it's hard to know because Israel's in the middle. By the way, I don't know if you're hearing, but we are having an attack on the Tel Aviv area right now with Iranian missiles. I'm in my secure room with a steel door and a steel window and reinforced concrete, so I'm as safe as I can be, so I can keep talking to you. But people across central Israel are running to their bomb shelters. Yes, I think what Trump and the United States want is very important to Israel. Absolutely, they've been coordinating very closely.
So, Ethan, is there? I guess the next step might be, as you suggested, use of some military armaments to maybe deal a knockout blow to the Iranian nuclear facilities. Is there a sense that that is being discussed? And if so, is there
There's no doubt. There's no doubt it's being discussed. There's no doubt that, look, if you look at the Americans have moved the Nimitz carrier group from Asia to the Mediterranean. That's the second carrier group. It's also sending it's in THAAD anti-air defense systems to Israel. It's moving stuff here in preparation for participating. That doesn't mean it will. And there's no question in my mind that the Trump administration is examining this possibility right now, and I don't know what it's going to decide. But we do know that the president left Canada, left Banff early, and said he needs to deal with this issue, and he didn't sound like he was interested in some kind of deep negotiation, right?
Well, Ethan, thank you so much for joining us. Ethan Brunner, Bloomberg News, Israel Bureau Chief. Stay safe. Good luck. Our thoughts, obviously, with you as he reports during an attack. That is something that is tremendously amazing and reporting and all of that, Ethan. We thank you very much for joining us on that. I will continue to follow those headlines as they continue to cross. Again, U.S. President Donald Trump leaving the G7 meeting early in Canada to focus on this Israel-Iran conflict, saying that he wants a real end to the nuclear dispute with Iran, not just a ceasefire when no one really knows what that real end will be. All right, coming up next, we're going to take you to Canada. David Gura, correspondent for Bloomberg and host of the Big Take podcast, is there. Get his take on that and what the murmur is on the ground after President Trump's departure. Then Dana Dioria, co-CIO and group president of Investnet Solutions, will be joining us on the markets. I mean, it's unbelievable to me.
Ethan Bronner in a bomb shelter in his home?
Doing a reporter hit.
Wow.
Yeah, that's dedication.
That's awesome.
This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half. If you move to Oracle Cloud Infrastructure, this is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. The major stock averages are lower and oil moving higher. You heard Ethan's great report there. Under attack, basically. He's in Tel Aviv. Israel, the sirens sounding in several areas across Israel. So the tensions, the all-out war continues. 8 of the 11 major industry groups in the S&P 500 lower right now. The best performer is energy right now. Brent, the international benchmark, up 2.5%, up $1.88, 75.11. Oil, again, pushing higher. And the Trump administration discussing policies to make it harder and more expensive for pharmaceutical companies to advertise directly to patients. As a result of that, shares of ad companies are lower. Interpublic Group will pick that one. Those shares, ticker symbol IPG, down right now 2.4%. Overall, the S&P 500, 13 points lower. That is down 0.2%. We're at 6,019. The Dow Jones Industrial Average, 30 points lower. The NASDAQ 100 down 65 points. That's a decline of 0.3%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. It's your Bloomberg Business Flash. Alex and Paul.
John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Boy, 2 segments right in a row. We got Ethan Bronner, bureau chief for Bloomberg News in Israel, in a bomb shelter in his home under attack. We then go to the other side of the world to the lovely wilderness of Canada. David Gura, correspondent for Bloomberg and host of the Bloomberg podcast, the Big Take podcast, joins us remotely from Canada, Alberta, Canada. David, boy, just kind of illustrates your world, the world we all live in, where President Trump left the G7 summit to go home, to go back to Washington to deal with this situation in Israel and Iran. And we saw that firsthand with Ethan Bronner in Tel Aviv. What's the feeling in Banff, David, at the G7 about maybe the early departure of President Trump?
Well, you're right to draw that contrast, Paul, and this is a radically different place. I should say all the world leaders here are acutely aware of what's going on in the Middle East and certainly in Ukraine as well, and that's driving a lot of their official agenda here. And will, over the course of the day, we saw Volodymyr Zelensky, the president of Ukraine, arrive here in Canada for those meetings today. He among the world leaders who aren't part of the G7, but we're hoping to get some FaceTime with President Trump here on the sidelines of this summit. Now they'll no longer have the ability to do that. So what we see today is a number of those world leaders in the G7 and those who were invited guests trying to figure out how to make the most of this summit now that a huge principal has decided to leave Canada early to go back to Washington, D.C., again to, as he put it, focus more on the conflict in the Middle East and try to find a path forward in terms of what the U.S.'s involvement might be. But it does kind of raise this question, can this be an effective summit, an effective G7 summit without the participation of the United States in it? It seems like, from what we heard from the organizer of the summit, Mark Carney, the Prime Minister of Canada, yes, it's possible. He doesn't seem like he's angry or miffed or anything that the president left early. He seems to understand why the president decided to do it. But as you know, the United States plays such a huge integral role here as the world's largest economy. It does really sort of change the parameters of this gathering.
So if he left to go deal with the conflict, then he wouldn't sign, though, a G7 statement condemning the conflict and asking for a ceasefire. How is everyone understanding that?
You know, he ultimately did, and that was a real surprising turn of events late last night. So he stuck around for the family photo. He had dinner with other world leaders, and our understanding is at that dinner, that draft document was circulated once again. There were some changes made, and the U.S. ultimately did sign on to it with these other G7 nations. So in it substantiates or backs the right of Israel to exist. It criticizes Iran and talks about de-escalating the conflict in the Middle East, including the humanitarian issues that are taking place in Gaza, and also nodded to those leaders paying attention to any market instability that might come out of this. So he did sign that in the end, but it was after a lot of resistance, as you know, Alex, over the course of the day. Yesterday, the president said he wasn't interested in signing that document, but it did change, it did evolve over the course of the day, and right before he boarded Air Force One, he did put his signature on it.
What does the leaders of Mr. Carney of Canada and the other leaders at the G7, what do they hope to accomplish realistically at the end of this?
They'll have conversations about the economy and security over the course of the day. And again, Mark Carney, as the president of the G7 this year, was able to invite whom he wanted to come here. So Narendra Modi is in town, the Prime Minister of India. As I mentioned, President Zelensky here as well. We have the President of South Africa, the President of Mexico, who came here yesterday and really didn't see President Trump and hoped to spend some time with him. They're all here, and those conversations will continue. We saw the Prime Minister of Canada sitting down with the head of NATO this morning. Of course, he's looking ahead to the summit that's supposed to take place in the coming days in The Hague, the NATO summit there. So the conversations, again, about security and the economy broadly are going to take place here. But I think it's going to be a markedly different conversation, Paul, than the one they would have had if President Trump had been present for it.
All right, David, really appreciate it. Thank you so much. Always excellent reporting up there. David Gura, correspondent for Bloomberg. I almost promoted you there, and host of the Big Take podcast, joining us from Canada. All right, let's get to the market here, because if you were seeing these headlines, you would think the market would be acting quite differently than it is. I mean, you're looking at an S&P only off by about 0.2% after we had a recovery yesterday after that sell-off over on Friday. Dana Dioria is co-CIO and group president for InvestNet Solutions and joins us now. Why? Why are markets not down more? Why haven't we seen a proper sell-off?
Yeah, I think when you look at situations like this, as much as the human toll, of course, is, can't be overstated, when you look at just the impact on markets, typically it's not necessarily a huge impact, right? I mean, the way that this conflict is going to show up primarily is through energy prices. And of course that casts some doubt on the inflation, kind of just had a nice report come in on inflation, looked good. Fed rate cuts, now up again. And then, you have a conflict that potentially impacts that number, that inflation number again, and gives the Fed pause. So I think to that extent, there will be concern. But, again, after that, obviously these are markets that are not huge markets per se in the, sort of MSCI ACWI or one of these indexes that everybody invests to. So oftentimes they're not big market events, and unless they obviously spiral out of control and, bring in other countries.
Dana, what we have not seen is inflation. We got the CPI and the PPI data recently, and we haven't really seen a big pickup in inflation. And that was one of the concerns for some market participants as they think about tariffs and the impact. We just haven't seen it. Does that give the Fed maybe an opportunity to cut rates here?
It sure does. I mean, look, they're data dependent, as they have always said. That inflation report coming in as tame as it did, and you even had, the report even had some kind of really positive aspects to it, right? The CPI comes in under 0.1% rise on a monthly basis. That's less than half the increase that was expected. Core CPI came in with just over 1.1%, also less than half. I mean, these were good numbers. Core goods prices actually declined. So yes, that report was fantastic, I think. And absolutely the market's immediate reaction was, okay, the Fed's not going to have to wait as long as perhaps we thought. Maybe we'll get 2 instead of 1. But, energy is a huge part of inflation. Mm-hmm. And if we set, oil spikes, that puts that back into doubt.
Right. And even though it'd be like, oh, we're going to look through oil, that can affect inflation expectations, which could impact the consumer, particularly when you still have trade headlines that are definitely up in the air. Speaking of, what did you make of the retail sales number today? Down 0.9% for May.
Yeah, I mean, I don't think the expectation is yet. We just saw a good consumer confidence report come out. I think the market and retail sales, it's been relatively robust, right? We haven't seen major cracks in these types of reports. In spite of, I think we had obviously this, sort of tariff tantrum, I'll call it, when, you had Liberation Day, as it's so named, and the market reacted very poorly. But let's be honest, we clawed back most of that, right? That sort of went away. Who knows if those reciprocal tariffs come back? But if they don't, the market still has a lot of reason to be hopeful and optimistic. I think at the time that the tariff announcements took place, consumers sort of, the savings reflected that there was a little bit of caution, but now that means also that there's a cushion for that. And so I think the consumer confidence, those are still, not showing massive cracks of any kind, right? There's still a lot of optimism in the market, a lot of optimism with the consumer. We can get past this. and the tariffs aren't going to sort of bring the doom that perhaps we thought a couple of months ago.
Dana, we saw earlier in the year a flight of capital out of the U.S. in terms of investment funds into rest of world, if you will, particularly with some European equities. Was that just a short-term trade, or is that something a little bit more longer term, do you think?
Well, here's the thing. A lot of retail investors were pretty overweighted in U.S. to begin with. If you look at it on a global basis, right? I mean, as it is, the U.S. obviously has a much bigger percentage of the overall global market than it did, 5 years ago, let's say. And so if you just invest based on sort of the ACWI, you already have a lower impact, a lower amount of international. We came into the year with sort of this story about U.S. exceptionalism and predominance. And retail investors, the kinds of questions you get in that period is, why do we even have any international, right? What's the thesis for investing overseas? Then all of a sudden you had a big seismic event in the U.S. markets, and it became apparent to everyone, oh, wait a minute, this diversification thing might still be important. Central banks overseas are lowering rates perhaps faster than they are here. I mean, you really see that in the performance of, for example, small caps. It might not be as evident in large caps, but you look at the performance of small caps in the U.S. versus small caps internationally, you're talking about a humongous difference through the course of the year. So I would say to you, unfortunately, because people chase returns, there's probably an element of it being a short-term trade. But for the average person, it makes sense to actually have that diversification over the long haul, because you can't predict, what's going to happen and which market's going to kind of suffer.
All right, Dana, thanks a lot. Really appreciate it. Dana Dioria joining us, co-CIO and Group President of InvestNet Solutions. To your point, Paul, though, this was the Fund Manager Survey from Bank of America, which I love. They have such a good one. Here are some nuggets, right? Investors are the most underweight on the greenback in 20 years.
That's the thing that just gets me. I'm not sure I've heard a great reason why people are selling the U.S. dollar. People tell me, don't worry about it. It's had 10% pullbacks in the past. It doesn't mean we're in a long-term bear market for the dollar, but I don't know.
Structural versus cyclical, right? Is this just cyclical? Okay, we were too diversified. We were too heavily weighted in the dollar. Let's move out. Or is this a structural kind of move here? Here was a fun one, too, in the report. The best performing asset in the next 5 years, I think you're referring to this, right? 54% of respondents say international stocks.
Really? Okay.
Only 23% say U.S. stocks, 13% gold, 5% bonds.
Interesting. But some folks we've heard just in the last several days, you tell me where the earnings are coming from, and that's where the performance will be. And, how is it not U.S. tech? I don't know.
And maybe it's like international stocks and also Mag 7.
Right.
Is that your new barbell?
I don't know, but it's interesting. It's interesting to see the market breadth, I guess, if you will, kind of broaden a little bit.
All right, well, coming up, we're going to go head back to D.C. and talk about the Senate tax bill that came out yesterday. Lots to parse through. We'll get resolution on what we can expect. Henrietta Trace is joining us from Veda Partners. This is Bloomberg Intelligence. Happy Tuesday.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Oil pushing higher as we heard those air raid sirens sound in Israel. Energy, in fact, the best performing industry group in the S&P 500. The best performing individual stock in the index, that belongs to Jabil, the manufacturing services company, reporting third quarter results beating expectations. They also raised the full year forecast. Then you also have Verve Therapeutics. Guess what? Those shares were up 75%. Eli Lilly agreed to buy the gene editing startup for a price tag of $1.3 billion. Right now, the S&P 500 down 18 at 6,014. The Dow Jones Industrial Average 72 points lower. NASDAQ 100 down 86 points. Brent crude is up 2.9%, 75.35 a barrel. Meantime, as the Fed starts its two-day policy meeting today, Torsten Slok at Apollo Management says the policymakers have a conundrum.
The upside pressure on inflation from tariffs, from oil prices, from restrictions on immigration, that's saying that inflation will be going up. And if inflation is going up, the Fed should be hiking. But at the same time, those shocks also will be pointing in the direction of growth slowing down. And if growth is slowing down, then Fed should be cutting.
Confidence among home builders falling to the lowest level since December 2022, and retail sales falling for a second straight month. Get your reservations in now. Could be a long wait. Foodies selecting the best restaurant in the U.S. Where do you think it is? Yes.
Applebee's?
No. I said where, by the way. Boulder, Colorado. Frasca Food and Wine. The Italian cuisine snagged the title from the James Beard Foundation. Best, Applebee's.
I don't. It just came to mind. I mean, I didn't know.
Boulder's a great town.
Applebee's.
I would have said New York for what it's worth, and I would have been wrong. So I would have been wrong on both angles.
I'm just skipping over this. We check the markets for you all the time right here on Bloomberg. I'm John Tucker. Alex and Paul.
Thank you, John Tucker. I haven't been in Applebee's in like 30 years, but that's a different story.
I'm sure they miss you.
Yeah. All right. Alex Teal alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Also check us out on YouTube as well as all your streaming devices. You can check us out on Bloomberg Originals. All right. So late last evening or afternoon, the Senate Republicans laid out its own version of the tax bill. Joining us for more is Henrietta Trace, Managing Partner and Director of Economic Policy at Veda Partners. Henrietta, for you, what was the biggest surprise?
The biggest surprise to me had to be the Medicaid components. Some of this stuff we know is going to have to be negotiated for the next couple of weeks, if not month, at least a month from here, given the disparity between the House and the Senate. But the Medicaid cuts really have a constituency of no one. I'm not sure exactly how they're planning to thread the needle just in the Senate, let alone the House with this package. They obviously are on a hunt for revenue. The tweaks that they made, I think, based off our estimates, which come from my colleague Spencer Perlman, suggest that we're looking at like $200 billion in additional revenue from Medicaid. But I want to be clear, this cuts off 35% of the entire state of Alaska's Medicaid recipients. And that's not even the most recent analysis and accounting from CBO. So they're going to have some serious problems with this piece. That really surprised me.
So talk to us about, is this, I guess the next date that we're all waiting for, is it kind of a July 4th? That's when the Senate wanted to get something done. Is that still on the table?
You know, I just can't get my head around July 4th. I understand optically and emotionally it sounds good. It's a feel-good story to have this done by the 4th of July. But the only way that members of Congress operate and act is with a sword hanging over their heads, and that's the debt ceiling. So last week, CBO actually pushed out the debt ceiling deadline to mid-August to mid-September. I think that's why you're seeing Ron Johnson, the senator from Wisconsin, saying, we're going to be negotiating this all the way through August, is because they don't have a hard and fast deadline until they need to hike the debt ceiling, at which point the debt ceiling will be, like $42 trillion and get us through November of 2026. So they've got a long way to go, I think.
Going to my world, and that's the energy world, I was really interested in how wind and solar got no relief in this. I can imagine, and neither did hydrogen. I can imagine that the alternative energy lobbyists were going hardcore for weeks in terms of the senators. And I'm just wondering, like, why? Like, why keep tax breaks for utilities and purchase power agreements for wind and solar, but not for consumers?
Right. And I think, Alex, you're really nailing my sentiment right now. I'm trying to talk with as many staffers as I can to understand the why behind this package. The IRA tax credits are extremely popular in Republican states specifically. 70% of the flow is going to those districts. So that is really important for a lot of senators who are up for re-election next cycle. I'd highlight Tom Tillis most particularly on this one. I think that the IRA tax components need to be adjusted from here. It's plain from the fact that the SALT cap, for example, is not even addressed by this package. It's just kept at the 10K rate, that they're going to do more tweaks. So I'm expecting some pretty substantial changes to the IRA side, to the residential stuff. I mean, we knew some things were going to come out, like the electric vehicles tax credit is standard operating procedure. We knew that that was going to come out. And there's some understanding, to get to your specific question, that there's a duplicative component to the residential and commercial building tax credits that already exist at the state level. So why does the federal government need to layer them on? So that's one piece. But really, I can't thread the needle and get you the votes for this package right now.
Universities, kind of surprised to me. They came out a little bit of a winner here. Reduced excise tax on university endowments. That's a big one. Where did that come from?
Yeah, that's a big one. There's actually a lot of really random stuff that is and is not in this bill. The university piece obviously is very much at odds with the public projection that the administration has taken towards universities. And I think that is pretty widely supported by Republican lawmakers and voters. Obviously, the senators are indicating that maybe they're not all the way there yet. But there's other pieces that are not in this bill. Like there was a proposal to tax cruise lines that you'll maybe remember Commerce Secretary Lutnick came out in wholehearted support for. But again, not to harp on Alaska, I don't know why I keep talking about them, but that would have been a hit to Alaska. So they chose not to use that component to generate revenue, but they did choose to cut the Medicaid stuff and kick, I think the latest estimate is 16 million people off Medicaid. So there's a lot of confusing pieces here. I'm really just trying to thread the needle to find the 51 votes for this package right now, and I can't get to it.
Okay, so then what happens? So you can't get the 51 votes. We don't even know if the House Republicans are going to like what this bill is. So what happens now?
Yeah, so, let's talk about maybe the underreported component here, which is the potential that this doesn't pan out. We still have 30% odds that they kick this into into December. Senator Lindsey Graham is the chairman of the Budget Committee, and he's being really clear that Republicans have 4 bites at the apple on reconciliation, and he's entirely correct. They don't need to have this entire comprehensive package ready for prime time, especially with Israel, Iran, and the $175 billion in this package that goes to military preparedness, another $150 billion that goes to immigration. There's a lot of ways for Republicans to operate for the next year and a half going into the midterms that doesn't have to be this one big package. So I think there's going to be some renewed discussion, especially as we're talking about delays for forward progress, about maybe breaking this bill into pieces. The $5 trillion debt ceiling hike alone loses you Rand Paul's vote. So there had already been conversations about cutting that back down to $2.5 trillion and maybe passing these bills piecemeal. That is an option. It's a low odds prospect, but it's something to be mindful of as an investor.
So just 30 seconds on that, raising that tax ceiling by $5 trillion. I can't do that on my balance sheet, but doesn't seem to be a problem for the federal government.
Yeah, I wish I had that kind of checkbook. That'd be pretty fantastic. This is a absolute record by a magnitude that I can't even do the math on. I think the last time we increased the debt ceiling by a specific dollar figure, it was like 1.2 trillion, and that got us almost a year and a half worth of functionality. Now we're talking about a $5 trillion hike, which, by the way, is $1 trillion more than the House has authorized, and it only gets us through the midterms. That's pretty exorbitant, and that really speaks to the sheer volume of deficit increases that's in this package. And it is also, the most regressive and substantially underwater bill that has passed. It's a negative 29% approval right now. That's pretty rough.
I think rough is like an understatement.
I've been a citizen of this country for 61 years. I have no idea how they do that. I guess it's just kick the can down the road at the highest level, I guess.
Yeah, I know. Also, it's like a whole new definition to the whip. What are you whipping if no one's going to be whipped? All right, Henrietta, thanks a lot. We really appreciate it. Jump back on those phones. Let us know what you find out. Henrietta Treyes, managing partner and director of Economic Policy over at Veda Partners. So for those of you nerds like me who read Citi's commodity report, it was their second quarter, third quarter outlook. They are now relatively bearish on gold. They see gold actually declining due to a variety of factors. We're going to break that down with Mike McGlone. He's coming up next.
Listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, guys. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. So every quarter, Citi puts out a very comprehensive, very long note that tackles every commodity class and sort of what the drivers will be and what their call will be for the third quarter. Yesterday, Citi had it out, and the most interesting part of it seemed to be with gold. They say that gold's last hurrah is here, and that true underlying supply and demand fundamentals will loosen up, and sharply, they say, loosen later, which is quite interesting because I haven't heard anyone say that. So let's go to Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist. He joins us now. What would be the conditions potential? Whoa, wait, hold on. Scratch that. That's not important because Mike McGlone is in a cowboy hat somewhere outside in a polo shirt. Where are you?
So I have my regular button down, but I'm in Austin, Texas at the CinMax Energy Symposium. And so we're learning a lot about energy and talked a little bit about gold. I talked a little bit yesterday about that gold crude oil ratio with near record highs.
Okay, well, forget gold because the hat's too amazing. Is it a cowboy hat or is it like a straw hat?
It's more of a straw hat, but I think it fits in Texas, so that's why I wear it. Plus, with a head like mine, I got to have a hat.
It's true, because you don't want to get sunburned. Okay, so we'll get to gold in a second, though, but you're at an energy symposium, so what's everyone talking about?
Well, mostly it's focused Texas-based. The key takeaways that I've really learned is how much Texas is adjusting to renewables. They're not really adding natural gas, but just really adjusting to these new renewables. And one thing that's really been notable is the satellite technology to be able to determine what's happening globally, not just in crude oil production and shipping things, is impeccable. How narrow and how close they can get. They can see footprints now in your neighbor's grass.
So, Mike, what's the feeling down there in Texas? Because, you know, obviously we all think Texas, we think oil and gas, but they're also one of the biggest, if not the biggest player in renewables. How do they kind of put all that together?
Well, it's an impressive thing that's been happening here without undue regulation. They've been doing it partly because it fits well into the grid cost effectively. So there's been a few panels yesterday how we have a lot of entities using batteries and solar as a complement to the grid. And it's very helping out with ERCOT to manage the grid supply. So they're moving rapidly and fast. And how they're doing, I think, is just low regulation.
All right, is there any talk about the Senate bill, by the way, that came out and the tax credits for wind and solar? I mean, just talking about the fact that Texas is a huge renewable state. Is anyone chattering about that?
Not much, maybe today, and I'll find that out if I can get back to you on that one.
How come there's an energy conference you're not at, Alex?
I don't know. I actually am a little offended by this.
Exactly.
I mean,
usually
I have straw hats. I have a cowboy hat and boots.
What do you think of the gold call here, Mike, that Alex was talking about? B of A says this might be it, at least for the near term. City, thank you. City.
Well, nothing wrong with taking profits in a significant bull market, which it is. But the key premise they point out is a recovery in global demand pull for things like aluminum and copper, industrial metals, and a recovery from the tariffs, which is, I think, a bit of a hopium. To me, the key thing for gold to go down is you need that U.S. stock market to keep going up. And to me, at this stage, that's the risk for gold to accelerate the U.S. stock market going down. So I wish them the best in that view. It's a very more positive outlook for the global economy. To me, the tilt's more negative. Particularly, you see that with gold rising and crude oil declining. Crude oil's only bounced in a bear market, and gold is just in a bit of an expensive bull market.
So, okay, if we flip it, though, can gold really go higher from here? Like, if we don't get that, you know, sub 3,000 scenario, do we get to 4+?
Oh, sure. To get to 4,000 plus is based on, I always think what Bloomberg Economics says, if we get a recession in the U.S., fair value for the S&P 500 is 4,000, which I think means $4,000 an ounce for gold. It's clearly the trajectory, particularly if the stock market just rolls over a little. But see, the thing that's happening is we have significant inflows in gold. Central banks are still buying. The only thing is it just got a little expensive. So gold to get back down to 3,000 means stock market's fine, interest rates are high, Fed's more focused on tightening, the rest of the world economy is doing great. The tilt is the other way on that one.
So, Mike, as we think about, you know, we've been talking about oil for the past few weeks with what's happening in the Middle East here. What's kind of the demand out there from your perspective? I mean, supply is what it is, and we can always follow OPEC and follow what the U.S. folks are doing, but what's the demand out there? What's the market telling you?
Every estimate revision I've seen for almost the last 2 years now is downward for demand estimate revisions, particularly from China and Asia. And I don't see what changes that. And what really accelerates those declining demand estimate revisions is when you get spikes in crude oil prices. The thing to remember about this Iran-Israeli conflict, or somewhat of a war, is since it started in October 2007, crude oil peaked around 90. It's dropped to 55 this year. It's still a downward trajectory. So this conflict is actually very bearish for crude oil. Every day that goes by that Iran gets a little more subdued. I mean, they've lost air control now. That's a pressure factor for crude oil. And just remember what happened just about a month ago. We had a pretty significant agreement with OPEC and Saudi Arabia adding supply and Mr. Trump visiting there. So it seems to be a bit of a plan kicking in.
All right, Mike, really appreciate it. You go get down to that conference. You have fun. Let me know what they're saying about the Senate tax bill.
Good barbecue in Austin, Texas.
Oh, yeah,
Yep.
Totally.
Yep.
All right, Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist, joining us from Austin, Texas.
Keep Austin weird.
Is Austin
that's
weird?
The thing. Yeah, it's the thing. That's the whole thing. In the context of global Texas, Cowboys and Western stuff, Austin's a little enclave of just kind of weirdness. University of Texas, that kind of thing. So and they have a great music scene, great, Austin City Limits and everything like that. So bumper sticker and saying has always been, keep Austin weird.
Thank you, Tay-Tay. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio, Sirius XM, channel 121, access the world's only global audio business network coast to coast, 24 hours a day. Bloomberg Radio, Sirius XM, channel 121, presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now as you're looking at an S&P just off by 0.3%. The NASDAQ dragging a bit lower, down by about 0.4%. Volume, though, quite light.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, happy Tuesday, everybody. Have you heard that? That was a big yawn from John Tucker. We are scintillating conversation right now.
That's no commentary on the present program.
It's Bloomberg Intelligence Radio. We have a great second hour lined up for you. David Gura will be joining us again from Canada on the G7 conference and what to make of President Trump leaving and what the vibe is there after that. Mari Shore, senior equity analyst at Columbia Threadneedle Investments, will break us down with the U.S. retail sales that were down 0.9% in May. Dan Williams is also a reporter for Bloomberg News based in Jerusalem. We'll get the latest out of the Middle East there. And Shelby McFadden, investment analyst at Motley Fool Asset Management, will join us. She loves things like Walmart and Costco. What does she do now if you've already invested in that? We will get her take. And finally, the big event, Shonali Bassick will be joining us. Her new show is already out, episode 1, Bullish. It's amazing. You should definitely check it out. We will have a little preview of that for you later on in the show. But let's kick it all off right now with the Bloomberg Business Flash with John Tucker.
All right, guys. Right now, the major averages, they are lower, and we have oil rising. The Mideast conflict seems to have escalated, with Iran firing ballistic missiles and Israel striking targets across the Islamic Republic. Also, the USS Nimitz aircraft carrier strike group sailing to the Middle East. That is ahead of schedule, so that all adds up to lower stocks, higher oil right now. S&P 500 down 20 points. That's down 0.3%. It's 6,013 on the index. The Dow Jones Industrial Average, 88 points lower. NASDAQ 100 right now is 86 points lower. That's down about 0.4%. We have Brent crude up 2.5%, 75.07 a barrel right now. Sunrun shares down 43%. Republicans released a bill that would end clean energy tax credits earlier than expected. In the meantime, Steve Rasciuto at Mizuho Securities says, you know what? The economic forecasts, they have been too pessimistic.
Q4 of 2025, we think the economy is going to be right back to trend. Everyone's estimate on GDP is much too low. Really? We have been forecasting recessions for years, since 2022.
Spending at restaurants and bars, part of the retail sales report, they slumped in May by the most in more than 2 years, underscoring how tariffs and geopolitical tensions making consumers a bit nervous about their finances. And then finally, Dine Brands shares up close to 2% in today's trading after Alex incorrectly guessed that Applebee's was the best restaurant in the U.S. I don't know if there's a direct connection, but the shares did rise.
Yes.
Is Applebee's the Bloomin' Onion, or is that the other one? That's Outback.
No,
Outback. That's Outback.
It's Outback.
Where it's like 2,000
I can tell
calories
you,
for
like,
that
you
Bloomin'
really
Onion.
know your dining, really
Yes.
fine dining. You should do that Dine Go thing.
Oh my gosh.
Applebee's was great. Do the
Applebee's
reviews.
was really good. I used to fine dine, but then I got a kid, so we stopped doing that.
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. John was giving you a sense of the markets, a little bit of a sell-off here. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney along with Alex Steele, and we're joined by Bloomberg's Norma Linda. Nora, what are you looking at?
Well, I've got eyes on JetBlue shares. That's JBLU for the ticker there. We're seeing shares of the company down as much as 4.7% this morning. And that's after the company said that it is seeing weaker than expected demand. That's something that it is expecting moving forward. And it intends to step up some of its cost-cutting measures. So we're seeing it reducing its budget at support centers. It's assessing its hiring practices and vendor spending. So these are all things that people are combing through right now. We're seeing shares under of the company pressured right now, especially as we're thinking about this company returning to profitability, and that doesn't necessarily seem to be an expectation for them moving forward, they've said.
Yeah, and you have to wonder what's next after American Airlines partnership, Spirit deal. Like, is there a resurgence to something along those lines?
My thing is, I'm looking at Frontier, Allegiant, JetBlue, all down 40 to 50% this year. Yeah. I mean, if I'm a regulator, I'm encouraging these guys to get together.
I mean, in theory, yeah, because how else can you possibly compete?
I don't know.
With United, Delta, and American Airlines. Okay, let's go to Lennar. They had earnings out after the bell yesterday.
They did. So this is a home builder. That's ticker LEN. And we're seeing shares up as much as 4.3%. And the company essentially saw it was tempered. Its new orders outlook was tempered by better than expected gross margin results. So while there were some things that people weren't nearly optimistic about coming out of the report, they're really seeing gross margins. It's better than expected gross margin results, really outweighing any sort of potential pessimism from the company. And as we look at home builders more broadly, I mean, they've really been trying to get back on track, especially as we think about the pressures of tariffs. We think about the pressures of them looking for immigrant workers, also being a concern when we think about mass deportations, and then lumber and all these other things that have really been in the mix here for home builders, in addition to high rates right now. So we're just seeing analysts that are looking toward the group and trying to see whether or not they're able to scale back some of those incentives that they're offering to new home buyers in order to, see some sort of great profit.
All right. According to the Mortgage Bankers Association, that 30-year fixed, 6.93%.
Oh
my goodness!
So, but
you go back
crazy
smart now.
I look crazy smart now, but you go back and you put that thing over the last 50 years. That's an average rate. I mean, we were in.
I remember my parents had a 16% 30-year fix.
Yep.
I mean, oh my God! I don't know what I could afford with a 16% hit.
If you're a buyer or seller, you just got to say this is the new normal, and I'm either buying and selling because this is the new norm. I think.
Yeah.
Anyway, okay.
Crazy.
Surgery Partners.
Yeah, Surgery Partners, an interesting one here. That's ticker SGRY. Now, this is a $2.5 billion market cap company, and it's an ambulatory surgery clinic group. Now, we're looking at the company because of its size and scope today. We're seeing shares tumbling as much as 14%, which is the biggest intraday drop we've seen for the company since 2022, and that's after it rejected a buyout proposal from Bain Capital. So it was really looking to take over the company, and after that rejection, it doesn't seem as though the street is happy about that. But I was looking at Bloomberg Intelligence, and they put out a note where they're saying that this shouldn't necessarily be viewed as a credit negative for the company, but it doesn't seem as though Wall Street is too convinced right now about what's going on here.
All right, very good. We appreciate that, Norma Linda. Good stuff there. If you want more conversations like this, all you have to do is subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers in Apple Podcasts, Spotify, or anywhere you listen to your podcasts, and that's where you'll find us. Retail sales came out today, a little bit weaker than expected, I would say, but I don't know. It wasn't it wasn't a disaster. I kind of feel like the consumer's still kind of hanging in there, but let's get to an expert on this. Mari Shore, Senior Equity Analyst for Columbia Threadneedle, joins us here. Mari, what did you make of the retail sales number we saw this morning?
Yeah, I think your read on the report was exactly correct. If you look at the weakness, it was most pronounced in categories like electronics and motor vehicles, where arguably we did see some pull forward ahead of tariffs earlier this spring. But when you look outside of those categories into the more discretionary areas like home furnishings, apparel, e-commerce, the results there were pretty good. And I think it just shows the underlying resilience of the consumer, despite, swings in consumer sentiment that have really worried investors.
But the one services component was restaurant and bar, right? And that's the one services that we get. That fell by the most since early of 2023. What does that mean?
Yeah, I think we've seen a bit of a lagged kind of weakness in some of those categories versus some of the goods categories. Remember, the goods categories really led us out of the pandemic. And then going up against tough compares, we started to see demand in some of those categories moderate. I think we're really seeing the same in a lot of the services areas right now, whether it be travel or eating out. You know, we saw a delayed recovery in a lot of those areas post-pandemic. And a lot of those companies, similar to goods, took a lot of pricing coming out of the pandemic. And I think we're at a point now where we're going up against more difficult comparisons. I think pricing has caught up with a lot of consumers in these areas. And so as a result, we're seeing a lot of, you know, the weakness come through at very similar to what we saw in the goods category starting a couple of years ago.
Mari, so for the retail companies that you follow, what are they kind of saying about their ability to deal with tariffs? Are they taking it in their margin? Or are they trying to pass it along to consumers? What are you hearing?
Overall, the retailers' ability to manage tariffs has been much better than I expected coming out of Liberation Day. And it really is a mix of different mitigating factors. You know, a lot of it is moving production around, working more closely with their vendor partners to share in some of these higher costs. And then, you know, the secondary and tertiary you know, mitigating factors are to absorb some of it themselves and to take higher pricing. But I think, you know, all of the companies recognize that they need to be very strategic and surgical in their price increases, and that the consumer is probably not going to be able to absorb significantly higher pricing across the board. And for most companies, they do expect a very near-term hit to margins, just as they kind of work through all of these mitigating factors. But as we look out, you know, 6, 12 months, they all seem to feel pretty good about their ability to almost fully offset the higher costs.
Higher costs brings me to oil. I appreciate that the geopolitical risk premium isn't at like 80 or 90 or anything along those lines, but high 70 is really different than 50s. How soon do you expect that to impact, if at all, consumer spending?
I don't expect it to be a huge impact. You know, if we think about higher inflation weighing on consumers' discretionary spend post-pandemic, it was really more, I would say, in the category of food versus fuel. And so I do think there is a certain segment of the population, you know, specifically the lower income consumer who lives paycheck to paycheck, where you do see those higher prices at the pump, you know, weighing more on their monthly discretionary budgets. But overall, I don't view fuel as much of a driver of consumers' ability to spend as food. And I think it's really been that sticky inflation in food and housing that has really been the key headwind for consumers coming out of the pandemic.
All right, Mari, thank you so much for joining us. Always appreciate getting a few minutes of your time. Mari Shore, Senior Equity Analyst for Columbia Threadneedle Investment. She's up there in Boston. Let's head back out to Canada. Now, I've avoided pronouncing this town.
Oh, me too. Same.
So I've just been saying like Canada or Alberta. Kanaskas? No.
I don't know. You're looking at me.
All right, let's go to David Gurr, correspondent for Bloomberg and host of the Big Take podcast. He's at the G7 meeting. David, what's the proper pronunciation there?
Kananaskis, and I will say it was an integral part of my prep before I came out here in the weeks leading up to this summit, having to learn how to say that and say it properly. So you're in good company, Paul. Okay. Don't worry about it.
All right, so we've now, President Trump has left early. The G7, I guess that, for better or worse, is kind of the lead story coming out of the G7 here in the second day here. Is the agenda proceeding without him?
It is. They're following that official agenda. And so what you see today are other world leaders who aren't part of the G7, but are invited guests of the president of the G7 this year. That's Mark Carney, the Prime Minister of Canada, coming to the summit site and having these bilateral meetings with other world leaders. So this morning we saw the Secretary General of NATO coming and meeting with the Prime Minister. Of course, he has a lot on his agenda as he looks ahead to the NATO summit that's going to take place next week. They talked about security and Canada's commitment to spending more on defense here in the years ahead as they spoke to reporters following showing their greeting at the beginning of today's proceedings. Then you have the Ukrainian President Volodymyr Zelensky, who's arrived here as well. And I think as you look at that list of other world leaders who are making the journey here and have made the journey here, there has to be profound disappointment among a lot of them that they're not going to get face time with President Trump. Just looking at Volodymyr Zelensky in particular, he had come here, yes, to meet with these other world leaders, but to make the case once again to President Trump that the U.S. needs to do more militarily to support Ukraine in its fight against Russia. He's now not going to have the opportunity to do that. So he'll have other bilateral meetings over the course of the day here, of course. But there's going to be a tremendous amount of issues here with them not having the kind of latitude or engagement they would have had if President Trump had remained on the ground.
All right, we are having some audio issues or hearing issues with David Gura. His audio dropped there. We'll get back to him in just a second. So with that backdrop, you wonder then how much can actually get done, because any individual or leader there that wanted to sit with President Trump to sort of talk about trade, that no longer is available to them.
Maybe a side trip to Washington, D.C., perhaps that might be an option for some of these. But yeah, if you're President Zelensky, it's a great opportunity to get in front of President Trump and other world leaders at one spot to plead your case, as it were.
Yeah, and also just sort of getting the latest here from what's unveiling between Iran and Israel. NATO Secretary General Mark Rutte and Canadian Prime Minister Mark Carney are meeting in Alberta right now. Both are noting in opening remarks that they had announced a plan to reach NATO's target of spending 2% on GDP on defense this year. Now, Canada's not met the target since first agreeing to do so in 2006. And last year, they only spent about 1.4% of GDP on its military. So Carney saying that will take some pressure off Canada at the NATO meeting next week. Overall, that group is set to agree to a new benchmark now of 3.5% of GDP on military spending. Basically, they're going to be spending more. Spending more.
And when you think about NATO, you think about Germany. Okay, they can get it done given their economy. And I've been told that Poland, given their geographic proximity to Russia, will make good on that commitment. But then you start thinking about everybody else in Europe. Are some of the southern European countries like Italy, like Spain, like Portugal, do they have the economic wherewithal to do that and to make those commitments and meet those commitments? But at least the discussion has started.
Yeah. And then also right before President Trump left, so that discussion is underway. In addition to that, UK Prime Minister Keir Starmer sat next to Donald Trump yesterday at Monday's working dinner and said he was left, Starmer saying this, he was left with no doubt that the U.S. president intends to stay out of the conflict between Iran and Israel. That's interesting. He says, there is nothing the president said that suggests he's about to get involved in this conflict. On the contrary, the G7 statement was about de-escalation. And that's according to Keir Starmer, the Prime Minister of the UK, speaking to reporters on Tuesday morning.
Very good. We have David Gura back in Canada. So, David, what's the takeaway, do you think, given this time in Canada with the G7?
I think the focus now is going to shift to that other conflict. And of course, that's taken a backseat here as we've seen the situation in the Middle East really escalate over these last few days. But with President Zelensky here and with the engagement and interest that we've seen among the European leaders who are here at this summit, I think there's going to be a lot of conversation about the path forward there. And I heard you talking about the prospects of maybe seeing President Zelensky making his way to Washington to meet with President Trump. We'll see if anything like that emerges as a result of this. But I just want to stress once again, the official agenda may be the same now without President Trump here. But so much of what was likely to happen here was going to happen on the sidelines with the participation of President Trump. And that's certainly the case when it comes to the Middle East and the crisis in Ukraine, but also when it comes to trade. There was so much expectation going into this among these world leaders that they were going to get a significant amount of face time with the president and his economic team, with the Treasury Secretary and the U.S. Trade Representative Jamieson Greer. That's now not going to happen in the same way that it would have happened before. And that has to be just a profound disappointment for these leaders, many of whom have traveled an incredibly long distance to be here in this remote part of Canada, Paul.
All right, David, thank you so much for your reporting. David Gura, correspondent for Bloomberg and host of the Big Take podcast, joining us remotely from Kananaskis, Canada.
There you go.
I think that was pretty solid right there. S&P, we're off 15 points. That's 0.25%. The Dow is pretty much unchanged. The NASDAQ off about 0.3%. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks nudging lower, oil prices rising again. Of course, the focus remains on the Mideast with more attacks between Israel and Iran. And the U.S. sending more military assets to the Mideast. Energy, the best performing industry group in the S&P 500. You have right now energy with Brent crude, the international benchmark, up 2.9% at $75.32 a barrel. Fed policymakers expect to keep their key interest rate unchanged tomorrow. They're also going to release the set of quarterly economic projections. The dots expected to show inflation will accelerate later this year. Interpublic Group shares, they're down close to 1%. The Trump administration discussing policies to make it harder and more expensive for pharma companies to advertise directly to patients. This could disrupt over $10 billion in annual ad spending. And Republicans also considering phasing out solar tax credits by 2028. As a result of that, solar companies plunging. Sunrun will take them right now 41% lower in today's trading. And Kraft Heinz pulling artificial dyes from its U.S. products starting in 2027. The move comes about 2 months after health officials in the U.S. said they would urge food makers to phase out petroleum-based artificial colors in the nation's food supply. Right now, the S&P 500, 18 points lower. That's down 0.3%. We're at 6,015 on the index. The Dow Jones Industrial Average, 50 points lower, and the Nasdaq 100 is 73 points lower. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate it. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. Well, U.S. President Donald Trump left the Group of Seven leaders meeting in Canada early to deal with the Israel-Iran conflict, playing down the prospects of a ceasefire in favor of a, quote, a real end. Let's get the latest reporting on the Middle East. Dan Williams joins us. He's a reporter. He's based in Jerusalem for Bloomberg News, but he's reporting from London Bureau today. Dan, what's the latest here? Is it another day of violence? Is there any move towards any negotiations?
Well, no, although I think it's worth noting that, to the best of my knowledge, the intensity of the Iranian missile fire, at least against Israel, has diminished. That could be a result of the Iranians husbanding what remains of their missiles. It could also be because Israel has been cutting down launches in the airstrikes that it's been intensifying since starting them on Friday, extending them to various new target sets and the like. As you noted, the big dark horse in this situation is President Trump. Having withdrawn early, departed early from the G7 meeting, he made comments suggesting very strongly that his patience with diplomacy, or at least with Iran's efforts or desire to restart diplomacy, nuclear diplomacy, in a bid to fend off this Israeli assault and prevent the United States from joining in the Israeli assault, he doesn't seem to be patient with that at all. And there are hints and suggestions that the United States may even be willing or about to take part, to intervene, to actually take part militarily, offensively, in what Israel has been doing. It's worth noting the U.S. has so far limited itself to more passive defensive assistance, intercepting missiles and drones, for example, on behalf of Israel.
Dan, with the combination of the President Trump leaving the G7 early, there's also been reports that a carrier group has been directed to the Middle East, a U.S. carrier, naval carrier group. Is that raising expectations that, in fact, the U.S. may play some offensive role?
It certainly is. I mean, that's presumably what you would need to play an offensive role. Israel, by its own account, has been successful, very successful, it says so far. But Israel's Air Force is rather small and rather lean compared to U.S. forces. And I think the big question is whether the Israelis have the strategic lift, the firepower, to destroy the more fortified, the more deeply buried, the more defended Iranian nuclear facilities. The Americans certainly do have it, and it would appear that in order, were the Americans to take part and deliver that firepower, they would have to move into position as they now appear to be doing.
Wow, okay. And where do we know the rest of Europe stands on this?
Well, to judge from the statement of the G7, there's been a call for de-escalation. That was a joint communique put out yesterday. It appears the wording there was watered down at the insistence, at the demand of the Americans, for example, a call for an immediate resumption of diplomacy, a call for restraint on both sides, that language appears to have been eliminated before the communique went out, which again might appear consistent with an American move to increase its own involvement. It's also worth remembering that Trump is a showman. He understands how much attention he draws internationally. And when Israel launched this attack back on Friday morning, which was a surprise to everyone, including most Israelis, it was really bookended by some very murky U.S. messaging. Apparently, Trump first saying he didn't want war, then saying or speaking supportively of what Israel had done. And that may have actually been intended to create a fog, a bit of confusion on the part of Iranians designed to lower their guard. So it could be right now that all of this movement, Trump's movement away from Canada, the movement of military forces in the region, is intended to up the pressure on Iran, bring Iran back to the negotiating table on terms more agreeable to the United States and to Israel.
Dan, about 30 seconds left here. What's the latest from Iran? There were reports that they were open to negotiations. Is that still the case? Is that becoming more pronounced as the conflict continues?
Yes, but again, the stronger party here, specifically Trump and arguably militarily Israel, are not interested, it would appear, in negotiations for their own sake. The confusion, I should say, the reason that the negotiations stalled was Iran's refusal to give up uranium enrichment. That's a core project for a civilian nuclear program. It's also a core project for a country that wants an independent military nuclear program. So unless Iran is willing to relent on that, dismantle uranium enrichment as demanded by America and by Israel, there really appears to be no point to restoring the negotiations. At least that's what Trump has been saying, and the Israelis as well.
All right, Dan, we really appreciate it. Thank you very much. Dan Williams, reporter for Bloomberg News based in Jerusalem. He joins us now, though, from London. All right, let's get a look in on the markets then. What do you do when there are headlines like this? Shelby McFadden is investment analyst at Motley Fool Asset Management to discuss her outlook. How much risk, Shelby, do you think you should have in the markets?
Well, I will start off with saying we are staying invested, right? There are points and in certain portfolios where we have a little bit more cash than we would like to, and it's not because we're sort of taking that step back approach and saying, let's get out of this, we don't want a part of it. It's more so that we're seeing that some of these pullbacks along with the rallies are really broad-based, and so the opportunity for buying in terms of getting in at a price that would favor us in terms of that long-term return, it's not showing up as in a way that we would like, right? So where there are higher cash balances is because we're sort of waiting for those fair valuation opportunities, but going ahead and staying invested because we can't control these sort of big market shocks, right? And it is a bit uncomfortable. It is something that requires a very long-term orientation in order to sort of suffer through it. But it's not putting us on the sidelines. If anything, we're much more active. We're spending a lot more time filling up the universe, even when the price opportunity doesn't necessarily present itself, and just adjusting according to that sort of geopolitical risk as necessary.
Are there certain sectors that screen well for you guys? A lot of folks were saying, boy, now I have an opportunity to buy the Mag 7 when they sold off earlier in the year. What sectors screen well for you guys?
I think right now we have surprisingly actually taken a closer look at certain financials and in terms of some of our core and income-oriented strategies, trying to get a better look at certain consumer staples companies that are just good at what they do and have been overlooked and sort of punished for where we are in the cycle. In terms of tech, we've taken a look at ServiceNow, which has remained a bit expensive, but they're very mature in their space. They have high quality leadership, great retention, fantastic cross-selling opportunity. And if the runway for agentic AI has been pulled forward the way we think it has, it's a great opportunity if we sort of see any sort of market dip that allows us to enter that position sooner.
Now, you were stalwarts of, say, Costco and Walmart, and I'm assuming you still are, but if I max out on that position, what do I do?
You max out on Costco and Walmart, and you're already maxed out on MasterCard. You can do what we've been trying to do. You can go ahead and play that cow position that we've seen coming up the past week or so, which has been Costco, O'Reilly Auto Parts, and Walmart. So
that's a thing?
Yeah.
Did you coin cow?
I did not coin cow, and I was devastated that I didn't.
Okay, so
Costco, O'Reilly Auto Parts, and then Walmart. So O'Reilly had been something that we were looking at because when you think about it, and this has been something that's been ongoing since we had a lot of that inflation in autos in 22, 23, people were fixing their cars, right? Now, when we look at that savings being depleted, people are doing that again. And then you add on top of savings depletion, student loan resumption, and tariffs, you're definitely choosing to fix your car if you can, right? And so that has been something that has been periodically a little bit more expensive, but very much staple oriented, similar to how people are fixing their homes instead of trying to sell and buying new ones. So if you can't get into some of those staples already and you're still not able to get into the toll takers, MasterCard, you could wait for something like an O'Reilly to pop up, or you could look in some of those other consumer staples that are more in sort of the like health and beauty sort of space. Kenvue is a great option for that. We've seen that white label has not penetrated that sort of consumer health space the way that we would expect it to. It's kind of hanging out kind of flat.
The average age of U.S. cars and light trucks, 12.6 years. I'm looking at John Tucker when I say this.
Well, have you looked under the hood of your car? I mean, there's nothing in there I recognize. I couldn't do that anymore. I used to be able to change out a carburetor. Not anymore.
I'm sure there are YouTube videos for that.
Well, yeah, whatever.
It's basically my new car, the 2024 vehicle is. I've been saying it's basically.
Please
my
don't
iPhone
go anywhere
spaceship.
near your engine.
My iPhone. It's an iPhone with 4 wheels. That's what it is.
It is.
It's crazy. Is the Fed going to help us out this year, or should we not rely on that?
They could help us out this year, but I wouldn't expect it to be until the end of the year. And as a result, I would not rely on it. I've coined in my team, this is something I have coined, frozen Fed summer. I think that's what we're going to see because there's so much murkiness in the data, right? We're about to enter a period where there's not going to be too much promo shopping. We will have a little bit of promo in July 4th, but a lot of the vacations have been booked, right? Once we start to get into August, it gets a little bit more promo activity for back to school. So there's this short window for June and July where we can probably have a look at the data and say, are people still spending? Is this kind of just the weather? What are we going to get here? And so that'll help us out a little bit. But shortly after that, we'll have murky data again from promo from Labor Day. And then all of a sudden, it'll be promo from Christmas. So I'm not sure the Fed's going to have a great idea what we're looking at unless there's a really huge swing in employment in a negative direction. I would probably bet that employment would push them faster than just sort of retail and CPI data.
How do you guys look at the international trade, right? Bank of America Fund Manager survey came out today and said that 54% of respondents think the international trade is like the place to be in the next 12 months.
We have on our team, that's something we started looking at a couple of months ago. We were, I don't want to say early movers, but we were early believers in the international trade and especially in Europe. Now, Europe had gotten beat up for a long time, but it's a place that we decided to just stay the course. And that is part of what comes with active but also concentrated portfolios where you're going ahead and saying, let's handpick 20, 30 spots, and this is where we're going to position ourselves. So thankfully, we're not having to time the market there. But we have decided to take a step and say, okay, is it European discretionary? Is it European financials? Is it European defense, right? Where do we need to go ahead and take more time and be more interested in just building up that universe? So the short answer to that question is yes. We're definitely taking a look because especially between France and Germany, we know that there's going to be more spending there. Not just defense, but in general. The world's savers are about to spend a bit more money. So how can we go ahead and orient ourselves? We have strong positions in companies like Icon, which is in pharmaceuticals, Nintendo, which I don't have to describe Nintendo, right? That's just a strong operator. But we also have positions, and these are in our model portfolios, companies like Simrise, where we're talking about different additives for scents and products like that. So being in that space already sort of gives us an advantage when that market kind of comes in the upswing.
One other name here I want to get to, United Parcel Service, the folks in Brown. What's going on there?
So that's always been one of my favorite positions. It's something I've covered ever since I've been at Motley Fool Asset Management. And it's because they have a fantastic operator. Carol Tomei is a force of nature. They've gotten beat up over the past year or so because of the labor negotiations. I think a lot of investors thought they were going to come out with a bit more of an upper hand than they did, but they've already faced a lot of those costs on the upfront. What they've gone ahead and done is shedded business that's not profitable for them. And so that business is now going to absolutely dilute pricing in the market, and they've taken themselves out of it. So when we come out on the other side of this business cycle, we feel very comfortable with our position in UPS because people find ways to buy things. When we look at the overall financing nature of just consumption at this point, we know that there's going to continue to be movement of goods. And so finding that position where they're also a solid yielder and pretty high shareholder return, we're more than happy to be there.
Great stuff, Shelby. Always love chatting with you. So fun. Shelby McFadden, investment analyst at Motley Fool Asset Management. I'm so upset you didn't coin cloud. I mean, cow.
I know. And it's just, I think the journalist who did, I want to meet that person.
Yeah.
Because What a line.
What a line. Yeah, they need to get into marketing. All right, Shelby, thanks a lot. Always wonderful to get your perspective. Let's get you caught up now with the Bloomberg Business Flash. And for that, we go to John Tucker.
All right, weak economic data, Middle East tensions driving stocks down, and oil is rising. Right now, the S&P 500, 21 points lower. That's down 0.4%. We're at 6,011. The Dow Jones Industrial Average, 93 points lower. That is down 0.2% right now. And the Nasdaq 174 points lower. That is down 0.3%. Brent crude up 2.3%, 74.90 a barrel. JetBlue Airways shares, they're dropping 3%. They have plans to cut costs by eliminating some flights, pausing retrofits, and parking some jets due to weaker than expected demand for travel. JetBlue right now down 3.6%. Then you have Verve Therapeutics, ticker symbol VERV. Those shares are soaring right now, up something like 77%. After Eli Lilly agreed to buy the gene editing startup for $1.3 billion. And the Fed opening its two-day policy meeting today. Amanda Gotti at PNC Bank says they are on hold till later this year.
The data does not suggest an aggressive stance one way or another. So we think the answer is very much stay on pause, be data dependent, and kind of see how things play out. The wild card is really what's happening with the path for WTI and energy prices.
And let's wrap up with golf news. The PGA Tour hiring Brian Rolap, who, as its chief executive officer, he's going to lead both the PGA Tour and PGA Tour Enterprises. His career spans 2 decades in the NFL, and he admits he's got a lot to learn about golf. Football, golf, both have balls. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right. Thank you so much, John Tucker. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Also check us out on YouTube as well as all your streaming devices. You can check us out on Bloomberg Originals. So Citadel recently doubled down on moving to Florida after CEO Ken Griffin brought staffers to Palm Beach during the COVID-19 pandemic. Now, since relocating to Florida, Griffin has praised the state's growth trajectory and donated substantial sums to education and other causes, including political campaigns. He sat down with Bloomberg's Sonali Basak and discussed his philosophy for giving.
When you think about your political giving, when you think about the influence that you want to have and the mark you want to make, what's most important to you?
Well, I think you need to think about the arc of one's life. In my 20s, I gave my time. I didn't have money to give in my 20s. I gave my time. I actually tutored in the inner city of Chicago and saw firsthand the challenges that these young, in this case, boys and girls face in trying to break the cycle of poverty. Like, it's really, really tough work to tutor these kids who are so far behind. And at Citadel, one of the things that we support is we support our colleagues being involved in nonprofit organizations. We have several hundred colleagues who are on the boards of nonprofit institutions across the country, giving of their time to improve other people's lives. I'm really proud of that. That's such a part of the ethos and culture of the firm. Now, over the years, time became scarcer, money became more plentiful, started to give money to support public education reform. How do we help young men and women? In Chicago, one of the things I love doing is I would help to underwrite the cost of giving books to every newborn child in the city of Chicago. It's a well-established fact that the number of books a child is exposed to early in life actually has a disproportionate impact on their entire educational journey. If I looked at all the work that I did, though, in public education in particular, I would often see that work undermined by very poor political policies. In some sense, we often put the interest of the teachers union in front of the interest of the students. And if I wanted to see kids have a chance to get ahead of the United States, I decided it was important to support politicians, both Republicans and Democrats, who put education as a very important part of their platform. And over the years, I've continued to support candidates on both sides of the aisle who really do lead with an education-first policy.
It's interesting to hear you say that, because coming into this interview, I was going to ask about what mark you wanted to make on the Republican Party, but it sounds like you're not limited to that.
I'm not limited to that. I find in general, I tend to agree with more of the policies from the Republican Party, but it's important to recognize people in both parties that really do lead the charge fighting for the interests of children.
So in the near term, I am curious, as somebody who is looking at, as you said, both parties change, what is the way that President Trump is changing the Republican Party? And where do you fit into the spectrum of ideas?
Well, let me answer a different question. Let me tell you how I'm focused on helping to change the Republican Party. One of the big pushes that we made over recent years was to substantially increase the number of people who ran for office in the Republican Party who were women, who were veterans, and who were people of color. Because I believe the Republican Party needs to do a better job of representing all of America. So that's been a big push for us over the recent years, has been bringing people with those backgrounds into public service. You know, I was an adamant supporter, for example, of David McCormick, really strong businessman, really great experience in serving our country. That's the kind of person that I want to see in Washington representing the interests of all of us who live in our great country.
You are one of the very few people who own an original Constitution. What does it mean to you these days?
I would say that the Constitution represents the pinnacle of the foresight, idealism, and intellect of our founding fathers. I mean, they created a structure of government that has not only survived, but has prospered for 250 years. I mean, it is really remarkable how the United States of America, and the history of our country is not perfect, but how this country has led the world for the last 250 years under the principles enshrined in that document.
Is there anything about that document that's at risk today?
You know, I think that people like to talk about how the current administration has put some of the principles in the Constitution at risk. I think that's largely overblown. When it's all said and done,
That was Shonali Basic's interview with Ken Griffin. You can watch the extended Bullish interview with Ken Griffin on Bloomberg.com. Plus, tune in to the new Bullish episodes on BTV every Tuesday at 6 p.m. You can catch the first one. It's already out online. Shonali Basic joins us now in studio. Give us the spiel on what Bullish is and what gave you the inspiration to go down this route?
You know, I've been covering finance here for now more than a decade, and the idea here for me was, could we give our audience a little bit more of a picture on who these people are? Because so often we talk about their fund that they run or the types of people they hire, but little do we get deeper into their philosophies. And I wanted to start with Ken Griffin because he's not only become the person who runs the most profitable hedge fund in the world. He's also built a market maker, Citadel Securities, that in many ways really identifies with the future of finance, technology-driven investing, global investing, and competition to banks. But lastly, because he's a massive force in political giving right now. And a lot of the newer names on Wall Street are also starting to shape policies in America. He talks a lot to us about how he sees his future political giving going. I think I was most surprised to hear him talk about how he's not just trying to give to the Republicans, but actually considering giving to Democrats more too. That was news to me.
So I'm just amazed just watching his career, how big Citadel. It's not just a hedge fund. The Citadel Securities thing is something that I didn't even, up until recently, I didn't have a full appreciation for, but he has really become, I mean, literally on top 2 or 3 people on global Wall Street.
Hey, listen, we started with Ken. Hopefully Jane Street and Millennium are next on the map because Jane Street similarly now makes more money in trading in a year than some of the biggest banks in the world. And a lot of Wall Street has really taken notice of that. And similarly, Millennium, I'm sure you guys have seen, they're looking to sell a stake at what would value the hedge fund firm at $14 billion. This is not just about finance becoming more entangled. Blackstone is in talks for strategic partnership with them. This is also about a generational change. What happens when Izzy Englander, the founder of Millennium, passes on the reins? What then does the company look like? And does it cement its place in the future of finance?
Right, and you can see that like with Blackstone, like that's worked, but it's been real rough for a lot of other shops.
Yeah, it's really interesting. So we do get into, by the end of it, so this is a 6-week series. You will also have extended cuts. So all the bigger interviews, you'll hear from Ken Griffin in full for almost an hour. You'll also have Harvey Schwartz. That is
nice. That's fun.
He's
so fun.
He's, you know, I'm not even going to give it away because there are things that I've learned from him about his career that I don't think in decades at Goldman that people knew. And so I think it'll be pretty eye-opening, but it's also kind of, again, about the future of finance. This was a man that was almost the CEO of Goldman and then became the CEO of Carlyle, has had to really change Carlyle a lot to look more like what the rest of the future of finance is going to look like. And for him, that means more private credit, more wealth management. And by the way, when we started filming this with him, we wouldn't have been able to know that the move to push private assets into 401ks for a much broader set of Americans would be underway.
Yep. With Ken Griffin, this Florida thing, it's not a flash in the pan. I mean, the Wall Street has moved, continues to move to South Florida, and now they're going to go through a summer, but apparently they're okay with that.
You know, Paul, we're sitting here in rainy New York.
Yes.
I said point blank to Ken Griffin, you couldn't pay me to move to Florida. And so what's the sell? And he said, you know, it's not people like you that already live in New York. It's people from countries all across the country, or states all across the country, rather.
Yep.
And so we did talk to some other fund managers. One of my more interesting ones was Scott Goodwin over at Diameter. Diameter is a fund I've heard a lot from the big trading houses because they're coming bigger and bigger in credit. Apollo is a backer to Diameter. And so they actually have one of the founders in South Florida and West Palm and the other one up here in New York. And they were like, it doesn't really matter where we are because we're on Zoom together all day anyways.
Yep.
So in my mind, it's like, let's work from home then, right?
So this first episode really is about the Wall Street to South Florida transition. Is that what this episode really encapsulates?
Yeah, and not just, it's about Wall Street South. Yes, we were surprised to see how many people had moved down there and in what capacity. But in addition to that, a lot of the move down to Wall Street South is hedge funds, is market-making firms. And that represents a lot of the future of finance also. So yeah, you definitely get Miami vibes in this episode. You get the party scenes as well. We interview Nassim Taleb on a yacht that Universa hosts a party on every year. So we give you a real behind-the-scenes look. You also hear one of my favorites in the episode is actually Maya Vander. I don't know if you've seen Selling Sunset.
Okay.
She was a real estate agent star who has then moved to South Florida, and she gives us kind of the skinny on what to expect if you're buying a house in Miami right now.
All right. Awesome.
It's really
Good
great.
stuff.
It'll come out tonight at 6. You can get it already right on Bloomberg.com/bullish. You can also find it on the terminal. Really great stuff. 6 episodes. First one drops tonight, 6 p.m. Bloomberg.com/bullish. Really wonderful reporting. Super fun. Cannot wait to see it. Shonali Bassick's been working on this for a long time while also having a TV show and a newsletter. So that's like some serious juggling there. So really looking forward to that. The thing is, we've heard too, though, is that if you move to Florida, everyone was going there, and then all of a sudden, like, the roads got really clogged, and like the schools didn't have enough space for kids.
Exactly.
Like, then it had
so the
all
infrastructure's got to catch up.
Right.
And a certain type of infrastructure, I
and
think.
catch up fast too.
Yes.
Yeah. Okay. Coming up, we are going to talk to Sid Wilson, CEO of Hispanic Association, on corporate responsibility, advanced placements, conferences, research initiatives, and the importance of DEI in a world where there is a DEI backlash. So we will discuss that with him. Also taking a look at the market, still trading a little heavy with the S&P off 0.3%.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We're on your smart TV as well. You just search Bloomberg Pursuits, and that's where you will find us. Well, June is Pride Month, so over the next couple of weeks, we are going to highlight segments on topics related to equality. Today, we're speaking with Sid Wilson, President and CEO at the Hispanic Association of Corporate Responsibility in Cannes, France, at the Cannes Lions, which I've been to many times. That is a good time. And if you don't like rosé, you're going to learn to like it there, because that's basically water over there for us folks. Sid, thanks so much for joining us here. Talk to us about the Hispanic Association on Corporate Responsibility. What do you guys do?
Sure. Well, thanks for having us on. The Hispanic Association on Corporate Responsibility, we've been around for almost 40 years. Our mission is to advance Hispanic inclusion in corporate America. I've been in my CEO role for 11 years. And before that, I was 21 years on Wall Street. I was an equity research analyst.
Oh, okay. So you're talking to your team here.
Yeah, he's reformed.
Yeah. So DEI in some ways is now a dirty word in corporations in the United States. How do you combat that?
Well, first you combat it with facts. The reality is that DEI is not a word, it's an acronym. It stands for diversity, equity, and inclusion. The opposite of that is homogeneity, inequality, and exclusion. So when we talk to companies, we talk about the facts that that diversity, equity, and inclusion is not only the right thing to do, it's also good business. Now, whether you call it diversity, equity, and inclusion, or do the work of it, you're seeing some of them that are continuing to find ways to do the work, staying under the Trump executive order radar. Without diversity, equity, and inclusion, companies will have a very difficult time competing for customers, competing for talent, and competing to be the brand of choice.
This reminds me, the change in perception of DEI kind of reminds those of us on Global Wall Street of another kind of phenomenon, which was ESG and type of investment where you focus on environment, sustainability, governance, those types of things. That seems to, at least in this country, taken a back seat. How about rest of world? How does the rest of world think about diversity, DEI in general?
Well, it's an interesting question because I'm here at the Cannes Lions Festival, and yes, those rosés are very helping when in this very hot weather. But when you talk to leaders around the world, particularly in Europe, they feel that that what's happening in the U.S. is extremely unusual because they know that the path to a successful business or operation is through having a strong and robust and intentional diversity, equity, and inclusion initiative at all levels, especially the C-suite of the boards. Because remember that, sometimes the argument against DEI is they claim that it compromises merit, which we know that is incorrect. What it does is it widens the scope for merit-based opportunities.
Mm-hmm.
The problem, though, is in the C-suite, as you know, if you're in the C-suite, you're in the C-suite because you're qualified. You're in the C-suite because you're sponsored. And sponsorship still has implicit bias, and that's where you continue to see a lack of representation for women and people of color.
I mean, absolutely. How do we combat that at a time when federal policies, particularly on the education level, are getting rolled back?
So let me first address the education component, is that colleges and universities will still need to look for ways how they can attract diverse student bodies. No university is going to want to have, let's say, an all-white male student body and think that that's normal. It's not. And when you look at the pipeline into the workforce, particularly technology, whereas all of us know there is a shortage of workers going into those tech fields. And so with that, it means that you not only need to make sure that you're looking at what you need to hire, but also looking at even the immigration policies, because immigration policy that the current Trump administration has is completely counter to filling the jobs that are needed in the U.S. to help the economy grow.
We have a red headline crossing the Bloomberg terminal here. Trump says, quote, we, unquote, now have, quote, total control, unquote, of the skies over Iran. So we'll have further reporting of that. That was a tweet from President Trump. Sid, maybe 30 seconds left. What's kind of the agenda for your organization over the next 6 to 12 months?
Well, our agenda is to continue to talk to as many CEOs as possible. We're proud that we interact with more Fortune 500, Fortune 1000 CEOs than any other Hispanic organization in the whole country. And we know that those direct conversations make a big difference to give companies the guidance and understanding of how they can use diversity, equity, and inclusion in this current environment to not only navigate through this maze that they're having to address, but also how they can still win with diversity, equity, and inclusion.
All right, Sid, really appreciate it. Thank you so very much. It was really good to talk to you, Sid Wilson, President and CEO of the Hispanic Association of Corporate Responsibility. And June is Pride Month, so over the next couple of weeks, we're going to have more interviews just like this to highlight things like equality, and we will be looking forward to doing that.
You know, back in the day, I took Univision, part of the team, took Univision Public and Hispanic Broadcasting Corporation Public, and the stats are the same. 17 to 18% of this population is Hispanic. Language, the Spanish language is still spoken in the vast majority of those households, even though they're all, acclimated and assimilated. But so if you want to reach these people, you better go through their language. So it still works today, I guess.
Here's an update for you. For our listeners in the U.S., a reminder, listen to us via satellite radio, Sirius XM Channel 121. Access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Ship Station. Stay with us. Top stories, global business headlines coming up right now.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. President Trump says he wants a real end to Iran's nuclear program. He's back in Washington meeting with the National Security Council. Earlier, he posted all people should leave Tehran as Israel continues its military attacks. CBS News White House correspondent Ed O'Keefe.
We know he is meeting here to try to get a better sense of the situation from Washington. There are questions about whether the U.S. military will get involved. So far, he has signaled that is not the plan.
From Israel, CBS's Robert Berger tells us
people would like to see the United States bomb the nuclear facility known as Fordo. That's deep underground, and the Israelis really don't have the capability to hit it.
The UN says it believes Israel's attacks have affected underground operations at Natanz, Iran's facility for uranium enrichment. In Ukraine, a Russian missile and drone bombardment has killed at least 15 people and injured more than 150 others. The worst of it, a 9-story apartment building in Kyiv was hit. It's the deadliest attack on the Ukrainian capital this year. President Zelensky called for more help from Ukraine's allies. The Minnesota lawmakers' shootings have sent reverberations far beyond that state's borders. CBS's Scott McFarlane in Washington.
CBS News has learned the House Sergeant-at-Arms will meet with members of Congress today to talk about security precautions because of the murders in Minnesota. And one longtime federal law enforcement official used the word staggering to describe the level of threats against elected leaders.
The NAACP is moving to sue Elon Musk's artificial intelligence company over air pollution from a supercomputer data center in Memphis, Tennessee. Kraft Heinz has announced it wants to remove all chemical dyes from its food products, as we hear from CBS's Michael Wallace.
The maker of Heinz Ketchup, Kraft Macaroni and Cheese, Jell-O, and Kool-Aid says it will eliminate all artificial colors by the end of 2027. In April, Health Secretary Robert F. Kennedy Jr. said he wanted petroleum-based dyes removed from all food by the end of next year. He believes they lead to chronic disease.
It's looking like Sean Combs will not testify at his federal sex trafficking trial. His lawyer today predicted a defense presentation lasting 2 to 5 days. Prosecutors hope to rest their case today after 6 weeks. The government reports a drop in retail sales last month. CBS's Jill Schlesinger says it's evidence tariffs may be one of the things shaking confidence in the economy.
This is one of the few instances in hard data that we are seeing feelings of uneasiness translate into a change of action.
The Dow is down 50 points. This is CBS News. With tariffs affecting the prices of some vehicles, there's a new list, that is, that people looking to buy a new car might want to pay attention to.
Honda had the most vehicles in the top 20 of Cars.com's American-Made Index. There were 2 Jeeps and a Chevy in that list as well. But study author Patrick Masterson says one brand shined the brightest.
Ultimately, Tesla took the top 4 spots. It's not unprecedented. That's happened before.
The annual listing takes into account where the vehicles are built, the workforce that builds them, and the parts that go into the vehicles. Jeff Gilbert, CBS News, Detroit.
The retailer At Home is filing for bankruptcy protection as part of a restructuring plan to eliminate $2 billion in debts. The home goods chain, dating back to 1979, is closing 26 of its 260 locations, according to court information. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Well, the president has a big decision to make. Welcome to the Tuesday edition of Balance of Power. As President Trump returns home early from the G7 to meet with his National Security Council on whether to join Israel offensively against Iran and close the deal on its nuclear program. We're going to get the latest ahead from Bloomberg's David Gura, who is in Canada, where the president left 6 world leaders in his wake, and from Bloomberg's Tyler Kendall, where deliberations continue at the White House. Nathan Dean will join us from Bloomberg Intelligence as SALT Republicans lick their wounds after seeing the Senate version of the tax bill. We've got new details on it, and we'll have analysis from our political panel. Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors, are with us for the duration, and we start, as always, on Wall Street. Let's start right now with Charlie Pellet at World Headquarters in New York. What do you see, Charlie?
Right now, seeing a lot of red. Joe Matthew with the Dow, the S&P, NASDAQ, all declining. Just over 24 hours to go until we get the latest FOMC decision. Right now, we're dealing with weak economic data and concerns about an escalation of risks in the Middle East. That is driving stocks down and bonds higher. Right now, the S&P is down 15 at 6,017, a drop of 0.2% on the S&P. The Dow down 59, down 0.1%. NASDAQ lower now by 46 points, down 0.2%. The 10-year yield 4.41%, with a 2-year 3.96%. Gold down 0.2%, 33.79 the ounce, and West Texas Intermediate crude up now by 2.5%, 73.54 for a barrel of WTI. As for markets and global tensions, Alicia Levine is head of investment strategy at BNY Mellon Wealth Management.
We've done a study of all of geopolitical hot conflicts, crises, going back really to the 1950s. And what you see is that absent a sustained rise in energy prices, the immediate trade of risk off, markets down, really gets priced out of the market after 3 to 6 months.
Alicia Levine of BNY Mellon Wealth Management. The Trump administration is discussing policies that would make it harder and more expensive for pharmaceutical companies to advertise directly to patients in a move that could disrupt more than $10 billion in annual spending, ad spending. AbbVie and Pfizer are particularly big spenders. AbbVie alone spent $2 billion on direct-to-consumer drug ads last year. Shares of both companies are lower. AbbVie down 1.7%. Pfizer lower now by 1.1%. Recapping, stocks lower. S&P down 13 points, down 0.2%. Balance of Power continues right now. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet. Thank you so much, Charlie, and good to see you. Welcome to the Tuesday edition on the early side on Balance of Power. That means Bloomberg Radio, satellite radio, channel 121, YouTube as well. Dial us up on YouTube by searching Bloomberg Business News Live. You can watch us live as well on Bloomberg Originals. And we have breaking news because that's what we do around here at high noon on the East Coast. The IDF identifying missiles, this just crossed the terminal, launched from Iran toward Israel. We have another wave with missiles in the air right now as we start our broadcast live from Washington. And we're going to keep tabs on this as we walk from Canada to Washington, retracing the footsteps of Donald Trump, the president of the United States, over the past 12 to 24 hours here. He ditched the G7. He left early. We know this. It happened late yesterday to get back to Washington presumably to manage the affairs surrounding Israel and Iran. The president had asked for his National Security Council to be assembled in the Situation Room this morning. They did have a scheduled 11 a.m. meeting. And before we saw this headline cross on missiles being launched, the President of the United States took to Truth Social. This is a short time ago, just before we took air. We now have, he writes, complete and total control of the skies over Iran. Iran had good sky trackers, he says, and other defensive equipment, and plenty of it, but it doesn't compare to American-made, conceived, and manufactured stuff, in quotes. Nobody does it better, he writes, than the good old USA. Now, of course, we are waiting for a decision by the president. We're going to be exploring this question, unless, of course, he answers it during our program, about what to do here and whether the U.S. should, in fact, get involved offensively in this effort to eliminate Iran's nuclear weapons program. Like I said, we're going to retrace the president's steps, bringing us back to Canada and the G7, where a group of world leaders are looking around the room now without the president of the United States to speak with them. Having initially declined to sign the G7 statement on Iran, the president reversed his position. This is interesting. According to an official, declined to say what the changes were here, but the president has signed off on a statement condemning what's happening in Iran, calling for both Iran and Israel to show restraint. Appeared in an earlier draft of the agreement that has been changed. Now, David Gura is still in Banff, Canada. He's with us right now in the Canadian Rockies for the latest on this. What's the feeling, David, now that he's gone, and what were you given for a reason?
Well, what we heard from the White House yesterday after this was announced is the president had to get back to Washington, had to deal with the Middle East, and indeed we heard that from the president directly as he went through the routine of standing for that family photograph yesterday before dinner. He sat down for dinner, had that dinner with world leaders before he got on Air Force One and made that long flight back to Washington, D.C., a long flight on which he was able to fire off a few posts, further explaining his rationale for leaving. President Emmanuel Macron of France suggested, as world leaders were processing what had happened, that maybe the president had done this because he saw a role that he could play as a kind of peacemaker, that he could establish a kind of temporary ceasefire between Iran and Israel. And on that flight back, the president really pushed back on that, had some cross words for the French president and said he's interested in something more durable, an end to that conflict between Israel and Iran. We'll see what happens, but this opens up just a huge amount of questions here about what the U.S.'s engagement is going to look like going forward here. And you laid it out, Joe. There is that military track. Does the U.S. get involved by sending the kind of support that Israel doesn't have and getting involved in the conflict that way? Or does it pursue this diplomatic track? And over the course of this summit, the first day of it at least, President Trump said over and over again the solution had to be diplomatic. He said that Iran had to get back to the table, and indeed said that Iran was at the table. It had no other choice but to be there. That statement is so fascinating because, again, we saw it evolve over the course of the day. We saw the president finally agree to it, acquiesce to it, I guess you could say, after that dinner with those other world leaders. Interesting also at the bottom of it, Joe, a nod to the fact that there could be some market volatility here as well, and the G7 nations standing ready to make moves if they needed to, if that persists.
Really interesting. You mentioned the comments about Emmanuel Macron, who suggested indeed the president was on his way home to maybe get a ceasefire accomplished here. The president takes to Truth Social. This is 1 o'clock in the morning on Air Force One. Publicity-seeking President Emmanuel Macron of France mistakenly said, "I left the G7 summit in Canada to go back to D.C. to work on a ceasefire." Wrong, he writes. He has no idea why I am now on my way to Washington. David Gura, is there a fear in Canada about what the president might do now that he's gone?
I don't know if it's fear, but I think there's a lot of kind of leaders here questioning what's going to happen next. And again, there was that effort which culminated in that statement of these leaders to work together in a way that the G7 has historically, to get all of these allies on the same page and present this kind of unified front. You look at that statement, yes, there's an acknowledgement of Israel's right to security, a criticism of Iran, the mention of the markets that I talked about, and this urge for Iran and Israel to de-escalate, but nothing really concrete, no real teeth in that statement about what's going to happen here next. So I think they're watching as we are, and now we find ourselves here looking at this official agenda, watching it unfold as it did or would have had President Trump remained here. Vladimir Zelensky, one of many world leaders invited by Mark Carney, the Prime Minister, to come here as invited guests of the G7, going through the routine of meeting with world leaders. Mark Carney, the Prime Minister, just announcing $2 billion Canadian worth of support for Ukraine going forward here, a raft of new sanctions on Russia. These are things that it's safe to say the Ukrainian president wanted to discuss with the president of the United States as well. Could there be an effort for the U.S. to provide more support, financial and military? Now he doesn't have that opportunity to sit down with him on the sidelines of this event to make that case once again to the U.S. president.
Really important. And great reporting from David Gura. He's got the place to himself now in Banff. What a beautiful shot again, David. Thank you so much. Live from the Canadian Rockies, not far from Kananaskis in Banff, where they're going to be rounding things out without the president. So let's go to where the president is. That's the White House. Bloomberg's Tyler Kendall has been at the White House all day waiting for news to come from the Situation Room. We don't have anything on the schedule here, Tyler, at least yet. Do we think we hear from the president today?
Yeah, hey, Joe. Well, it's been our understanding that President Trump has been inside the Situation Room and still no public events on the schedule. But we did get that post on Truth Social earlier, which could indicate that we could hear further from the president later on today. And you mentioned some of it at the top of the program, but it is worth reiterating that about 15 minutes ago, the president posted saying that, quote, "We now have complete and total control of the skies over Iran. Iran had good sky trackers and other defensive equipment, and plenty of it, but it doesn't compare to American-made, conceived, and manufactured stuff," in quotes. Of course, this definitely heightens the U.S. support of these ongoing Israeli strikes. And the question being here at the White House is, what is U.S. involvement going to look like moving forward? The White House officials say that they are maintaining that defensive posture, though they did move military assets into the region. And analysts tell us that if the U.S. were to get involved, it likely wouldn't be troops on the ground, but it would be air or sea assistance. So we're watching this very closely to see if officials do announce that they are moving into that more offensive position. And we sort of saw speculation heighten after a post from the vice president earlier today, J.D. Vance taking to X and saying that the president, quote, "may decide he needs to take further action to end Iranian enrichment," of course, talking about Iran's nuclear program, which President Trump has said is really at the crux of this, that he wants them to abandon those ambitions. In fact, the White House circulated to us reporters here a fact sheet of all the times that President Trump has called for this earlier, saying that he's called for it no less than 15 times since taking office. We should note, though, Joe, as David Gura was mentioning, the potential for diplomatic de-escalation. The president did say earlier today that he would consider dispatching either Vance or Special Envoy Steve Witkoff. If it potentially came to that, of course, that would be a big development that we're watching closely.
I'm really glad you mentioned the post from J.D. Vance, Tyler, because it gets to an interesting component of this whole story, and that's the way this is being felt in MAGA world. So to your point, the White House is really trying to drill down here on consistency by the president. No nukes for Iran ever. J.D. Vance went on to write, he may decide he needs to take further action, as you said, Tyler, but I believe the president has earned some trust on this issue. And it follows President Trump's post on Truth Social about 16 hours ago. Somebody please explain to Kooky Tucker Carlson that Iran cannot have a nuclear weapon. We've only got about 30 seconds here, Tyler. It speaks to the pressure he's feeling on both sides.
Definitely, and it does risk perhaps widening a rift within his base of supporters after he did campaign on removing the U.S. from foreign entanglements when it comes to national security concerns. And I would just also point out that then Senator J.D. Vance was one of the most vocal opponents when it came to stopping aid flows to Ukraine. So it's interesting to see him weigh in on this issue as well.
Absolutely. Tyler, stay close. If the president speaks, Tyler will bring it to us here on Balance of Power. Tyler Kendall at the White House. I'm Joe Matthew in Washington. Glad you're with us on the Tuesday edition of Balance of Power. The IDF says missiles are in the air right now from Iran to Israel. We have a lot more to talk about here on the fastest show in politics. Stay with us on Bloomberg.
everyone. On Wall Street, we do check markets all day long here at Bloomberg. Stocks are lower across the board. We've got weak economic data on this Tuesday. Also concerns about an escalation of risks in the Middle East. They are driving stocks down. Bonds rose. Traders gearing up for tomorrow's Federal Reserve decision. Oil is moving higher. West Texas Intermediate crude up 2.8%, but stocks lower with the S&P down 13 now, a drop there of 0.2%. The Dow down 44, down 0.1%. NASDAQ down 41, a drop of 0.2%. 10-year 4.40%. The 2-year currently yielding 3.94%. Spot gold down $5 the ounce, down 0.2%. And again, West Texas Intermediate crude 73.81 a barrel, up by 2.8%. They are once again heading for the shelters in Israel. The IDF identifying missiles launched from Iran toward the territory. That according to a post on X. IDF says defense systems are operating to intercept the threat. We'll have more coming up in just a moment right here on Bloomberg Balance of Power. In the meantime, Reuters is reporting that the U.S. is deploying more fighter aircraft to the Middle East. Kraft Heinz says it will remove synthetic food dyes from all of its products by the end of 2027. Right now, we've got shares of Kraft Heinz. They're up on a down day for the rest of the market, up by 0.8%. Recapping, S&P down 2, oil surging up 2.7%, and Balance of Power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, thank you so much. As we watch Wall Street, we are also watching Truth Social. It does seem as if Donald Trump has got himself out of the Situation Room, unless he's posting on his phone from there or was taking a break, because we're seeing a flurry of posts now on social media with regard to Iran, knowing, of course, as we just told you, he left the G7 in Canada early and has come back to the United States to meet with his National Security Council to figure out the way forward. Now, I want to remind you, and if you're just joining us, the IDF said just at the top of the hour, about 20 minutes ago, that Iran launched a new round of missiles toward Israel. They are in the air now. Presumably, we're keeping eyes on the skyline of Tel Aviv and, of course, other cities and areas inside Israel. Donald Trump is watching all of this, and he's posting just now, unconditional surrender. 2 words, all caps, exclamation point, on Truth Social. This followed a pretty interesting post only about a minute earlier. Donald Trump writes, "We know exactly where the so-called supreme leader is hiding. He is an easy target, but is safe there. We are not going to take him out. Kill," he writes in parentheses, "at least for now. But we don't want missiles shot at civilians or American soldiers." He says, "Our patience is wearing thin. Thank you for your attention to this matter," exclamation point. There may be more where this came from. They've called a lunch lid, as they call it, at the White House, which means we're essentially standing by for his schedule for the second half of the day. If the president emerges, we will, of course, bring you anything that he says live here on Bloomberg. I want to point you to the top of our next hour, by the way, with regard to all of this. We have a special guest, a special conversation, and I suspect we're going to learn a lot when we spend some time with retired General Frank McKenzie, former CENTCOM commander. He's now with the University of South Florida's Global and National Security Institute, but this is someone who has had the job and has had to recommend ways to make decisions like this to the President of the United States. Stay with us here on Bloomberg. We've got a lot more coming out here on all of this as we also keep our eyes on the other end of Pennsylvania Avenue. This is a very busy time, knowing that reconciliation is still making its way through the Congress. And yesterday, while we were talking so much about geopolitics, was a critical day. The Senate Finance Committee put up its form of legislation that has a big difference from what we saw in the House when it comes to things like SALT, when it comes to Medicaid and so forth, when it comes to green incentives. If you have solar stocks, you know what I'm talking about. We spoke about this with Congressman French Hill, the chair of the House Financial Services Committee, on the late edition of Balance of Power, knowing there are huge differences between these two versions. Here's what he said.
There's room in the spending proposals for Senate review and Senate changes. But it's not like you're going to tear the whole house down and build a new house. Mike Johnson and Leader Thune are working hand in glove with the Trump administration. I hope the Senate can make progress so that we can deliver that bill to President Trump before Independence Day in just a few days.
Yes, sir. That's the deadline still, the 4th of July. That's when Nathan Dean sets off the fireworks, and he's with us right now. Of course, senior policy analyst at Bloomberg Intelligence and our guide through the darkness here when it comes to reconciliation. Great to see you, sir. So they dropped the Senate finance version. Everybody's upset. Wouldn't want to be a SALT Republican right now. Wouldn't want to be a solar investor right now. Let's start there, because these solar stocks are going through hell today. What just happened?
Yeah, so, I like to call that these solar stocks have hot sauce. I used to say that with marijuana stocks.
Yeah.
Now it's the solar stocks. Because on Friday, most of these stocks, we're talking like First Solar, Enphase, Sunrun, Solar Edge, they were up 10, 15, 20% on Friday. Yeah. And then on Monday night, we get this language with the solar tax credits were actually more aggressive than what the House had gone in terms of phasing out. Okay. Now, most of these will phase out by 2028. Under the Inflation Reduction Act, we were looking at 2031. Now, the other thing here to keep in mind is that, the IRA was actually more beneficial to things like nuclear, geothermal, hydropower. But for these solar stocks in particular, we're seeing companies down 30, 40% today because, and this is the note that we just put out a few hours ago, or actually just about an hour ago, I'm not sure that the moderate relief for the Inflation Reduction Act is going to be coming when they get to the full Senate debate. Because, yes, you will hear senators talking about, debates over Medicaid, SALT, and so forth like that.
Yeah.
But when it comes to the Inflation Reduction Act, Senator Tom Tillis said he was generally supportive or generally satisfied. And to me,
that was your troublemaker.
That was my troublemaker. And so I actually think that, when this bill becomes very close to final, I think it's going to look very similar for these clean energy tax credits to where the Senate Finance Committee dropped it.
As opposed to, say, SALT. They didn't really commit to something here, right? It says $10,000, but we're told it's a placeholder. What's the exercise room?
I think there's some pretty angry senators at the moment. And what I mean by that is that the Senate usually has its way with the House. And the Senate says, look, House Representatives, you're going to take this and you're going to like it. There is no desire to increase that $10,000 cap of the SALT amongst those Senate Republicans. If they had their way, they'd probably just go back down, go to zero. But they have to recognize the fact that there is a salty caucus in the House. Yeah. And if I'm Representative Lawler and I'm, one of those Long Island Republicans that's really fighting for this, I'm going to tell the Senate, no deal. Now, I think they could potentially come down to like $30,000. So we're telling our clients, look, that $30,000 to $40,000. But look, with the margin of, votes in the House of Representatives so thin as it is, if that salty caucus tells the Senate, look, no deal, we're not going to negotiating, ultimately, I think the Senate Republicans are going to have to bend on that. And that's why we think
that's what they're saying, right?
Yeah, that's why we think the SALT deduction is either going to be around that $30,000 to $40,000.
Interesting. Wow. So that goes back to where we were. How about Medicaid? This is another huge sticking point on the House side. The Senate digs in even further.
Yeah, exactly. So the Senate went a little bit more aggressive. Our colleague Dwayne Wright put out a note early this morning, essentially that he thinks that the Senator Josh Hawleys of the world, those that are concerned about the scale of the Medicaid cuts, are going to win this fight, and we are going to see a mitigation factor, especially when it comes to the provider tax.
That's what we're talking about here.
Exactly. And so I think what you'll see is the next couple of weeks, and we think that, Senator John Thune wants to have a vote potentially as soon as next week. I don't think it's going to happen. I think the Senate vote's going to come probably right after the 4th of July. And between now and then, I think you're going to see the debate over two things. One, Medicaid cuts, and we think that's going to be a bit scaled back, be a little bit more favorable. And second is going to be the deficit. You're going to see the Senator Ron Johnsons of the world come out there and say that we're not happy about the deficit, but he also included language just a couple days ago that we're getting on the right path.
Fascinating. Okay, so we're asking Ron Johnson to come and talk to us a little bit later on. That's where you start the conversation here, right? Because the senator is pointing everybody to debt and deficits. And we just found out that permanence is, in fact, going to be in the bill when it comes to the 3 business tax breaks that we talked about. So this money's got to come out of something. That's why they're looking at SALT and other areas to make the difference, right?
Yeah, well, I mean, this entire process that they're going through is like my son's carnival toy, where if you squeeze it in multiple directions, you can't ever get it to be equal, you know, and I'm trying to get rid of that toy. But, the challenge that Senator Johnson has is because, look, if he comes out and says to Senator Thune, I'm not supporting this unless you cut more, well, Senator Hawley's like, well, look, I'm not going to support it unless you cut less. And so, ultimately, that's why we always go back to this idea that the deficit is the most likely impacted here, because it's much easier for these senators to say, and for these members of the House, that I'm going to vote on something that President Trump just wants me to vote and be done with it, that ultimately impacts the deficit in 5 to 10 years, than it is to vote for something where my constituencies will be harmed potentially as soon as next year.
Are the SALT Republicans the only members of the Republican caucus, the Republican conference, I should say, who are a no vote if they don't get what they want. In other words, allow the Trump tax cuts to expire. That's a pretty rare breed on Capitol Hill. The conventional wisdom is no one actually is going to vote against this bill because you're going to be voting for a massive tax hike.
So I may be a little bit out of consensus here.
Let me know.
We saw language from Representative Chip Roy saying that he's a no.
Okay.
But I go back to the continuing resolution fight from March. There were a lot of no's until President Trump got in there and said, are you going to derail my efforts?
Right.
And then they became yeses. But if I'm Representative Lawler, if I'm a member from the Long Island Republicans, or if I'm outside of New York City,
yes,
it's not like you're going to get a MAGA Republican to primary me. You know, a lot of these districts, Senator Gillibrand won as well.
So they have enormous leverage.
They have enormous leverage.
And the White House knows this.
And Matt Miller even said on Bloomberg TV this morning that if you aren't going to vote for this, you're not going to get reelected. Now, you know,
right.
So I just take that to be that I think that these salty Republicans are going to really stick. And that's why I think that they may give up 10,000. But if they go to 30,000 and the Senate Republicans say, let's meet at 30, then I think they take the deal.
If you want Matt Miller's vote, 30,000. You just got it from Nathan Dean at Bloomberg Intelligence. Genius Act is going to pass today.
Yes. So the Genius Act, this is a stablecoin issuer bill. It's been going through.
This is a big deal.
Look for the vote around 4:30. It passed cloture 68-30 on Friday. Significant Democratic support. I think this passes fairly easily. I think those Democrats that voted for it on Friday show up again today. And then it goes to the House. Now, the House has two choices. They can alter the bill, and there has been some rumblings about potentially altering this bill to allow stablecoin issuers to pay interest. So if I give you $10, then you can pay me interest based off of that $10. Right now, that's prohibited in the Genius Act.
I see.
I think the House, though, even though they're talking about it, I think the House takes the easiest solution to say, we're just going to pass the Senate bill and get it out of here and get it to the president's desk.
What happened to the credit card, guys? The swipe fee bill?
Yeah, so Senator Marshall
tried... This was the big dark cloud hanging over this.
They tried to attach the Credit Card Competition Act to it. As soon as Senator Marshall did that, Senator Hawley's like, whoa, wait. I'm going to attach my bill that caps credit card interest rates at 10%. And next thing you know, you had an enormous amount of amendments being attacked. Senator Thune, I think, and I obviously don't want to speak for the senator, but I think got somewhat frustrated by it, said, I'm wiping the amendment tree clean. We're going to put on a new amendment tree. No more amendments. Let's just pass this thing.
Incredible. Wow. This is how the sausage is made. This is why we love spending time with Nathan Dean. Many thanks to you. Keep your eyes. Genius Act, as Nathan said, about 4:30 p.m. Eastern time, we expect to vote in the Senate. We've got some breaking headlines here that I have to mention on the terminal. This is a riot as they just keep on coming here from New York City. Mayoral candidate Brad Lander, of course, the city's comptroller, has been arrested while at immigration court. The Associated Press is just putting up these headlines, and we'll have more for you as we learn more. We'll assemble our panel next. Jeannie Shanzano and Rick Davis are with us, Bloomberg Politics contributors, with a massive decision looming for President Trump today. He's met with his National Security Council, now needs to decide whether to join Israel offensively in its attack against Iran, which, by the way, has launched a new round of missiles toward Israel since we've taken air at high noon. Stay with us here. Much more to follow. Live from the nation's capital, I'm Joe Matthew. This is Bloomberg.
12:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing political story here in New York City. City Controller and mayoral candidate Brad Lander has been arrested by federal agents at an immigration court this morning as he was trying to, quote, accompany a person out of a courtroom. A reporter with the AP witnessed Lander's arrest at a federal building in Manhattan. The person Lander was walking out of the courtroom with was also arrested. We're also keeping tabs on the Middle East, where the IDF has identified missiles launched from Iran toward Israel. Meantime, Israel claims to have killed a top Iranian general as it trades more strikes with its longtime foe. Weak economic data and concerns about an escalation of risks in the Mideast driving stocks lower. S&P right now down 13, drop there of 0.2%. We've got the Dow down 34, a drop there of 0.1%. NASDAQ down 48, a decline of 0.2%. 10-year 4.40% with a 2-year currently yielding 3.94%. Gold little change down 0.1%, 33.81 an ounce, while West Texas Intermediate crude is now higher by 2.6%, 73.63 a barrel. As for Washington markets and the deficit, Kay Herr is Chief Investment Officer at JP Morgan Investment Management.
Treasury Secretary Bessent is a markets guy. He and the president are very focused on what the bond market is doing. And I think if you look at our fiscal situation, while I wouldn't say that it's pristine, we are certainly far better than an economy like Japan, which has much worse deficits.
Kay Herr, Chief Investment Officer at JP Morgan Investment Management. JetBlue Airways plans to speed up cost reductions by eliminating some flights. JetBlue shares down now by 3.5%. And JP Morgan Chase will hike the annual fee on its popular Sapphire Reserve card to $795. Shares of JP Morgan Chase unchanged right now. American Express, which is also reshaping its biggest cards, its travel-focused platinum cards, is also trading lower. AXP down now by 0.1%. Balance of power continues right now. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. Times of Israel saying there are no reports of impacts from Iran's latest ballistic missile attack. I mentioned that because we started the program at noontime Eastern with news from the IDF that another round of missiles had been launched from Iran. It does seem the Iron Dome was doing its job today. Just finished watching video here, remarkably, of the New York controller being arrested. They threw him against the wall pretty good, got roughed up pretty good. As we told you, Brad Lander, you heard Charlie mention this, arrested at immigration court today in New York, AM New York, grabbing the video and bearing witness. Apparently he was walking arm in arm with an immigrant who federal agents moved to seize after a court hearing. I'll let go if you show me a judicial warrant, he repeated. I would like to see the warrant, then I will let go. Seconds later, the officer said, take him in, threw him against the wall, forcibly removed Lander, pushed him against the wall, cuffed him, and took him away. I suspect we're going to be hearing from Controller Lander at some point today, a mayoral candidate, I will add. I'm Joe Matthew in Washington. Glad you're with us here on Bloomberg, the Tuesday edition. We've got a lot going on. As I mentioned, the new wave of missiles from Iran hitting just as President Trump presumably emerges from the Situation Room. I say that because he was to meet with his National Security Council at 11 a.m. Eastern Time. About an hour later, the Truth Social post started flying. We have complete control over the skies of Iran, he wrote. Unconditional surrender was another, 2 words, exclamation point. And most recently, he says, we know exactly where the so-called supreme leader is hiding. If you're with me on YouTube, you can follow along on the screen here. It's been quite the barrage. Donald Trump writes, he is an easy target, but is safe there. We are not going to take him out, kill, in parentheses, at least not for now. But we don't want missiles shot at civilians or American soldiers. Our patience is wearing thin. Thank you for your attention to this matter. He's facing an enormous decision that we're going to talk about with General Frank McKenzie in our next hour about whether the U.S. should, in fact, be involved offensively, not just providing support for Israel's offensive actions against Iran, but actually having our pilots in the air dropping weapons, providing bunker busters and so forth. This whole prospect is creating a fissure in the MAGA world. Donald Trump's base speaking openly about this. We've touched on this a little bit in the past couple of days. Tom Massey, not exactly a great friend of the president here when it comes to legislation, Republican, writing on Twitter, "This is not our war, but if it were, Congress must decide such matters according to our Constitution, introducing a bipartisan war powers resolution to prohibit our involvement." Marjorie Taylor Greene, pray for our troops, pray for the innocent people in Israel and Iran, pray that we are not attacked on our homeland after our border was open for 4 years. War has bad consequences, she writes. We voted for America first. Cue Vice President J.D. Vance. Are you with me? Cece is just cranking through the tweets here because it's been one of these days. Really interesting to hear the Vice President talk about this, knowing, of course, that the MAGA community has great concerns about the idea of U.S. involvement, whether it's boots on the ground or not. He writes, Trump may decide he needs to take further action to end Iranian enrichment, but I believe the president has earned some trust on this issue. I don't know if you heard Tucker Carlson talking about this with Steve Bannon, but the president was clearly listening. Taking to Truth Social, somebody please explain to kooky Tucker Carlson that Iran cannot have a nuclear weapon. This is a difficult decision for him domestically for obvious reasons. We assembled our political panel for their take on it. Jeannie Shanzano and Rick Davis are here, Bloomberg Politics contributors. Jeannie is Senior Democracy Fellow with the Center of the Study of the Presidency and Congress. Rick, Republican strategist and partner at Stone Court Capital. Rick, we've been through this a couple of times here, and as the Republican on our panel, I wonder your thoughts today when you look at the rhetoric from MAGA versus the rhetoric from the White House that is now going out of its way to point to a consistent message from Donald Trump that he has always said Iran cannot have a nuclear weapon. Is that good enough?
Well, that's going to be their line for a while. I mean, look, Donald Trump has flip-flopped on a lot of these. He was in Saudi Arabia just last month saying that military action will not solve the problems in the Middle East with Iran. He gave a compelling argument for peace. Even yesterday, he was talking about going back to get a ceasefire, to sign a peace deal. You know, I mean, he's been pretty consistent on this, but then he got the backlash, you know, from MAGA. Same thing he got on Medicaid, same thing he got on other issues like immigration. They just lifted the ban on going after illegal immigrants on farms and in hospitality. It was just early this last week that he said, no, we can't keep going after immigrants in those places. So we're seeing a lot of shifting dynamics, all driven by this point you make, Joe, which is how do you make MAGA happy by trying to do the things you think need to get done in the country? And I really think this is a political dilemma, not so much for Trump. He'll never be on a ballot again. But how does MAGA keep the sort of clear messaging that they've had since Donald Trump took control of the party in 2016? And how does the next inheritor of MAGA do that at a time when right now, 6 months into the administration, they seem to be upside down on these messages on a daily basis?
Jeannie, let's presume that Donald Trump does not want to attack Iran or have American forces have their fingerprints on this. So we've got a pressure campaign, Operation Pressure Cooker, underway since he left the sit room, tweeting, truthing directly at the Ayatollah. In one case, he says, we know where the supreme leader is. Now we've got these headlines from German Chancellor Merz. This just crossed the terminal. Germany's chancellor says the U.S. will decide today whether to join the Iran conflict. U.S. decision depends on whether Iran negotiates. We have also just learned that Donald Trump will meet with his national security team at 1 p.m. Eastern time. That's according to Axios. Jeannie, what is this all building up to?
Well, this is probably so far the most consequential moment of Donald Trump's administration. And I thought it was fascinating looking at the tweet that, or the post on X that Cece was just putting up by J.D. Vance, who is the next inheritor of MAGA, you would assume, as the sitting vice president. And what does he say there at the end? He says of Donald Trump, he's only interested in using the American military to accomplish the American people's goals. Can anybody explain to me how that is any different than the justifications presidents going all the way back, but specifically the 25 years J.D. Vance mentioned as something of deplorable, how that is any different. That is what presidents from Bush to Obama to Clinton, they all say that. And that is the problem that Donald Trump has himself in. He ran promising his supporters a different type of U.S. foreign policy, that he was the peace president. We were going to be American first. We were not going to be entangled. And yet within less than 150 days, he is trying to convince them that if he decides to use the American military, that is in the American public's best interest. He got himself in this position. It's the same position most American modern presidents have themselves in. It is easier to run and overpromise than to sit in the Situation Room and at the Oval Office and deliver. Yeah. And so that is when Merce puts this out, he is going to have to decide, but it's going to be a fraught political decision for him, let alone the humanitarian and human costs of all of this.
Rick, it's almost like the president's trying to show us his math, so there's no second guessing after the fact. This real-time running of headlines here, producer James barely keeping up with the headlines in real time from the White House. He wants us to be talking about this, so we apparently know that there was a deliberation that led up to that decision. What do you make of this approach?
Yeah, look, I think he's actually trying to reset the dialogue. Remember, for a month, he's been talking about peace, peace, peace. You know, he's given them 60 days to cut a deal in Tehran. He goes to Saudi Arabia and gives a speech all about peace in the Middle East. And now he's presented probably with a pretty attractive option. Gee, a couple of B-2 bombers, a Moab dropped on, you know, a nuclear facility that the Israelis can't get to, and boom, we're no longer negotiating an end of the nuclear program in Iran. You've just destroyed it. That's to a guy like Donald Trump. That may be actually better than a negotiation, and that guy loves to negotiate. And so, you know, at the end of the day, he's kind of trapped by his own rhetoric. And so I think what you see today is a guy trying to catch up with events. I mean, I'll bet you he started the week without any idea that it would go so fast, so well for Israel, that he'd be in the position of, quote, unconditional surrender of the Iranian population to who? The United States? We're not even involved in the conflict. I doubt if they'll ever surrender to the Israelis. But the Israeli campaign, Rising Lion, has been so successful, so fast, that it may have overtaken everybody else's concept of how to unravel the Iranian nuclear program to a point where now everyone, not just the President of the United States, is trying to catch up.
Well, Jeannie, we're going to talk to General McKenzie about this next hour. The president's sitting in the White House right now. Do I send those B-2s over? They're already there, actually. Do I put American pilots in the cockpit and have them go to Fordo or not? What will drive his decision?
It's going to be a very tough decision. And the White House is trying to say, to your earlier point, going back to a book he wrote in the mid-2010s, 2011s, he has been committed to the fact Iran should not have nuclear weapons. There's hardly a person you can find in the West who believes Iran should have nuclear weapons. But that is really not the point today. The point today is, how do you achieve that goal? And this president came in 2018, blew up a deal that gets us in the position where we are today. And Rick was just talking about how he was going around the Middle East and he was talking about peace, you know, in negotiations, Steve Witkoff and all else. But from the perspective of the Iranians, he was being duplicitous. He was not being honest. If he had been honest about that, he would not have given them the allowed or turned a blind eye to Israel's attack on the 61st day when negotiations were scheduled for the 63rd day. So the president is going to have a difficult time having it both ways. That's both in the international community, and that is also for his MAGA base, who are talking now about a civil war. And of course, you were hearing, and you mentioned this earlier, from members of Congress, whether it is Tim Kaine on the Democratic side or Massey on the Republican side, who are saying this is up to Congress. So all of these things make this a very difficult decision. I suspect the decision is already made looking at J.D. Vance's tweet. they are going to use.
We're about to find out here, Jeannie. Hold that thought. Jeannie and Rick will be back with us in our second hour. Indeed, Axios out with another headline. President Trump to make the policy decision on Israel-Iran today. 1 p.m. he meets with the National Security Council. That's in 5 minutes. We'll have a lot more in hour 2 of Balance of Power straight ahead, only on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump calls for unconditional surrender in Iran. Welcome to the Tuesday edition of Balance of Power as the president returns home early from the G7 to meet with his National Security Council at the White House to make a decision on whether to join Israel offensively in its attack against Iran. We're going to get the latest ahead from Bloomberg's Tyler Kendall live from the White House and from Bloomberg's David Gura, who's still at the G7 summit in Canada, where the president left a group of world leaders in his wake. We're also going to bring you an important conversation with retired General Frank McKenzie, former CENTCOM commander, on the way forward here with a decision expected as soon as today by the President of the United States. Wall Street is watching all of this, and it's not playing terribly well. Charlie Pellet joins us right now from World Headquarters in New York with his look at the markets. Charlie?
And good day from New York, Joe Matthew. In fact, we are at the lows of the session right now with the Dow, the S&P, and NASDAQ all in the red. S&P currently down at 29 points, drop there of 0.5%, holding just above 6,000, 6,003 where we stand now. The Dow's down 143, down 0.3%, while NASDAQ is down 118 for the NASDAQ Composite Index, a drop there of 0.6%. We have got the 10-year 4.40%, the 2-year 3.94%, gold down $2 the ounce, 33.83, a drop there of 0.1%, a surge for West Texas Intermediate crude on heightened tensions in the Middle East, up 3% now, WTI at 73.89 a barrel. Stocks are declining as President Trump plays down a potential truce between Israel and Iran. Traders also preparing for the Fed rate decision tomorrow. The Trump administration, meanwhile, is discussing policies that would make it harder and more expensive for pharmaceutical companies to advertise directly to patients in a move that could disrupt more than $10 billion in annual ad spending. Two of the biggest advertisers are AbbVie and Pfizer. AbbVie alone spends $2 billion on direct-to-consumer marketing. Right now, we have got shares of AbbVie down 2.1%, Pfizer lower by 1.1%. Again, recapping, stocks lower with the S&P 500 index down 0.5%. And balance of power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. Keeping tabs on Wall Street for us. We'll get back to Charlie a bit later this hour to see how the Tuesday trade is evolving with, of course, Wall Street again bumping into Washington and a looming decision now for President Trump on what to do, whether to join Israel offensively against Iran. He's back at the White House today, as we told you, having left the G7 in Canada early to deal with these matters. And we've seen a flurry of posts on Truth Social demanding unconditional surrender in one case to Iran, and going even further to write about Iran's supreme leader. We know exactly, he writes, where the so-called supreme leader is hiding. He is an easy target, but is safe there. We're not going to take him out. He writes, kill in parentheses, at least not for now. But we don't want missiles shot at civilians or American soldiers. Our patience is wearing thin. Thank you for your attention to this matter. The question, of course, whether the U.S. should go further than providing logistical support to the Israeli military, the Israeli Air Force, the IDF, whether, in fact, the U.S. should put American air crews in B-2 bombers to deliver bunker-busting bombs that are needed to get to the deep underground enrichment facilities like Fordo that we've talked about inside Iran. I discussed the idea of U.S. involvement and whether it was essential. Right at this time yesterday, in a conversation with Ron Dermer, Israel's Minister for Strategic Affairs. Here's what he said.
The U.S. has been tremendous in the support that it's given Israel from the beginning of this war on defense. There's an understanding, frankly, Joe, in America, and not just Israel, that when we are fighting Iran, we're not just fighting for ourselves. We're fighting an enemy of the United States. So when we're taking them on, we are fighting your fight. And actually, our victory will also be an American victory, and I think it will help turn the region into a different direction.
Let's see what the thinking is at the White House right now. Bloomberg's Tyler Kendall has been there all day and joins us live from the North Lawn. Tyler?
Yeah, hey, Joe. Well, it's our understanding that the U.S. has been in close contact with its Israeli counterparts. President Trump has been in the Situation Room getting updates. And then about an hour ago, as you mentioned, we saw this flurry of posts on Truth Social that included him posting about unconditional surrender and also threatening Iran's supreme leader. And then another one worth reiterating. He said, quote, "We now have complete and total control of the skies over Iran. Iran had good sky trackers and other defensive equipment and plenty of it, but it doesn't compare to American-made, conceived, and manufactured stuff," in quotes. This definitely, of course, heightens the U.S.'s support of these ongoing Israeli airstrikes, as the question really does become, what will U.S. involvement look like going forward? We could soon have an answer, as Axios reports that President Trump is going to convene that National Security Council at 1 p.m. Eastern. And we also heard from the German chancellor speaking to local broadcaster, saying that the U.S. will make its decision based off of whether or not it thinks Iran is willing to negotiate. We should say that up to this point, the White House has maintained that it has a defensive posture here, though it did move military assets into the region. And analysts do tell us, just for context, that if the U.S. does get involved, it likely wouldn't be boots on the ground, troops on the ground, but it would be air or sea defense and support moving forward there. Also important to mention, though, that the speculation about this, Joe, really did heighten after we saw a post from Vice President J.D. Vance earlier today. He wrote in a post on X that President Trump, quote, may decide he needs to take further action to end Iranian enrichment. Of course, the possibility of a diplomatic de-escalation could still be on the table. It's worth noting that President Trump did suggest earlier that he may dispatch either Vance or his special envoy, Steve Witkoff, for talks with Iran. We're just waiting for some updates on how that involves.
All right, Tyler, stay close with us. Bloomberg's Tyler Kendall at the White House as we turn our attention now to what is left of the G7 summit in Canada. Bloomberg's David Gura is in Banff, where world leaders are continuing to move their conversations ahead even without President Trump. David, how is all of this playing there?
Well, to borrow a phrase from the president, this matter does have the attention of the world leaders who are gathered here. We heard from Chancellor Friedrich Merz of Germany this morning talking about that conflict, having some very strong rhetoric about Iran and suggesting that the U.S. is going to make its decision on military action today. So everyone here tracking very closely what's happening in Washington, indeed what's happening in the Middle East as well. But as you rightfully point out, Joe, the agenda proceeds as normal. President Vladimir Zelensky is here in Canada. He had a meeting with Prime Minister Mark Carney just a few minutes ago, at which Canada announced a big investment in defense spending for Ukraine and new sanctions on Russia. We're seeing those meetings continue over the course of the day, and sitting in President Trump's seat at all of these major meetings is now Scott Bessent, the Treasury Secretary, who traveled here with President Trump with the expectation going into this summit there would be more conversations on the sidelines about trade and tariffs, but he has now been kind of given the imprimatur to sit in that seat over the course of these meetings to kind of play the role of the U.S.'s representative here as conversations center on Ukraine this morning and energy this afternoon. Again, the official agenda continues, but everyone here very much watching what's unfolding in Washington and the Middle East, Joe.
Great reporting this week from David Gura live in Banff, Canada. Thank you so much, David. As we add the voice of experience in retired General Frank McKenzie. We told you he would join us, someone with answers to many of the questions that we've been asking, as he was the former commander, United States Central Command, CENTCOM, from 2019 to 2022. Now executive director of the University of South Florida's Global and National Security Institute. General McKenzie, it's good to have you back on Balance of Power. Welcome back to Bloomberg TV and radio. It's good to have you with us. The president is facing a big choice today, as it seems, and he's been writing on Truth Social about it. If you were still in your old job, would you recommend to the president that the U.S. join Israel offensively in eliminating Iran's nuclear program?
Well, I think, first of all, it's good to be with you, Joe. I think the important thing to remember here is as he approaches this decision, President Trump actually has unique credibility with Iran because he gave the order to strike Qasem Soleimani back in early 2020. So he possesses enormous wasta, if you will, as he approaches this problem. It's going to be his decision to choose how is he going to use it. Are we going to try to negotiate now? The problem with negotiating with the Iranians is they're not great fighters, but they're remarkable negotiators. They will try to bog you down. They'll try to spin it out in time. And what they will try to do is stay on their task of destroying Israel and ejecting us from the region. So it's a particularly difficult decision for the president to make. If we go in and we strike this target, as we're talking about doing, we're probably not going to be able to completely eradicate the Iranian nuclear program, but we will set the nuclear program back.
Interesting. You mentioned Qasem Soleimani. I believe you did recommend to President Trump at the time that he be taken out. And a lot of people are looking at that as the beginning of a saga that brings us here today, that in fact closing the deal at Fordo and eliminating, by the use of American B-2 bombers and the Moab, eliminating what is left of that enrichment facility would be the bookend on something that you started that day, General. Is that correct?
Well, that would be President Trump's decision to actually execute that strike. And I believe you can make a point that it began a narrative arc that has taken us to where we are today. 2024 was the worst year in Iranian history in terms of foreign policy and defense policy, but it really did begin with the loss of Soleimani, who was their inspirational leader, the guy that could bring it all together for him across the region. After January 2020, he was no longer there, and they have felt his loss significantly.
It's really interesting as we try to understand the impact that had when it comes to communications with Iran's proxies, when it comes even to esprit de corps, if I can use that term, in keeping some cohesion among proxies and even within the Revolutionary Guard. The elimination of Qasem Soleimani speaks directly to the chaos and the lack of response, the chaotic response we're seeing now, does it not?
It absolutely does. The fact of the matter is the Iranian military, and particularly the IRGC, the Republican Guard Corps, they don't have good succession planning. People come into these jobs and they stay for many, many, many years. You don't have someone you can turn to if a person dies or is killed. And they felt that very keenly. They felt it in the loss of Soleimani. We see it right now in the loss of their equivalent of their chairman and equivalent in the loss of the IRGC commander. It is having a profound effect on Iranian decision making. It's crippling it. It's making it very hard for them to come to coordinated positions on how to respond. And we see that every day in their ineptitude.
General McKenzie, we're getting headlines from Iranian state media right now that Iran will soon launch what they're calling a punitive operation against Israel. I'm reading these with you for the first time, citing Iran's chief of staff of armed forces on this operation, urging Israelis to evacuate Tel Aviv and Haifa. How should Israel respond to headlines like these, and is the Iron Dome enough to keep them safe?
The waves of Iranian attacks have had minimal success. I know that's easy for me to say here in the United States when buildings have been destroyed in Israel, but the Israeli success rate with their various systems, far beyond Iron Dome, has actually been pretty remarkable. The Iranians have thrown about all they can throw at Israel. There's not some secret deadly weapon out there waiting to be employed. They just don't have it. You'll see more of the same against Israel. I predict what will happen over time is that Israeli defenses will grow increasingly effective as they solve the way the Iranians are attacking. And the Iranians don't have an endless supply of these weapons as well.
We've been surging equipment into the theater, as I'm sure you know, more than 24 tankers, air-to-air refuelers. We're steering the USS Nimitz strike carrier group into the region. What does this collection of material illustrate to you that we may be preparing for?
First of all, it illustrates the excellence of the joint force, and our capabilities are global. We can flex anywhere very quickly. I think it's prudent planning by the Department of Defense. It's all about giving the president options. The decision to whether or not we're going to strike Iran is going to be a political decision. That is not a military decision. But what you want to do is ensure that the president has all the tools necessary to make that decision or to defer that decision if that's what he wants to do and protect our forces in the region. And so that's what's going on right now. It's pretty much another day at the office for the U.S. military. We're very good at this. They're bringing them in so that we can prepare for really any contingency.
Some great reporting today in the New York Times about what it would take to strike Fordo, the underground enrichment site that we've already referred to. It's essentially underneath a mountain, General. And apparently the U.S. was involved here, the Pentagon, for several years trying to refine a strike plan if, in fact, it was needed. They found that it would require B-2s, several of them, releasing one Moab after another down the same hole before they got there. Were you involved in those experiments? Is that actually what it would take, regardless of whether it's decided to be used today? Is that what it would take to blow up a mountain?
So really, Joe, all I can tell you is we have very good plans. We have very good capabilities. We've studied the problem. We believe we have a solution to the problem. But that's really all I can tell you.
Well, when the general can't answer a question like that, I know we're getting warm on something here. Let me ask you further. There's also reporting that if we didn't, in fact, make that decision to use these bunker-busting bombs, that cutting the power might do it. A sabotage mission to cut the power to these centrifuges, which spin at supersonic speeds. Should that be in our playbook?
Every possible approach to this problem is in our playbook, and many of them are obviously also in Israel's playbook. Everything from different forms of cyber attack to power interruption to proxy attack direct on the ground. All of those options are on the table. All of those options have been thoroughly studied, and all of those options would be available should we choose to use them.
As we spend time with retired General Frank McKenzie trying to figure out the way forward here, I wonder the questions that you're asking as well about how far Israel is planning to go here, General. Is there a scenario that we should be prepared for that would involve Israeli boots on the ground in Iran and a very different mission to support?
Joe, I can't see that under any circumstance. Iran's a large country with a population of over 90 million. I can't see any possible way that would involve an Israeli ground invasion of Iran. Just not going to happen. I see some scenarios perhaps where the Israelis believe they can knock out the existing government. Now you're dealing with what is essentially a failed state, a dysfunctional entity, and in some ways that may be better than a state that isn't failing, but that has malevolent intent, not only against Israel, but against all of its neighbors. It would not be a good scenario for the people of Iran, who will be denied basic services for food, for medicine, for all the things that make life worth living. But to some degree, the only people to blame for that is current Iranian leadership.
General, you know what it's like to be in the Situation Room with the National Security Council, with the President of the United States. It appears that's the kind of day they're having today at the White House. We've already discussed the decision that President Trump is facing here, and I wonder if we could qualify this as the most important foreign policy decision facing a president since the withdrawal of Afghanistan.
It's certainly a big decision. And if you're in there as a military person, your job is to ensure that the people who make those decisions, the civilian leadership of our country, have all the options they need in order to execute whatever decision they choose. And then the joint force will faithfully execute those decisions.
There seems to be an expectation this decision is made today, General. How long is this window open for?
I think we have some flexibility in how we choose to approach it. I think the problem is for the Iranians, time works against them. They're weaker every day. They're more attrited every day. They're less capable every day. So I think the clock is working against them. It's working for us and for Israel.
Lastly, the president writing on Truth Social, General, you might have seen it. We know exactly where the so-called supreme leader is hiding, he writes. An easy target, he's safe there. We're not going to take him out, at least for now. Is the supreme leader eventually a target?
Don't know the answer to that. I do know that President Trump has unique credibility when he writes those words, and Iran is very much aware of that.
It's great to have you with us, General. We hope that we can continue this conversation with you. Retired General Frank McKenzie, former CENTCOM commander, now at the University of South Florida's Global and National Security Institute. A fascinating conversation as we always seek to bring you voices of experience, practitioners here on Balance of Power. We'll assemble our panel next. Rick Davis and Jeannie Shanzano are with us live from Washington with much more to follow here. I'm Joe Matthew and glad you're along on the Tuesday edition of Balance of Power on Bloomberg TV and radio.
9:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are declining as President Trump plays down a potential truce between Israel and Iran. Right now, we are at just about the lows of the session, with the president set to meet his national security team in Washington to discuss the escalating Middle East conflict. Full details coming up right here on Balance of Power. Equities lower across the board, with the S&P now down 31 points at 6,001. A drop there of 0.5%. The Dow is down 171, decline of 0.4%, while NASDAQ, the composite index, down 116, a drop right now of 0.6%. 10-year at 4.40%, with the 2-year currently yielding 3.95%. Gold up $3.50 the ounce, up 0.1%. West Texas Intermediate crude up 3.4%, 74.18 right now per barrel of WTI. And a big drop in Bitcoin, down 4.7% now at 103,755 on Bitcoin. And Adobe has released a standalone Firefly mobile app for Android and iOS in an attempt to put a larger spotlight on its artificial intelligence-powered image generation and editing tools. Adobe shares, they are trading lower, down now by 4%. And San Francisco-based Salesforce increasing the price for many products, becoming the latest software maker to adjust its cost structure as it integrates artificial intelligence. Salesforce.com up now by 0.2%. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, it's another one of those days, and good to have Charlie Pellet, as always, with his hands on the markets here. We'll get back to Charlie in a bit. Watching the Tuesday trade evolve with the news here from Washington. Bloomberg News can now confirm the President of the United States set to meet with the national security team here to talk about what next in the Middle East. We've had a flurry of Truth Social posts from President Trump, and as we were just discussing with retired General Frank McKenzie, a big decision here in the offing, and it could come today based on everything that we are hearing about what should be the U.S. policy when it comes to offensive military action against Iran. The president calling for unconditional surrender in one Truth Social post, going even further, if you were with us on Bloomberg, to say we know exactly where the so-called supreme leader is hiding, adding that we're not going to take him out, at least not for now. The pressure campaign is ratcheting up here as we get closer to a decision that could lead to either U.S. military action or some sort of deal, if we're still allowing for that. We assembled our political panel now. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Rick is our Republican strategist partner at Stone Court Capital. Jeannie is senior democracy fellow with the Center for the Study of the Presidency and Congress. Rick, you spent enough time at the White House and in skiffs across Washington to have a sense of what this is like inside the sit room, inside the West Wing right now. Give us a sense of the conversations that are being had, the options the president is hearing, and from whom.
Yeah, well, the Joint Chiefs' job is to advise the president and give him military options, obviously orchestrated by his Secretary of Defense, Pete Hegseth. So they are there along with the national security team, both inside the White House and other members in the cabinet. And that is exactly, Joe, what you described they're doing. They're going through various scenarios, to tell the president what kind of options he has, what kind of choices, answering any questions that he or the team has, and game planning out a little bit about what happens next. We know he's not tweeting in there because you're not allowed to have a phone in a skiff. It's certainly not in the sit room. And so he must have, we can almost time how much time he's in the sit room by like when those tweets kick off again and gets his phone back. But the bottom line on it is that they'll have all the information they need there at hand, a lot of electronic information available to make a decision. And that maybe that decision is a non-decision for now, but at the end of the day, it's the president's choice. It is not the decision of a military leader to make what we do. They are giving him options. It's up to the president to make that commander-in-chief decision.
Jeannie, I don't know how often you're on the same page as Tom Massey, but he is among a group of Republicans on Capitol Hill who are demanding that Congress be involved in this decision. The president obviously has great authority when it comes to dealing with our own national security, when it comes to the immediacy of whether or not to strike. But if we're talking about a longer-term commitment here, when does Congress get the call?
Well, so far, they have not been very active. You mentioned Tom Massey, who is joined by strange bedfellows like Ilhan Omar and Alexandria Ocasio-Cortez, who have indicated they would sign on to this resolution. And then, of course, in the Senate, you have Tim Kaine, who is promising to bring other Democrats along. It'll be curious to see if any of the more right-wing MAGA folks go along with him. So we're going to see strange bedfellows. And I think from the president's perspective, and you can see this, I think, in the truths from today, he would think best case scenario is that he compels Iran to give up, come to the negotiating table, and he doesn't have to make this very tough decision. Because for him politically, this is a very fraught moment. He has told people two things that simply do not reconcile together. One, I am Israel's best ally. America will continue to support it. Number two, we are out of foreign wars. I am heading for a Nobel Peace Prize. We are going to be America first. Those two promises are irreconcilable, and he is being called to the mat on those by those on the MAGA right, which is why you're seeing the vice president who speaks MAGA speaking to them on Twitter today and saying, give the president some space. He's earned your trust. He's only going to do what's in the best interest of the American public. But remember, the use of troops for that reason is the same defense every president of the United States gives. And Donald Trump made a career of attacking George Bush, Barack Obama, Joe Biden, I can go on and on, Hillary Clinton, for using U.S. troops on foreign soil for exactly the same reason. So he's in a conundrum. Best case scenario, he doesn't have to make a decision, but I think he's not going to get that. He's probably going to have to make it, and it's going to put him in a politically charged position.
Rick, where are you on Congress's role in all of this? How long does Donald Trump have to act independently before lawmakers need to have a say?
Well, I think that historically presidents have been given a long lead time. Throughout the ages, presidents have been able to act in an offensive fashion. Bill Clinton intervened in the Bosnia War without permission from Congress. You go back to presidents like Nixon and others. So there's a lot of history to giving the president of the United States flexibility, especially in urgent situations such as this, right? This does not correspond with a debate in Congress that could last weeks. This is a moment in time. U.S. needs to act, and the president, I think, will be given plenty of leeway. Remember, too, there are a lot of bipartisan support for hemming in Iran. This is not just a Republican idea. A lot of hawks in the Democratic Party see this as an opportunity to finally rid the Middle East of the biggest troublemaker that we've had in our lifetimes. And so I think you'll find both bipartisan opposition to this, but also bipartisan support for anything that the president wants to do to end the scourge of Iranian troublemaking in the region.
Jeannie, when you hear the president's comments, particularly from last evening on Air Force One, we are looking for better than a ceasefire, he said. Better than a ceasefire, a real end. Which is why people are wondering if he is, in fact, thinking seriously about committing the U.S. military to this, to take part in Israeli strikes against Iran. When you hear talk like that, does that tell you that Donald Trump will make this decision today in the sit room with his military advisors, or that actually Iran will make this decision based on how it responds?
I think the president probably is committed to where he wants to take this already. I think that's why he came back. I think that's why we're seeing the messages we are seeing from the president, the vice president, Pete Hegseth on Fox News last night. Sure, his mind could be changed if he gets some new information, but I think he knows where he wants to go, and that is where he has been a long time. Iran cannot have nuclear weapons. The challenge for him is he blew up the deal in 2018 that would have left us in a much better position than we are right now, and now he's got to make a tough decision. Yes, he hopes that Iran completely capitulates, completely surrenders. But you talk to Iran experts and they say, how can Iran do that at this point? In the future, they might. But at this point, how can they? Number one, they have lost faith in the president of the United States, Donald Trump, because they don't feel like he was being completely open and honest with them about the negotiations that were occurring. And so that's something he's going to have to overcome if he really wants a substantive negotiation with them on this. And number two, is he really going to backtrack on his no nuclear weapons for Iran? I read that truth to say that he really does want regime change, which many people do, but he doesn't want to make the difficult decision as to how you get there, and he may just have to in the next couple hours.
Well, that's pretty interesting. Rick, when you consider the options here, Donald Trump could simply let Israel keep hammering away at Iran and hope for the people to rise up, or maybe an alternate approach to eliminating the centrifuges. But as General McKenzie said, the Iranians are better negotiators than they are fighters. And I think he said they're bad fighters and great negotiators. Based on the history of this conversation, why should the U.S. even take Iran seriously as a credible actor at a negotiating table?
Yeah, I think that Donald Trump has always felt that threats and coercion are the way to go with the Iranians. He's probably more right than wrong. I mean, Frank McKenzie has got an enormous amount of experience dealing with the Iranians. But remember, too, the Iranians have a death squad, trying to take out Donald Trump for the assassination of Soleimani. I mean, these are not like normal negotiations among interested parties. I mean, this is the strangest group of people you're ever going to meet with. Hey, we'd like to negotiate with you while we're trying to kill you. So if you have conditions like that, you have to assume that Donald Trump's going to use equal, if not more, lethal ways of dealing with the Iranians. And so I just want to, this is not like negotiating a real estate deal. Right. You've got a situation here where Iran does not play by any rules of modern society, and therefore they are now vulnerable to those who have the power to prey upon them. And at the end of the day, if you want a peaceful Middle East, you're going to have to deal with the biggest troublemaker in the region, and that's Iran. And Iran has been unwilling to contain their ambitions.
Jeannie, I've got less than a minute here. If the president decides to attack and he loses MAGA, can he win them back?
He absolutely could, but there might be a fissure there. But let's not forget, we just got out of Afghanistan. Who controls that country now? The Taliban. It is not just we attack regime change and we live in a peaceful Middle East. The president, the United States, all of our allies have to answer, what is the day after? What is next? What is this new regime you're hoping for? We need to hear about that from the president of the United States if he decides to attack. What is the end of this entire thing?
Great conversation with our great panel. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. Thank you both for the insights. I'm Joe Matthew in Washington with much more straight ahead on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red. The S&P bouncing off the bottom, looking at a 33-point drop right now, but falling below 6,059.99 right now on the S&P, down 0.5%. Wall Street's concerns over Mideast tensions and weak economic data leading to a slide in stocks. The S&P 500 again just bouncing off of session lows. The Dow down 198, down 0.5%. NASDAQ Composite Index down 122, a drop there of 0.6%. The 10-year at 4.39%, with the 2-year 3.95%. Gold up $4.50 the ounce, a little changed, up 0.1%, $33.90 on the precious metal. But we are seeing a surge in West Texas Intermediate crude, up 3.6% right now at $74.35 a barrel. JetBlue Airways plans to speed up cost reductions by eliminating some flights, pausing retrofits, and parking some jets. We've got JetBlue shares down now by 4.5%. JP Morgan Chase hiking the annual fee on its popular Sapphire Reserve credit card to $795. JP Morgan Chase down 0.2%. Also, we had American Express announcing yesterday that it is making its, quote, largest investment ever in a refresh of its travel-focused Platinum cards. American Express down 0.3%. Balance of Power continues right now. Back we go to Washington. Lots going on. Once again, your host, here he is, Joe Matthew.
You said it, Charlie. Thank you so much. Charlie Pellet, live from New York, watching Wall Street as headlines fly from Washington. And we're seeing another from Iranian state media here. Strong successive explosions heard in western Tehran. Knowing that the volley continues here, we did see another round of ballistic missiles sent by Iran toward Israel. They appear to have all been intercepted. There may be something going back in the other direction. As we keep tabs on what's happening at the White House, President Trump today meeting with his national security team. It appears they are back behind closed doors now to figure out the next leg in the U.S. policy here in dealing with Israel and Iran. Now on day 5 of the back and forth. We'll have much more on this later in the program and on the late edition of Balance of Power. President could speak today. If he does, you'll hear him live on Bloomberg TV and radio. We're very excited about the latest addition to the Bloomberg TV lineup here. Sonali Basak, program called Bullish. And today is the debut. She's with us now live from New York with her first guest, someone you may have heard of. And in fact, with regard to this program, one of the most prolific political donors in the U.S. and in the world. Sonali joins us now from World Headquarters in New York. Your sit down with Ken Griffin was fascinating. What'd you learn?
I appreciate it, Joe. And of course, because of you in particular, I've been diving way deep into the world of political financing. It was a wide-ranging interview with Ken Griffin, but one thing that did surprise me when I spoke to him is I asked about the mark he would leave on the Republican Party. Let's take a quick listen to what he had to say. When you think about your political giving, when you think about the influence that you want to have and the mark you want to make, what's most important to you?
Well, I think you need to think about the arc of one's life. In my 20s, I gave my time. I didn't have money to give in my 20s. I gave my time. I actually tutored in the inner city of Chicago and saw firsthand the challenges that these young, in this case, boys and girls face in trying to break the cycle of poverty. Like, it's really, really tough work to tutor these kids who are so far behind. And at Citadel, one of the things that we support is we support our colleagues being involved in nonprofit organizations. We have several hundred colleagues who are on the boards of nonprofit institutions across the country, giving of their time to improve other people's lives. I'm really proud of that. That's such a part of the ethos and culture of the firm. Now, over the years, time became scarcer, money became more plentiful, started to give money to support public education reform. How do we help young men and women? In Chicago, one of the things I love doing is I would help to underwrite the cost of giving books to every newborn child in the city of Chicago. It's a well-established fact that the number of books a child is exposed to early in life actually has a disproportionate impact on their entire educational journey. If I looked at all the work that I did, though, in public education in particular, I would often see that work undermined by very poor political policies. In some sense, we often put the interest of the teachers union in front of the interest of the students. And if I wanted to see kids have a chance to get ahead of the United States, I decided it was important to support politicians, both Republicans and Democrats, who put education as a very important part of their platform. And over the years, I've continued to support candidates on both sides of the aisle who really do lead with an education-first policy.
It's interesting to hear you say that, because coming into this interview, I was going to ask about what mark you wanted to make on the Republican Party, but it sounds like you're not limited to that.
I'm not limited to that. I find in general I tend to agree with more of the policies from the Republican Party, but it's important to recognize people in both parties that really do lead the charge fighting for the interests of children.
So interesting there. Did not expect him to talk about his support for the Democrats. A known Democrat he has been supporting is the Miami-Dade mayor, where, of course, Florida politics tend to have a different flavor than much of the country. But he did donate to both Republicans and Democrats in the area. And now another person he called out by name, too, is Senator David McCormick. We've been following him very closely, as well as his pro-business policies. But he said David really represents Senator McCormick really represents the future of the Republican Party in a lot of ways, and that it was important for him, as he's giving, to really change the face of the Republican Party, make sure there are more women, more people of color, and more veterans in particular.
Really interesting. I actually thought Ken Griffin was going to be the next mayor of Miami at one point.
Kind of unofficially is, I think, already in some ways, no?
The unofficial mayor, yes, exactly. What's the program Bullish? This is a tough act to follow. What's the program seeking to cover?
We cover the future of finance in many forms. So for Ken Griffin, the reason I wanted to get into him in the first episode is not only is this about Miami, yes, it's a really interesting, colorful video, but it's also about the hedge funds and market-making firms that are changing the face of finance. Of course, these don't face the same types of regulations. Post-2008, they've proliferated, some of the largest firms here, and they are a critical part of what markets and market structure looks like. And by the way, you know, we're on a politics show here, Joe. The idea of regulation becoming a lot less loose, a lot more loose for them in the future is a real reality. They're only set to get bigger, right? And you have rivals of Citadel Securities like Jane Street already making more money in a year than many of the big bank trading arms do. So they're becoming massive players in the future of finance in ways that maybe much of the American public don't realize.
Well, this is great. Join Shonali Bosick for her conversation. Bullish with Shonali, 6 p.m. Eastern Time, Bloomberg TV, 8 p.m. Bloomberg Originals. Looking forward to it, Shonali, and thanks for spending some time with us here on Balance of Power. A lot to look forward to with regard to our special Fed coverage as well. That's tomorrow with the meeting getting underway here, and that's always our pleasure because Michael McKee is in town when the Fed gets together. The FOMC means Michael McKee is with us at the desk here, Bloomberg International Economics and Policy Correspondent. It's great to see you. I don't know how bullish you're feeling or how bullish Jay Powell is feeling. We don't get a cut tomorrow or a change in rates, but we might start hearing some hints. What do you think?
Well, Wall Street should be looking for hints. Okay. The question is, how much of a hint does the Fed want to give them? And I don't think it's going to be a whole lot because they don't know anything either. We are getting a new summary of economic projections, their forecasts for GDP, unemployment, and inflation. And then we get the new dot plot. Wall Street is kind of betting that they're going to raise the unemployment forecast and raise the inflation forecast, which would suggest slower growth. But not do a whole lot about it. In the dot plot, maybe cut from 2 cuts this year to 1 cut. And essentially admit they don't know what's going to happen to the economy because we're all waiting on Donald Trump.
Yeah, well, about everything. So yesterday, or probably would have a couple days ago, asked you about tariffs. We have a massive geopolitical crisis that's unfolding now as well. Donald Trump's in the White House as we're talking to you, trying to figure out whether the U.S. should join Israel offensively against Iran. This is happening just as the FOMC gets behind closed doors. Does that factor into their decision-making?
It's not going to factor into their decision-making because there is no way to know what it will actually mean. We can speculate about what the U.S. might do, and we can speculate about how the Iranians and others in the Middle East might respond. But other than oil prices going up, which is sort of a given in this situation, there's no way to know how this would play out for the U.S. economy, which is what the Fed cares about. Oil prices can go up,
they will maybe at some point affect people's purchasing decision making.
Yeah.
But for right now, they have to watch too. I mean, maybe they'll have a TV set watching you in the Fed meeting.
We'll see about that. If anyone knows, it would be you. But in this case, I mentioned tariffs. A weaker than expected reading on retail sales today. This is something the Fed can get its arms around. Is that a result of the front loading or the front running that we saw ahead of tariffs taking effect?
It largely was, in the sense that most of the damage was done by a decline in car sales because everybody bought cars earlier. Building materials, maybe a little bit tariff related, but probably a lot weather related. It's rained. It just keeps raining.
Wow.
And then you had gasoline prices go down. Gasoline prices are going back up again now because of what's going on in the Middle East. So it isn't clear exactly what the message is from all of that, except that the Fed has to keep an eye on whether Americans want to keep spending.
Sure.
But the Americans are waiting for details as well. And the interesting thing about getting all this information from the Fed tomorrow is July 9th. 2 weeks after that, we hear about the reciprocal tariffs, and that might change the whole game again.
Unless, of course, there's an extension.
They put an expiration date on their new forecast.
Yeah, well, I guess 2 weeks is a pretty long time around here. So imagine yourself in the news conference tomorrow, as you will be, and I know you're probably crafting some impossible-to-answer question as we speak. What's the tone, what's the posture for Jay Powell in the midst of all this uncertainty? Is it just like the last news conference?
I think so. I think he wants to avoid making news as much as possible. He'll say that we are focused on the economy and we will take in all of the president's policies in terms of what they mean for the economy and for our mandate. And we just don't have enough information now to decide. And he'll kind of leave it at that because there's no percentage in him making the president mad. We already know the president is mad at him. And there's no percentage in upsetting Wall Street at this point because there's plenty of other things that Wall Street has to worry about.
Well, there's a lot of other things that Donald Trump has to worry about as well. You wonder if we don't get the missives on Truth Social tomorrow because we actually do have an international crisis underway.
Yeah, I suspect that we might not, but it could be overnight that he sends out some note that I don't expect Too Late Jay to, or
yes,
whatever
right.
he calls him, right?
Too Late Powell. Is Scott Bessent the next Fed chair?
My guess.
What do you make of this conversation?
My guess would be no. I think.
Where did this come from this week?
Well, it's a Wall Street game. You float people's names and see what the reaction is, and the reaction has not been overwhelmingly, yeah, we got to have him. And Bessent is kind of busy with a whole bunch of other things for the president at this point, and it is easier for the president to imagine another Fed chair, someone like Kevin Warsh, who he's already touted as a potential Fed chair, than to come up with another name for Treasury who would be able to fit into the roles that Bessent has played. Liaison to Wall Street, negotiator with foreign countries in terms of trade and things like that. I mean, they're perfectly qualified people, but they also have to satisfy the MAGA side of the party. So it'd be harder for him maybe to get a new Treasury secretary than a Fed chair.
That's a lot of needles to thread. You've covered this complex for some time. What do you make of all these roles that the Treasury secretary is suddenly balancing? Did he even know he was going to be doing this?
Probably not. I mean, it seems to be an ad hoc process over at the White House, but this is not necessarily new. During the Clinton administration, Bob Rubin and the folks at Treasury surpassed the State Department. They became the prime policy implementers for the president because we had an economic crisis in the world. We had the Asian financial crisis. And then we saw Treasury under George W. Bush with Hank Paulson also take the leading role once we had the financial crisis. And this is a time when the crises, now Israel, Iran may be different, but the crises that we have been facing that Trump may be causing are on the financial side. So it puts Treasury in the driver's seat in terms of implementing this stuff and in terms of talking to everybody else in the world.
Fascinating. Great to have you with us here. We'll connect tomorrow on the Fed. Michael McKee, Bloomberg International Economics and Policy Correspondent with us here on Balance of Power. A headline crossing the terminal. Haven't seen the name Elon Musk in a minute. XAI is burning through $1 billion a month as costs pile up. That's a redhead on the terminal and something that we're going to follow up with for you here, remembering that, of course, Elon Musk was a daily presence here in the nation's capital not all that long ago. Thanks to Michael McKee. Great reporting as well from Shanali Bosick, our panel, Rick Davis and Jeannie Shanzano, retired General Frank McKenzie. Fascinating conversation. Subscribe to the podcast. if you want to hear that in its entirety. And David Gura, Tyler Kendall reporting for Bloomberg as we bring you news from around the world here on the fastest show in politics. We'll reconnect at 5 p.m. Eastern for the late edition of Balance of Power with the latest on all these stories and a looming decision coming from President Trump at the White House when it comes to Iran. This is Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, very good afternoon, everybody. Carol Masser, Tim Stenivek, live here at Bloomberg headquarters. We are across TV, radio, YouTube, and Bloomberg Originals. We do have U.S. stocks just off their lows of the session. We've seen them take a leg down over the last hour or so. This is due to that conflict between Israel and Iran. And really, Tim, I feel like there's these mega questions about potential U.S. involvement? I say it carefully because we do know the president is back here on U.S. soil.
Yeah, he's having a high-level meeting right now on this exact matter right now. 9:30 p.m. in Tehran, about 9 p.m. right now in Israel. We're going to keep you updated on everything happening when it comes to this skirmish. And we got a big hour when it comes to everything regarding the conflict and its impact on the markets.
Yeah, we're also going to get into something, Tim, you really stressed in our morning call, what you need to know about the U.S.'s bunker buster. Everyone's talking about it. We'll tell you why. And then we're going to get into how it all plays out on the U.S. economy because, folks, we have Fed officials kicking off their two-day meeting. A lot going on.
All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. Indeed, we are trading very close to session lows right now. The Dow, the S&P, NASDAQ, they're all in the red. Right now, the S&P is down 51, 59.81, trading below 6,000. Drop there of just about 0.9%. Dow Jones Industrial Average down now by 299 points, down 0.7%. While NASDAQ down 184, down 0.9%. Again, keeping it all in context, S&P lower by 0.8%. 10-year, 4.38%. The 2-year, 3.93%. Spot gold now up $5 the ounce, $33.90. A gain there of 0.1%. Crude oil, the big story, now surging by 3.6%. Again on heightened Middle East tensions, $74.40 for a barrel of WTI. Economic data ahead of the Fed decision tomorrow. Retail sales down 0.9% in May. That is the largest decline since the start of the year. Among retailers today, we're looking at Macy's down 3.2%, Target down 2%, Walmart down 0.1%, Amazon lower by 0.4%. Among the names reporting after the close of trading today, we'll be hearing from J-Bill, up now by 9.4%. Recapping, S&P down 50, drop there of 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, as you know, we've been talking about President Trump expected to be meeting with his national security team in the White House Situation Room today to make a decision on U.S. policy towards the war between Israel and Iran. This is according to our reporter. We've also heard others, including Axios also reporting this out. Got to point out that in the last couple of hours, there's been a lot of posts on social media from President Trump specifically. Remember, he left the G7 early. He flew back, left Canada last night, got back into D.C. this morning. And so here's what we've been hearing from President Trump on social media, in case you're just joining us. The president saying, we know exactly where the so-called supreme leader is hiding. He is an easy target, but is safe there. We are not going to take him out. Kill in parentheses, at least not for now, but we don't want missiles shot at civilians or American soldiers. Our patience is wearing thin. Thank you for your attention to this matter. And Tim, that wasn't the only thing he put out.
We also did hear from the president earlier today. He said, quote, on his social media platform, we now have complete and total control of the skies over Iran. Iran had good sky trackers and other defensive equipment, and plenty of it, but it doesn't compare to American-made, conceived, and manufactured stuff. Nobody does it better than the good old USA. This, again, coming from the president earlier today.
Yeah, both Israel and the United States are really ratcheting up pressure on Iran specifically, and this has sparked some fresh speculation about Washington and specifically the United States that maybe could be getting ready to join the attack launched by its closest Middle East ally. So let's kind of try and figure out exactly where we are, what we are hearing, the intel from the White House. We head to Bloomberg's Dan Williams. He's based out of our Jerusalem news bureau, but we find him in London today. We wanted to speak to him because we wanted to see what we are hearing too in the region specifically. Dan, good to have you here. We know it's later there. Thank you for sticking around for us. President Trump has been posting a lot on social today, as we noted in the lead up to you. What are you hearing specifically on the ground in London, and what are you hearing from maybe the team also in Jerusalem?
Well, hello to you all. There is extreme reticence across the board here, and I think it goes beyond obvious military secrecy. If the United States is to weigh in militarily in terms of offensive action, it's worth remembering the U.S. from the outset has been helping in terms of passive defense, especially when it comes to taking out incoming drones and missiles, helping Israel with that aerial defense and providing munitions and diplomatic cover. If that's to switch to offensive action, I don't think anyone, especially the Israelis, will want to be seen as having demanded that. We've actually had Israeli officials say openly that should the Americans decide to do this, this will be a U.S. decision serving U.S. interests. It's also possible that there is a degree of bluff here. We saw the U.S. president demanding what he called surrender from the Iranians. It could be that ramping up pressure, including with the movement of military assets to the region, is meant to give the Iranians a last chance to re-enter nuclear diplomacy on terms agreeable to the United States and to Israel, rather than see potentially the world's great power weigh in with firepower that even the Israelis are not able to wield in this conflict.
We know that it's, well, actually, I'm going to pose the question to you, Dan. Is it fair to say that Israel is pushing for regime change in Tehran?
I'm not sure it's fair to say that. Many officials have been asked this, have discussed this at some length. What they've said is that they have more modest goals, modest in terms of regime change. In fact, you have the National Security Advisor pointing out that we have a country much larger than France and Iran, much larger than Israel, 63 times the population. He actually said it would be overweening, it would be inappropriate, it would be grandiose for the Israelis to be thinking in terms of engineering regime change. However, the Israeli attitude is that if as a result of Israel's assaults on Iran, there is a groundswell of dissidents, Iranians opposed to the regime falls because of destabilization, the Israelis are not going to be shedding a tear. I don't think it's fair to say that this is part of the war goals, if only because the logistics would make that extremely difficult for a country of Israel's size.
Dan, Reza Pahlavi, son of the last Shah of Iran, joined the surveillance team of Lisa Abramowitz and Danny Berger earlier today, says he's reached out to Israel amid the conflict between the two nations. He also told them that due to Israel's strikes, the regime is, quote, on the verge of collapse, and that with a regime change, there is the opportunity to eliminate several issues at the same time, including the country's nuclear weapons program. What do Iranians want? Do they want regime change?
I don't know of any solid polling that could answer that responsibly. Certainly there are Iranians who are opposed to regime that has been around for almost 50 years. Its human rights record is well known to Western observers, deep problems in that sense. However, it's fair to assume there are Iranians who are also behind the regime. Again, the record seems to be split on this. I would not weigh on that definitively. However, in the end, and I definitely think these are the terms that President Trump thinks of, success sells, success tends to generate a narrative of its own. And if indeed this Iranian regime is on his way out, because of the success of the Israeli offensive, the Israelis certainly seem happy with progress so far. And certainly if the U.S. weighs in, it could just be that bottom line, if the regime is on its way out, many other Iranians will agree to seeing it go and trying to make the best of what follows.
Dan, we lean on you and the team who have such a better understanding of the region and the complicated relationships and the complicated tensions. Having said that, we have seen a lot of criticism by other Middle Eastern entities and countries that have been critical of what Israel has done. What do other Middle Eastern countries want in terms of Iran? Do they want regime changes?
Again, Middle Eastern countries, for the large part, are not going to be openly committing either way in this sense. I think it's very easy to come along and say, no one wants war, no one wants casualties, especially innocent casualties. No one wants a spillover from this in the Middle East. There's quite a networking in terms of energy relations, in terms of demographics. However, to judge from WikiLeaks, which you recall from a number of years ago, it turns out that behind the scenes, going a long way back, many Arab powers, while speaking perhaps about the Palestinian issue, other issues, were really focusing efforts behind the scenes on what they described as a bigger concern, which was Iran's and its nuclear program. There's an age-old rivalry here between various denominations in Islam, various cultures, and I think that if this turns out to be a success, as Israel believes it will be, we will see a change of tone among many of the players in the Middle East who now may prefer to fence straddle publicly and pay lip service.
Hey, Dan, you're joining us from London. You're usually based out of our Jerusalem bureau, so I just wanted to get a sense from you on what you're hearing from colleagues, from those who you've spoken to on the ground in Israel. We've all seen the images out of Tel Aviv. I think many people are familiar with the area. Just give us your view about what life is like there over these last 5 days.
Well, I'm not here on vacation. I was actually here on a work visit when this happened on Friday, and all flights to Israel were canceled. So I'm effectively marooned, happily marooned in the Bloomberg headquarters. So we've been pitching out this really as a global effort in terms of Bloomberg coverage. As you noted, colleagues in Israel, Jerusalem and Tel Aviv have literally been under fire. There was a missile just yesterday that landed very close to the Bloomberg office and the home of my bureau chief, Ethan Bronner. I very much recommend his article on that unfortunate experience of yesterday. Everyone is working at home. This is basically like COVID with ballistic missiles.
Wow.
Remote learning for children, remote work for people still employed. Many of the normal services closed down, schools, hospitals working on a reduced format, clinics, and the like. I understand supermarkets are still open, but otherwise, if you recall the lockdown of the pandemic a few years ago and add sirens and the occasional explosion of a half-ton warhead nearby, that'll give you an idea of how things are in Israel.
Yeah, and I highly recommend, too, Ethan Bronner, who was joining our Bloomberg intelligence team earlier, Paul Sweeney and Alex Steele. You want to get a feel of the reality of his life in the bunker as there is incoming. It's pretty startling, and we certainly wish him and all of our colleagues that are in the region safety to you as well, Dan. Dan, thank you so much. Dan Williams, of course, based in our Jerusalem News Bureau. We find him in London today. All right, we're going to stay on the Middle East and to why the U.S. could be possibly drawn more deeply into the attacks on Iran's nuclear facilities. And that's where we want to go next.
For more, we head to our Washington, D.C. News Bureau and to Bloomberg News Pentagon and national security reporter Tony Capaccio. First up, Tony, is the U.S. preparing for war right now?
I think they're positioning what they call assets in the region for the eventuality of strikes. I'm not sure you can call it war, but the tanker thing, the 20 tankers in the region, I think that's a message to Iran that the U.S. may be preparing for round-the-clock bombing campaigns in parts of Iran, aided by air refueling aircraft.
When is war and when is it just hostilities or conflict? Help me out here. I have a hard time understanding the differences.
It's called declarations of war. Remember Iraq? We were going into a weapons of mass destruction, and then there was regime change, and all the cataclysm that happened from that for over a decade. A lot of echoes here: regime change, undeclared war, preemptive strikes. A lot of 2003 echoing through this conflict.
Why does the U.S. maybe have to make its presence known in Iran? And I got to say, all credit to Tim, who, like on our morning call, was saying, we got to talk about the bunker buster. Give us some background on that and what we know and why that might also pull the U.S. possibly into the conflict with Iran.
Okay, the bunker buster is a massive ordnance penetrator. It's a 30,000-pound bomb that can only be dropped from the B-2 stealth bomber. They are now based in Whiteman Air Force Base. They were in Diego Garcia recently, but they've come back. So they would have to do long refueling missions, maybe 15 hours, 16 hours in flight one way, do their bombing, precision bombing of the Fordo enrichment facility, and then probably land at Diego Garcia. That is an act of war. It's not a preemptive strike. It's an act of war on an enemy that we don't have any that hasn't threatened the United States recently. So the public has to be aware of that. But that would be the biggest biggest contribution we can make to destroying that facility. It's the only bomber that can do that, and those are the only weapons that really can penetrate deeply enough, and they can fire, they can drop sequentially, one behind the other, and pound the living daylights out of it, unfortunately.
Why is it that the U.S. is the only country that has this bomb and the ability to deliver this bomb? Why has the U.S. not shared this technology with other parts of the world, with its allies?
Well, A, it was secret until a number of years ago. The Pentagon is still very reticent to talk about it. But B, it was designed around the B-2 bomber, the stealth bomber. You know, you can say what you want about it, but it's had successful missions since its introduction. Its first attacks in Serbia, like in the 1996, I think it was. But it's our technology. It's a classified weapons program on a classified bomber. No other nation in the world really has that capability, that platform to carry it. Now we have sold other bunker busters to Israel in the 2,000 pound variety, but those can be dropped from F-15Es and some of their other aircraft, but they can't be dropped from F-35s. Those bombs are too big for an F-35.
Your experience on this world, covering the Pentagon, understanding national security, when the president calls his advisors into the Situation Room, what's the optics on that? Are there any conclusions we can make, or is it just where they go to have a safe conversation about national security issues?
I think the optics are that the Joint Chiefs of Staff, their job is to present the president with not only options for military power, but the potential collateral or down-the-road impacts that the politicians might not have thought of. I think any talk with Trump would also discuss the implications, going back to Iraq. Remember the weapons of mass destruction? All of a sudden, the society collapsed there over 2 years, and we were sucked into a 10-year conflict. I think that would resonate with the White House. This president, say what you want about him, but he has not voiced support for long-term preemptive strikes and getting us sucked into Middle East wars.
I want to go back to the B-2 Spirit. You said it's at Whiteman Air Force Base right now is where they're stationed, where they're based. Is it possible that these could move to a different position ahead of some sort of U.S. military action, and that would indicate a certain red line that the U.S. has crossed?
It definitely could. They could do a high-profile flyaway, basically. They're not going to fly from Whiteman without being seen by local plane watchers and then plane tracking software, which may or may not be able to pick up every part of a stealth bomber's flight. But people in the region, in the area there, they'd be watching for these things to be flying off, and there would be a lot of chatter about it. But yeah, if we still flew these to back to Diego Garcia, that'd be a very strong signal. If we flew these to Lakenheath Air Force Base in England, that would be a signal too. Those are Diego Garcia's got the ideal location and the hangars to store these valuable airplanes. But I think the U.S. could send a real message by parading the elephants through the air, these B-2 elephants, and letting the world know.
You're not expecting boots on the ground by the U.S., though?
Well, we've got about 40,000 airmen, airwomen, airmen, naval and Army, Navy, Marines in the region. It's like 4,000 or so in Iraq and another 2,000 or so in Syria, all for the counter-ISIS campaign. But I'm not expecting more boots on the ground, if that's what you mean.
Okay, you said 4 or 40?
40,000 in the region.
Okay.
2,500 in Iraq.
Okay.
And about 2,000 in Syria. So the 40,000 would include airmen in various bases around the region. We have many bases, and then the naval forces. So that'd be the cumulative.
All right. Thank you so much. Can't even tell you how much we appreciate it. Tony, as always, Tony Capaccio, he's Washington, D.C.'s man on the ground when it comes to the Pentagon and national security issues, joining us from our bureau there. So appreciated. All right, folks, we continue on this Tuesday. Coming up, some data.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Very close to session lows on the S&P 500 index, with the Dow, the S&P, NASDAQ all declining. Wall Street's concerns that an escalation of tensions in the Mideast could trigger a more direct U.S. involvement spurred a slide in stocks, which also dropped after a slew of weak economic data lifted bonds. And that's all ahead of the Fed decision tomorrow. Here's where we stand. We've got the S&P down 49 now, drop there of 0.8%. The Dow down 305, drop there of 0.7%. As for NASDAQ, it is down 181 points, down now by 0.9%. Stocks lower. We do have defense stocks gaining, including shares of Lockheed Martin, Northrop Grumman, and RTX. Right now, Northrop Grumman is trading higher by 1.3%. The 10-year, 4.38%. The 2-year, 3.93%. Spot gold is little change right now, up under 0.2%, up $5 the ounce, $33.90. West Texas Intermediate crude trading above $75 now, $75.23 on WTI. That is an advance of 4.8%. Kraft Heinz says it will remove synthetic food dyes from all of its American products by the end of 2027, eliminating ingredients such as Red 40 and Yellow 5 from Jell-O, Kool-Aid, and some Lunchable products. The change marks a victory for Health and Human Services Secretary Robert F. Kennedy Jr. Kraft Heinz little changed, down 0.1%. Bottom line here, stocks lower, S&P down 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Carol Master, Tim Stanovic, live here at Bloomberg headquarters in New York City. We are watching, obviously, all of the events overseas in the Middle East, seeing the pressure, as you just heard from Charlie, on the equity trade here in the U.S. So any new headlines, we will, of course, update you. In the meantime, we got some headlines this morning, and it had to do with the retail sector here in the United States. U.S. retail sales falling for a second straight month in May, suggesting some anxiety over tariffs and also finances, prompting maybe consumers to pull back a bit after an early year spending rush. U.S. retail sales, here's the data, 0.9% to the downside in the month of May. That's the largest decline since the start of the year, with 7 of 13 categories, Tim, posting declines.
We've got a trusted voice on retail, somebody who's analyzed this area through multiple cycles and gets into the details like no one else. The founder, CEO, and Chief Research Officer of Telsey Advisory Group, Dana Telsey, here in our Bloomberg Business Week studio. I want to start with the big picture data, Dana, the data that we got earlier today, the largest decline since the start of the year. Obviously, people not buying cars has a lot to do with this, but is it proof that tariffs do affect the way that customers think about buying things?
So a couple things you have. Yes, it was one of the weakest months. You look at cars, which were the real weak link. It's 20% of retail sales. You've seen some of the other data points, whether it's sporting goods, department stores, frankly, did a touch better. I think overall, the pull forward of sales, I think we're seeing some of that. We put out a tracker every Tuesday of 80 items and how the prices have changed. We've done this for 9 weeks now. We're going to continue to do it. We haven't seen much change in prices yet. Expectations are second half of July into back to school is when you'll see the price upticks. And when you speak to companies, it'll more be on some of the goods that are newer and have more product or make or embellishment in them. Essentials are going to be watched very carefully. The phrasing is surgical and select items where there are price increases. That's where it will happen. It won't be across everything. But the mood and the sentiment, look at the numbers you got Friday from the sentiment index. Those are better than expected. A little surprising, given the headwinds that you're seeing in some of the services. The restaurant numbers certainly continue to show a downturn.
So, yeah, so add it up for us. Like, you've seen cycles, you've seen stress points that we have gone through, whether, great financial crisis, COVID, like there's a lot of things. How would you describe the retail environment? And I know it's hard to throw everything in one bucket because there's so many different verticals.
I think right now it's more uncertain. The change that's different this retail environment than others, even luxury has come down. Even your high income spender isn't spending in the same magnitude, and you don't have the flood of tourists that have come to the United States like you had in the past to buy those discretionary items. You're still seeing essentials, grocery. That's where the consumer is spending. They'll spend selectively on some services, but take a look. We've seen airfares. Look at JetBlue today. Talk about reduced demand. So how I add it up is it feels a little bit more uncertain because of the volatility, and it's not complete downtrends across the board. It's very selective, and I think, could it come? Yes, I think it's more, let's go into the summer, through the second half of the summer, and see what these price increases are. But there's more concern over slowing than growing.
It's interesting that you brought in tourism here, especially when it comes to retail. I'm wondering on the other side of things. We've heard from executives at companies, including Coca-Cola, that the crackdown on immigration is actually affecting their sales. I'm wondering, from a retail environment, is the ICE crackdown on undocumented immigrants weighing on sales for any retailers out there at this point? People being afraid to shop, people afraid to go out, that sort of thing.
And you think about it for restaurants, in terms of the workers working in restaurants, you've certainly seen at some of the low-end points and the retailers. It's interesting that the dollar stores performed okay. So that's where you would think you would would show up, but it hasn't shown up there as much. And also you look at Walmart. Walmart's sales were better than expected.
So we are seeing, I hate to say trading down, it feels so like not nice, but I just feel like maybe just people are being smart, right?
Yeah.
Looking for the best bargain.
They are trading down. Look where Walmart has talked about their biggest growth coming from is their highest income consumer. You've seen it from others. Look at TJ Maxx on the off-price side. You've seen what they have, and they're an umbrella for pricing, so they'll always be lower than everyone else, and I think they're going to be a beneficiary as we go through the back half of the year.
When you and I spoke earlier this spring, you mentioned that we could be seeing some empty shelves later this year. Has that materialized in anything that you cover, and is that still a possibility?
It's a possibility. It hasn't materialized yet, because the goods that are on the shelves right now, there's still some of the lower cost goods. Ordering for holiday is happening right now, and it would show up, frankly, first when you get to the holiday season. But you know what? You have TJX buyers overseas in China right now looking to take over and take control of and acquire those canceled items. So go to the off-pricers.
Yeah, kind of fascinating. Well, and I just wonder, ultimately in terms of supply chains, right? We talk about so much of that because of the tariffs. Dana, when you think about, clothes and things like that, I mean, it's already been moving away from China, correct? Like, give me some perspective on where all of the stuff that we are wearing, where it really is manufactured.
So where things are coming from, yes, they've all looked to reduce their exposure to China. Vietnam has been very popular. Mexico, Cambodia, Brazil. Hard to come back into North America and the U.S. given the high labor costs. But it's been Mexico, it's been Vietnam, it's been Brazil and Cambodia that we hear goods are going towards.
How much is still made in China?
Depends on which type of retailer. Everyone is trying to get to single digits. No one wants to stick there at double digits.
Was that happening ahead of?
It's been happening since the last time we had tariffs. Everyone had accelerated it. Okay. But keep in mind, one of the beneficiaries of China, labor costs are compelling, and the make that they put into the product and the expertise is faster and better than others. As a longtime sourcing executive always tells me, there's no China like China.
Wow. Okay.
But it seems like, Dana, at least for President Trump, it doesn't matter if it's made in China or it's made in Vietnam. If it's not made in the U.S., it's going to be hit with a tariff.
Yes.
So how are retailers dealing with that?
They'll raise prices on some selective goods, and it's a third, a third, a third. A third, they'll diversify their sourcing. A third, they'll share the cost with the manufacturer. And a third, they'll raise prices on select goods to the end consumer.
When you say select goods, do you mean, obviously we can't put them all in the same bucket?
Higher price goods.
Higher price goods because the consumer has a higher willingness to pay.
And because it's new and different, it's something that isn't a basic.
Okay.
Which makes me wonder, which companies are going to see it hurt in terms of their balance sheets. On that, first quarter retail sales, right? We've seen all these numbers. So which names do you think stand out really as the biggest winners? Which are the biggest losers?
You look at Birkenstock with their closed-toed shoes. Very popular, still doing really well. I think that there's definitely some momentum there. You look at Tapestry with the Coach brand. They've been excelling. They've been able to get better prices on some of their goods. You look at Ralph Lauren, who's been expanding their purview in terms of the demographics that they appeal to, and it's been working for them. And then you still see the value players like the discounters and like the off-pricers continue to win.
Who doesn't do well?
We've seen some of the women's apparel retailers be slow, haven't been able to execute as well. It's definitely been more challenging. You just had the announcement yesterday of At Home filing for bankruptcy again.
Right.
But these empty boxes are being taken by a lot of the dollar stores and the off-price retailers. The off-prices are each opening 100 stores a year.
Dana, before we let you go, are retailers afraid to communicate to customers that prices are going up as a result of tariffs, given what we saw from the White House pushing back on Amazon and on Walmart?
Yes, I think you do have that, and I think that's why the phrasing and the wording select surgical price increases, and it's not across the board. Look at our price tracker every Tuesday, and you'll see what changes.
All right, so second half should be interesting.
Very interesting. Want to see that back to school time period. Back to school typically is a pathway to the upcoming holiday season. Look what it was just announced today, that Amazon's Prime Day is going to be 96 hours, 4 days, longer in length. Let's see consumer response.
All right, fascinating stuff. Always appreciate the deep dive. Thank you.
Thank you very much.
Dana Telsey, of course, she's the founder, CEO, and research officer of Telsey Advisory Group, joining us right here in studio.
Hey, let's go back to the Washington, D.C. and the White House, where we're following everything happening, not just from Washington, but also in the Middle East. This is President Trump was set to meet his national security team on Tuesday to discuss the escalating Middle Eastern conflict. We've got Bloomberg News White House reporter Akayla Gardner joining us from the White House. What do we know about this meeting, Akayla? Is it ongoing? Who's in it? What's going on?
So we understand that this meeting has started. It's a cabinet level meeting. It's supposed to be happening in the Situation Room as we speak. But we've seen really the president's rhetoric shift significantly over the past 24 hours since he's left the G7 in Canada to be back now in Washington at the White House. He initially was talking about still negotiating with Iran and telling them to reach a nuclear deal before it was too late. And today we saw him in a series of posts on Truth Social. We have not yet heard him speak publicly to reporters, say the Supreme Leader isn't hiding and calling him an easy target, although they won't be targeting him, at least for now, is what he said. He also says he hasn't directly reached out to Iran for peace talks, something that he seemed a lot more open to in recent days. It sounds like he is certainly getting more accustomed to sort of the Israel's rhetoric that they do not believe that Iran is negotiating in good faith when it comes to their nuclear program, even though Iran seems very eager to get back to the negotiating table.
Okay, just real quickly, just got about 30, 40 seconds here. The president did leave the G7 early, flew back last night, back in D.C. this morning. Was that expected? Was that because of this? I mean, do we have any more insight on that? Real quickly.
He's been very vague about exactly why he's coming back, but he said specifically it's not for peace talks. He says it's something much bigger, but what that something is still unclear. But they're certainly meeting right now to discuss the situation in the Middle East.
What's bigger than peace talks?
I think for a lot of people, it's the question of whether he will get into this war. And that's something that German chancellor has suggested that Trump possibly could decide today whether he will do.
All right, we're going to leave it there. And obviously, we're watching just as Akayla is. Akayla Gardner, Bloomberg News White House reporter there at the White House. All right, folks, continuing to look, too, at the trade today. We're continuing to hover around our worst levels of this session. So down just shy of 50 points on the S&P 500, down 0.8%, down 1 full percentage point on the NASDAQ 100. Good for a decline of about 218 points. Dow Jones Industrial Average, a loss of 324 points, down 0.75 percentage point.
Hey, coming up next, something we're watching very closely is maritime shipping and what exactly is going on when it comes to logistics and shipping, especially during a conflict such as this. That's our focus next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ very much in the red right now. Stocks very close to session lows, falling on concerns over escalating Middle East tensions and weak economic data. The S&P 500 index down now by 0.9%, trading below 6,059.79. Drop right now of 53 points. The Dow down 356, down 0.8%. NASDAQ Composite Index down by 1%. 10-year, 4.38%. The 2-year, 3.94%. Gold up $4.50 the ounce, $33.89, up 0.1%. And a surge for West Texas. Intermediate crude up 4.6%, $75.05 a barrel. JetBlue Airways plans to hasten cost reductions by eliminating some flights. JetBlue now down by 6.2%. And JP Morgan Chase hiking the annual fee on its popular Sapphire Reserve credit card to $795. JP Morgan Chase down 0.6%. Yesterday, American Express announced that it is making its largest investment ever in a refresh of its travel-focused Platinum cards. AXP American Express down 0.7%. Recapping, stocks lower, very close to session lows, with the S&P down 0.9%. I'm Charlie Pellett. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live here at Bloomberg headquarters. A lot going on, as you can see. Markets, as Charlie mentioned, they are just bouncing around their lows of the session. Now, earlier today, 2 giant ocean-going tankers collided and caught fire off the coast of the United Arab Emirates near the Strait of Hormuz energy choke point. Separately, 2 vessels were approached by Iranian boats near the strait in the last 36 hours, which is noteworthy, of course, during all of the tensions we are seeing in the region. Now, the incident did rattle global oil and shipping markets, with forward freight agreements rallying and oil tanker rates. They surged more than 50% due, Tim, to the increased tensions.
Yeah, the Israel-Iran conflict on the radar of the global shipping industry, and that's exactly where we want to go right now. Stamatis Tsantanis is chairman and CEO of the publicly held global shipping company Synergy Maritime. The ticker is SHIP. Also, United Maritime, USEA is the ticker. United was spun off from Synergy back in 2022. Stamatis, good to have you back in the Bloomberg Business Week studio here in New York. Last time you joined us was a few months ago. The conflict between Iran and Israel was, I think, not on anybody's radar at that point. What is the backdrop right now, given the regional conflict?
Well, thank you for having me once again. It's great to be here. Well, I mean, I don't know what to say. I mean, every other month you have a different situation coming up. We started with the Russian invasion to the Ukraine, and then we had the Red Sea, the Houthis, and now we have this. So, you know, every little uncertainty that comes up, it's great for...
Is it a little uncertainty, or is it something more significant?
It's, I want to be confident. I want to stay, like, very, very optimistic that nothing, you know, not a wider war is going to go around, but it's certainly, you know, one of the situations where we have to be really cautious about. You know?
Have you had to change the routes of any of your ships as a result of this conflict?
Absolutely. I mean, we were going through the Red Sea all the time, connecting, let's say, Australia to Europe and all that. Now we have to go around the Cape of Good Hope, so that has added a lot to the ton-mile effect. And, of course, the pollution, because you do more miles, you emit more CO2s. It's more expensive for the consumers. You go a longer distance. So the answer is yes. I mean, every little thing that happens, or bigger thing, it's good for rates, but bad for the earth, I guess.
Do you see it getting worse in the Strait of Hormuz anytime in the near future? I know you said you're optimistic, and you're optimistic by nature, but that's a real energy choke point, as Carol mentioned.
I want to believe that there's nothing serious is going to happen, and the collision you had today is not actually a product of war.
Correct.
It's the shadow fleet. You know, the shadow fleet has been going around since the Russian invasion, and you have all these undocumented and shadow ships going around, and there's like a danger. And it's only a miracle that we haven't seen more of these things happening because of the shadow fleet.
Forgive me.
Yeah, that's a product of the previous war, not like this war.
Well, how do you, as someone, right, who's got to watch these things so closely, determine, like, or think about, okay, this is not such a big issue, this could be something more substantial?
Well, we try to be prepared. I mean, except for the insurance and stuff, whenever we see like any conflict arising, we don't want to put a risk, a health risk of our crews, of our people, so we just stay out of that. And we are lucky to have partnered with some of the world's biggest charterers, and whenever we tell them that we want to avoid war areas, they listen to us. So they're not going to push us to go through the war areas.
What tools do you have on ships to prevent from pirate attacks or defend from pirate attacks?
I mean, if anyone says that they have sophisticated tools avoiding that, they're lying. Because, we just avoid these areas, and whenever we have to cross pirate areas, we always have armed guards on board the ships. Otherwise,
there's no other way to do it.
No other way to do it. I mean, whoever says that, these are commercial ships, slow-going commercial ships. It's
easy targets, in other words.
Easy targets, yes. Yeah. So you just avoid it altogether. That's
super big, but yeah, slow and move, right?
Super big, yes.
Hey, one thing I want to ask you, what's great is Tim and I love to watch money flows, right?
Yeah.
Money tells you so much, but I also love to watch when it comes to transportation. Transportation flows tells us a lot about what's going on in the world. The U.S. more protectionist policies, how has that impacted global dry bulk demand? What are you seeing in that regard?
Well, I'm sure it is for the right reason, eventually. But so far, it has created a lot of uncertainty. A lot of people are just don't know what to do. I mean, imports in the United States have really dropped significantly in the last few months because of the potential tariffs that I don't even know if they have kicked in or not kicked in already. So we need certainty, and we need to make sure that people will be able to trade always for the benefit of the U.S. consumer and always for the benefit of everybody. But it really has to be like a dependable and, to know what you expect. That's the thing.
But are things already changing in terms of your flows back to the United States? We have seen changes, right, already?
Indeed, yes. I mean, what we do, which is iron ore, coal, and bauxite, doesn't really change. It's still super strong, the demand for these raw materials, because you need it for infrastructure. As you know, a lot of investors, including a lot of people here in the government, have invested significantly in infrastructure in the Middle East. You have $1.6 trillion of investments happening there, new nice buildings and all that. So this is going to happen. They're all fully funded, and it's good for our business, I guess.
On the protectionist policies, I'm wondering what you're seeing in terms of goods flowing to and from China, and specifically if China is looking elsewhere for commodities that are typically sourced from the U.S. I mean, we could talk grains, we could talk corn, soybean, wheat, and the like, or we could talk other commodities too. What are you seeing?
Well, suddenly the last few weeks, we saw a surge in exports from the U.S. Gulf, the American Gulf. So we see a surge in
yes.
we see a surge
the Gulf
of
America.
Yes,
okay,
exactly.
Exactly. Well, I just wanted to hear what you said.
So we see a surge in corn products, maize, grains, and all that. So that has been good, actually. We were not expecting that, and we came into this.
But coming from the U.S. specifically?
Yes.
Okay.
And we do a lot of coal out of
And
Baltimore.
going where?
To India and in China as well. We see that picking up slowly.
But it did slow down.
It did slow down a lot, yeah. But now it's picking up again. I don't know if it's going to be there to stay, but for the time being, it's going quite well the last few weeks. Let's hope it's going to remain. And we do a lot of coal trades out of India Baltimore to India. So we've done a couple of trades recently, which we hadn't done for a while.
So in terms of any of the flows that have shifted, is it just, in your view, kind of defensive maneuvers and just a result of maybe short-term blips, and you think things are going to go back to the way it is? Or do you see some new long-term trade flows based on the shipping demand?
Well, China's reliance to the U.S. grains has dropped a lot. I mean, they learned their lesson in the previous administration, not the immediate previous, but the previous before that.
Yeah.
And they have now they're more dependent now in South American crops. So that's the crops. So that's the thing. If it ever gets back to importing more and more grain products from the U.S., I hope it does, but it doesn't really seem like that in the near future.
Before we let you go, just 30 seconds, I think right now there's a focus on where ships are built that hasn't been in focus really ever in my career, specifically Chinese-built ships. Are there any Chinese-built ships in your fleet?
In our fleet, out of the 29, we only have one, which is basically a Japanese yard based in China. So I don't know if that qualifies for Chinese altogether. But the vast majority is
made in China.
Yes, made in China, but not really by a Chinese yard. So, no Chinese interest. So I'm not concerned about us. The only good thing I need to say is we've been in discussions with the U.S. administration about that issue, and they're listening. They're positive and they're listening. They want to find a solution. So they're not like totally black or white. I mean, they want to find a solution.
Stamatis, love it when you join us.
Yeah.
Stamatis Tsantanis, Chairman and CEO of the publicly held global shipping company, Synergy.
Come back soon. Coming up next, Stocks on the Move. You're watching Bloomberg Business Week Daily.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, we're just coming up on about a little bit more than an hour to go until we wrap up the trade on this Tuesday, June 17th. Having said that, you've heard from our team, Charlie Pellet in particular. We continue to hover and bounce around our lows of the session, so down just shy of 1% on the S&P 500. And Tim, we are down 1% on the NASDAQ 100.
I'm Tim Stenevec, along with Carol Masser. Let's take a look at some stocks that are on the move today. With us is Bloomberg News Equities reporter Nora Melinda. Nora, no shortage of stocks to choose from today, especially on the downside. What's on your radar?
Right, many to choose from today, as you mentioned. I'm looking at JetBlue, that's ticker JBLU here. We're seeing shares of the company down as much as about 6.5%. I'm also seeing all of its peers, airlines down. That's looking at the index S15AIRL on the terminal. But we are seeing JetBlue shares falling after the company said that it'll be hastening cost cuts. It's going to be eliminating some of its underperforming flights and routes and plans to announce network changes in the coming weeks. Of course, we know this is a time where we're seeing a lot of shuffling happening right now in the broader airline industry. And we are also hearing the company saying that its path to profitability could take longer. So that's not great when we're thinking about this in the midst of all that's been going on in recent months here.
Yeah, we've seen really the whole airline group, right?
Right.
Under pressure as a result. It does make you wonder. I know that there's always specifics to each carrier, right? Not every carrier is the same, but nonetheless, some concerns there on that group. All right, where do you want to go next?
I want to look at solar stocks. That's something that's been on my eyes today. We are seeing this as some of the worst performing stocks in the S&P 500 right now. I'm looking at Enphase, that's ticker ENPH. It's the worst performing stock in the S&P 500 by a percentage basis. And this is after Senate Republicans released a bill that would end tax credits for wind and solar earlier than for other sources. And this, of course, prompted multiple downgrades, but we did see it from KeyBank in particular across the sector. So I'm also looking at companies like Solar Edge, that's SEDG, and then Sunrun, RUN. A lot of these companies really taking it to the chin today as we're digesting this.
We're not talking about like down 3 or 4%. We're talking 10 times that. Like Sunrun down 39%, Enphase down 24%, Solar Edge down 34%. This obviously a really big deal for the financial health of these companies.
Oh, most definitely. I mean, we're seeing analysts saying that the Senate bill failed to deliver optimism, and that's definitely ringing true across Wall Street right now as we're seeing all these stocks just plunging into the red pretty deeply.
Yeah, we know how these moves by Congress and various tax credits and so on and so forth, man, they've been so supportive of this industry and really helped kind of build it out, but certainly a different tone in a big way today. Let's go to something a little bit different, Surgery Partners.
Yes, this is a niche name I'm looking at here. That's Surgery Partners, ticker SGRY. We're seeing the company tumbling for double-digit losses. That's about 15% lower, and this is an ambulatory surgery clinic group. And we're seeing it after it rejected a takeover offer from Bain Capital. And this is interesting given the fact that its peer, AmSurg, it actually had a recent acquisition by Ascension Health for $3.9 billion. So we're seeing the street not really liking the fact of this rejection, but as I'm really parsing through different analyst notes, including our very own Bloomberg Intelligence, they are also saying that it's not necessarily a credit negative for the company. So very important to bear in mind here. But as I'm looking at the stock, down for its worst day since April of 2022 here.
SGRY, Surgery Partners down 12. Go ahead and round that up to 13%. Yesterday, not one stock in the red for our stock movers. Carol, today, every stock in the red.
I know, like a very different tone. I was just thinking about yesterday, I had so much to choose from in terms of putting together my own gamers list, and then today the tone. Well, listen, we are focused on what's going on in the Middle East. Question is where we go from here and whether or not the tensions escalate, right, and if it broadens out, and we are questioning where the U.S. is on all of this. Nora, thank you so much. Bloomberg News equities reporter Nora Melinda joining us. For more conversations, do be sure to check out our new Stock Movers podcast. 5-minute episodes on the biggest winners and losers in the stock market. You can find Stock Movers on Apple, Spotify, or anywhere you get your podcasts. All right, folks, we're getting ready to wrap up this hour of Bloomberg Business Week Daily. Having said that, as we mentioned, we're pretty much down across the board. We have more names in the S&P 500 that are lower in today's session. In fact, we've got about 420 to the downside, Tim, just 81 gaining ground right now at this moment, 2 unchanged.
Yeah, the markets certainly are focused. It's going to be a big theme of the next 2 hours on Bloomberg Bloomberg Businessweek Daily. I'm also not forgetting what's happening over in Canada. President Trump left last night. We have a live blog from the G7 Summit 2025 covering the G7 leaders meeting again today, this time without President Trump. Zelensky's in Canada to ask for aid and weapons. Ursula von der Leyen appears to step back from an oil price cap. And Mark Carney of Canada says support for Ukraine is, quote, unwavering.
All right, so that's what's coming out as we continue to monitor what's going on at the G7. Having said that, the 11 major industry groups in the S&P 500, there are 11, 10 are lower today. Healthcare at the bottom of that pack down about 1.7%. Energy, the lone group, actually showing some gains. It's up about 1.5% on the equity side of things. Take a look at WTI crude, and that explains the story. It is up another 4.7%, 75.18 a barrel. So we've seen once again crude oil spiking on those tensions between Israel and Iraq, and we're all watching very closely to see what happens next. If you are watching very closely, we hope that you are. We've got the close coming your way in just a moment on Bloomberg Television, though. Tim and I continuing right here on Bloomberg Business Week Daily. As we mentioned, we're going to dig into that two-day Fed meeting and so much more. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, Bloomberg Business Week Daily continuing here on radio and on YouTube and Bloomberg Originals. Carol Massar, Tim Stenovec. We've got stocks just bouncing off their lows of the session, but we have definitely seen much more of a risk-off trade, Tim.
Yeah, we're going to have more from Charlie Pellet in just a minute. Down 0.8% on the NASDAQ Composite and the S&P 500. Concerns over escalating Middle East tensions, weak economic data. We're going all in on the markets, but also, Carol, on the Federal Reserve.
We are indeed. Let's get to it and get a check on the trade. Charlie Pellet, take it away.
And here's what's going on ahead of Fed Day tomorrow. The Dow, the S&P, NASDAQ, all in the red right now. 59 minutes to go until that closing bell clangs on Wall Street. And right now, we're looking at an S&P that is below 6,000, 59.86. As you mentioned, off-session lows, but still down 46 points, a decline of 0.8%. Stocks are declining as Mideast tensions build. Keep it locked to Bloomberg Radio for the very latest, with the Dow down 311 now, down 0.7%. NASDAQ down 163, drop there of 0.8%. 10-year 4.38%, the 2-year 3.94%. Gold flat on the day, down $1.3383, a drop of under 0.1%. But a big surge for West Texas Intermediate crude, up 4.9% right now, 75.22 for a barrel of WTI. Bottom line here, stocks lower across the board ahead of the Federal Reserve. Alicia Levine is head of investment strategy at BNY Mellon Wealth Management.
So I think there's a lot of lack of conviction. What we saw was, retail coming in and buying the dip, because actually that has worked. For the last 5 times where the market has fallen 20% or more, going back to 2016, buying the dip was always the right move.
Alicia Levine of BNY Mellon Wealth Management interviewed this morning on surveillance. The Trump administration is discussing policies that would make it harder and more expensive for pharmaceutical companies to advertise directly to patients, in a move that could disrupt more than $10 billion in annual ad spending. AbbVie and Pfizer, particularly big spenders. AbbVie alone spent $2 billion on direct-to-consumer drug ads last year. AbbVie shares, they're down now by 2.75%. Pfizer shares down 1.4%. Recapping, S&P down 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. Well, President Trump is putting new spin on his months-long call for the Fed to lower rates. It's important, he says, for bringing down the cost of government debt. As we've mentioned many times before, President Trump argues that a 2 percentage point Fed rate cut, that would be
2%.
2%, so 200 basis points
It's
for
a
the
lot.
folks who
It's
like
a
to think
lot.
about this in basis
Yeah.
points. Could save $600 billion a year in interest costs, but Carol, economists warn that this would likely backfire and spark higher inflation, ultimately increasing interest rates. The Fed can only do so much.
Yeah, they can. All right. It's just one of the many things that could possibly come up at the presser tomorrow, the FOMC presser with Fed Chair Jay Powell right after that decision at 2 p.m. Wall Street time on interest rates. Let's get to the Fed, what we need to know, what we're focusing on, what Mike McKee is focusing on, because he'll be asking one of the questions to the Fed Chair. Mike is, of course, our Bloomberg News international economics and policy correspondent out there in our D.C. bureau. Mike, our Bloomberg economics team said, listen to the FOMC dots, not to Powell's words. Is it really that simple tomorrow?
Sort of. Where I would disagree a little bit with the folks at Bloomberg Economics is in how much any of it really matters. The Fed is in a very tough spot here because they have no idea what's going to happen because Donald Trump hasn't told us if he even knows. And so they can't make any decisions about what they're going to do, but they have to put out these new economic projections and a new dot plot. So the best thing to do is as little as possible, I would think. They sort of have to acknowledge reality and suggest that under what we know now, the tariffs that are already in place, that we're likely to see a little bit higher inflation, and that might cause a little bit more unemployment, and the two combined would slow the economy. So we'll get some adjustments to the SEP. And under those circumstances, then what do you do about the economy and interest rates? Right now, they were looking at 2 rate cuts, but they can probably say, all right, we'll just do one. We'll leave one in there, so we're not giving up on the idea, but we don't really know whether we mean that or not. And I think that's where Jay Powell will come in and try to explain that to people, because we could see the circumstances on which these projections are built change almost immediately.
Well, speaking of changing circumstances, Mike, our focus over the past hour has really been on what's happening between Iran and Israel and the question about the extent, if any, of U.S. involvement. And I'm wondering, as the Fed meets in Washington, if this is in their purview at all, if this is on their radar at all.
Only in a tangential sense. I was going to joke and say, well, we could ask Jay Powell what he's doing to solve the crisis, but
you might not get a clear answer.
Might not get a clear answer on that one. They will watch for what it means for the U.S. economy, and most likely that would come from oil prices. If oil prices shoot up and gasoline prices shoot up, it will have an impact on American spending, and eventually it could have an impact on inflation. The other issue would be, does it add to consumer angst about what's going on overall? We've seen that in other warlike situations, and then maybe they worry that people cut back on spending. And it is also possible, as we saw at the outbreak of the Russia-Ukraine war, that the idea that shipping lanes are interrupted, that sort of thing could raise prices. And so the Fed has to keep an eye on the impacts of all these things, but you're right, there's absolutely nothing they can do about it.
So, Mike, what are you thinking already about what you want to ask Jay Powell? I don't know if you
you don't want to give away the question, Carol. Like, we're not going to tell him. We don't want to blow up his
Mike,
spot. Like,
what don't you want to ask Jay Powell? What is it you think everybody else is going to go after that you're like, why bother?
I think if you were asking what question he'll get asked that he won't answer, it will be a question on his own future. He has said he will not resign, and the courts have basically given him license to stay till his term as chair is up in May of next year. But his term as governor would not be up, and so the question that will probably get posed is, if you're no longer chairman, will you stay on the board of governors, which would be a move basically to spite the president. And I suspect he is likely to say, that's not an issue right now, I'll deal with that when it comes up.
Well, because we have you and we're talking about the future, we might as well talk about who could be the next Fed chair. We did get reporting in recent days about who could succeed Jay Powell, and I'm wondering to what extent the market has reacted in the past to rumors, or we've seen the rates market sort of be in charge, the bond vigilantes, as they've been called, be in charge of who actually gets nominated for the Fed chair position?
Well, I think the bond market will have a say once we get a name, but until that point, there's little reason to try to actually change your investments because somebody's been mentioned for the job. The main criteria, and Scott Bessent has said this, and Kevin Warsh has said this, two of the leading contenders. Kevin Hassett has told me the same thing, that whoever is the next Fed chair is going to have credibility on Wall Street, or it's going to make the bond vigilantes will make it tough for the Fed. So the president has to keep that in mind, and some of the people he nominated in his first term would not get renominated to the Fed now that the markets have made clear that they care about this job. But remember, in his first term, Powell went ahead and chose, Trump went ahead and chose Jay Powell, and kept and didn't choose any kind of weird person.
So.
That's one way to put it, Mike. Thank you.
That's a technical term. Hey, so
economists use that term, Carol. Economists use a lot of terms that you know.
I know. But so wait, just quickly. So there's no lame duck Fed chair, right? I mean, he's Fed chair, can do whatever the heck he wants, and has. Or is there?
He is Fed chair. You have to remember, in the first instance, he can't do whatever he wants. It's the Open Market Committee is 19 people, and he has to have a majority. So,
but you know what I mean.
It's more a persuasive job than anything else. But what we could see is Adriana Kugler's Fed seat is up in January. And the president could appoint someone to that seat whom he intends to name as chair when they get to May. And in that case, you start to worry about whether you have two people who have the presumptive title of chair who are speaking at the same time, and which one do you pay attention to? And that's the shadow Fed idea. Scott Bessent liked that idea. I don't know if he still does, but it would certainly make life more difficult for people on Wall Street and much more difficult at 20th and C Street here.
Mike, just real quickly, 30 seconds. As we kicked off with you, President Trump once again out there saying that 2 percentage points of those Fed rate cuts could save $600 billion a year in interest costs. Economists warn that this would likely backfire and spark higher inflation, ultimately increasing interest rates. 30 seconds. Are economists right?
I think economists are right, and I might also note the Congressional Budget Office just released a report that said under dynamic scoring, the One Big Beautiful Bill will contribute an extra about $3 trillion to the deficit because interest rates will rise. So the president is going to have to raise that 200 basis points by quite a few to get interest rate costs down if they pass all this, and the CBO is right.
All right, gonna leave it there. Good stuff as always, so appreciate it. Michael McKee, Bloomberg News International Economics and Policy Correspondent. Felt wrong even just saying, could a Fed chair be a lame duck?
Yeah, well, we got the right answer from Mike McKee, as we always do. Stay tuned for tomorrow, and we'll hear Mike ask the Fed chair. We don't know what he's going to ask, but I think he's sharpening his pencils tonight. We're going to stay with news out of Washington, D.C., though, because the House-passed version of the Republicans' tax and spending bill would add $2.8 trillion to U.S. deficits over the next decade. This is according to new estimates from the Congressional Budget Office that incorporate the broader impact the legislation would have on the economy and federal budget. The CBO previously estimated the bill would add $2.4 trillion to deficits before accounting for so-called dynamic effects. Bloomberg's Shonali Basak sat down with Citadel's Ken Griffin in May to talk about the tax bill.
What's clear is that the numbers that we talk about in America are almost incomprehensible. Billions and trillions. I mean, it's just unbelievable how big government in Washington has become. And I think one of the areas the Trump administration is focused on is how to reduce the scale and scope of spending here in the United States, whether it's the efforts at DOGE or the debates that are happening right here, right now as we speak about, for example, Medicaid and the cost of Medicaid to the states. The Trump administration is really thinking about how do we help to solve our nation's spending problem? And then at the same time, they're grappling with what is the right tax policy that helps us to pay for the promises that we've made to the American people, and yet ignite the maximum amount of growth that we can achieve in our economy. Because when it's all said and done, the only way the United States will solve for the promise it's made to its people is for us to far more rapidly grow our economy.
What role is deregulation going to play in that?
Well, I mean, deregulation is clearly already one of the huge accomplishments of the Trump administration. And why do I say that? Because the onslaught of new regulation has stopped. That in and of itself has been incredibly powerful for corporate America, the ability to focus on growing your business again without worrying about what new rules can be imposed upon you from Washington. Now, having said that, the efforts to deregulate are going to be more slow because it takes time to re-underwrite why was the regulation put in place to start with? How does this regulation serve the interests of the American people? It takes time to thoughtfully deregulate our economy.
Now, your companies have a footprint all over the world. Are you seeing investors hedging against U.S. instability, diversifying away from U.S. stocks or even U.S. treasuries, given the changes and the uncertainties that still exist around them with the administration?
I think there's been two very strong realizations by investors around the world. First, there was a bit of a knee-jerk reaction to pull back from the United States, to be anxious about investing in America, given the stance and changing stance we took in areas like trade. But then there's also just a realization that no country in the world enjoys the rate of innovation and commercial development that we enjoy here in America. And so you have these two competing arguments that investors around the world are grappling with. Is the United States going to be a reliable ally and economic player in the world markets? And compare and contrast that with the reality that if you take a step back, no country in the world, other than perhaps China, comes anywhere close to America in terms of the rate of innovation and creative energy that goes into growing our economy.
That was hedge fund billionaire Ken Griffin in the premiere episode of Bullish with Sonali Basak. Sonali here in the studio with us. Sonali, Griffin of Citadel shared his views on President Trump, his alma mater, Harvard, his Florida homecoming. That was actually the theme for the episode, Wall Street South. My big takeaway is Haagen-Dazs ice cream.
It's my favorite part.
You know, he's just like us.
Yes, just like us, except the 30th richest man in the world, according to the Bloomberg billionaires. It's funny. We spent maybe 2.5 hours with them, and we did pick his brain on everything. I've covered him for years. The reason we went down there is because for some reason, in the course of making the show, I was down in Miami or West Palm maybe 4 times. Wow. And so clearly there was a lot of activity moving down there. He was kind of the unofficial mayor of Miami, in that he was putting so much money in the institutions around Miami, different schools, cancer research center, really becoming a bigger and bigger part of the community. And he says he's happiest there. I'm not a Miami person myself, I've decided, but he is really shaping the area, but also American politics in a lot of ways. Right. We heard what his view was on the tax bill, but also the thing I think that surprised me the most, in addition to how he takes off a stress load by eating Haagen-Dazs ice cream with vanilla fudge, apparently, just like us. To be fair to him, it was a very stressful day in the markets. It was very specifically the Monday where Trump was pulling back on tariffs, and he had told us that he was just holding cash. You might remember that. Yeah. Same day. So, but beyond that, you know, where else he's spending that money, where he's spending it on politics, I'm really watching out for where he's going to be giving, particularly as we head towards the midterm elections. You might have remembered way back before the most recent election, he was actually supporting Nikki Haley. And in the most recent...
That's right.
Yeah, he was not outright supporting Trump leading up to the election. And so his stamp on the Republican Party is significant. We've reported that hundreds of millions in 10 years he's given to the Republican Party, and he's talking more about the Democrats now, too.
I got to know what flavor Haagen-Dazs, real quick.
I know. Vanilla with hot fudge, I think is what he said, right?
Vanilla chip.
Vanilla chip. Yes, yes. I missed the chip. Yes.
I mean, I know you wrote the story, Sonali, but I'm the ice cream man,
so... related,
yeah.
This one never misses, never misses. Check out the extended Bullish interview with Ken Griffin, with Sonali Basak on Bloomberg.com. Tune into new Bullish episodes on Bloomberg TV Tuesdays at 6 p.m. So tonight. 6 p.m. Wall Street time. Shonali, thank you so much. All right, folks, you are listening and watching Bloomberg Business Week Daily.